And can everybody hear?
Yes.
Hi, good afternoon. And
see live 28. I'm going to happy and please like us. Is actually who are we? At heart, now we have we can do today. So for this some time back, so we to the commerce and mobile uh, may see how many of our new to us, even new to system, more control. Will or things uh, read the in the same businesses. By my have an Easter egg sharing session. This is experience that of super app. Supply hot item in the last data maybe I do use. I'm told very the questions in the WhatsApp group and then off. And so without further ado, pass and then leave okay myself and then the mic.
Hi, the COVID has changed lots of things. 2019, and this upside down. How the West Asia, at least, despite of actually unusual. Hello?
Hi.
Yes, I can. When you start active in a field,
So I in Singapore. Started my with Singtel Venture. Invest in India, invest globally. Consumer facing portfolio. That's
focus. I myself have been in South IDG Ventures Vietnam. It seems to that Yeah, this is we I started my venture capital in the bubble days back in YouTube. Yeah. And then I yes, what which I think okay.
Interrupt once in a while. Listen to hear. Yeah? Yeah. Okay. So you.
Duron VC. I'm based here in later and I started this fund into so we need to enterprise software in Southeast like e-com. Our average check size is we have done so.
Southeast Asia. We've made about investment. Okay. Actually, with this.
.com days. So there's no denial in a crisis. What do you see the separation of how people
I think one the that's and industry, which is a lead in that. So we cycle. So I think we are going to see a also we are uh, any the a strong in reposition. A lot of compatibility. 2018, 2019. I want
sounds very current.
This probably is not and startup ecosystem in Singapore. The .com days they as well. $1 billion. I think yes. What happened actually raise money and so successful raising local technologies. So I'll say there was. I think despite this
Much more, but in
system. 20 companies that
Wong Ping, you involved to see that.
regards to
Yes.
two thousand was pretty fast. No change of behavior. We are talking right. People are going out even after this COVID. Who have to read they want crisis. Companies those has been funded for the situation.
That Japanese, do you see this?
I think
Yeah.
or now like I think share well price to but now is growth. If you really look at the what I call it what kind of drop Asian worldwide as though yeah quantitative because of the reason I mentioned, the central banks are really pumping money really fast into the market, rather than waiting it out. So we are still seeing there is still the liquidity is still running into systems. But I think the catch-22 will be if this persists. If this continues to persist, then this structural issue will start to emerge, and God knows what will happen. But I think that's where the unpredictability of this pandemic, which is the most tricky part that I think the whole world is encountering.
Thank you. Dimitri, you were in Vietnam in 2008.
I was. It was fun. With respect to colleagues from Singapore ecosystem at the time, there were already things. I joined IDG Ventures. I think they were already at 30 startups, and it was fun to try to remind our potential follow-on investors from the United States and from Hong Kong and from Japan, where Southeast Asia even is. They all checked out and focused on their own affairs, which is what I believe started the integration of Southeast Asian startup ecosystem. This was the first time when I saw Vietnamese startups traveling to Jakarta to fundraise, guys from Thailand showing up in Singapore and saying, we actually have internet. So that was the Vietnam bit. Generally, on the difference between 2008 and now, and for that matter, 2000, 2001, I do not recall from the previous crisis any sense of optimism emerging from collapse of financial system or a bunch of over-leveraged investors going bankrupt. This time around, half the information flow is about terrible things that are happening outside, but I also see a strong undercurrent of optimism where people say, oh, look, half a dozen value chains where nothing happened for years because regulation was in the way, or city governments were in the way, or large retailers were in the way. Suddenly things that were supposed to take another couple of decades are happening within months. So a whole bunch of technology-enabled value chains are starting to transform faster than they possibly should. And on top of that, I'll just remark on one more thing, that right now we have a very interesting compound crisis. A pandemic and a hopefully short and very sharp shock it delivers, it overlaps on top of a much slower, longer, and therefore slightly less visible shock, which is the deflation of a slightly overinflated technology ecosystem of last few years. Private capital valuations not matching IPOs, mega funds failing. You remember all of this stuff from just a few months ago. Feels like a lifetime. So right now, this slow deflation that started middle of last year is combined with sharp external disruption. I don't recall anything like that in 2008. This is very interesting to observe.
Okay, can I say something?
Yep.
I think I agree with Dimitri. I think so if you look at a general macro perspective, it's obviously a bad situation. But if you look at VC investing and startup, we actually only care about certain micro things, right? Because startups thrive on disruption, right? So this COVID situation are actually creating certain winners. Like what Dimitri is saying, that is accelerating some of this adoption. So for example, you look at if you have investment in online gaming, online education, things that allow you to work from home, for example, logistics. I think there are going to be clear winners out of this pandemic. So I think what matters, if you look at it from a VC perspective, is whether you have selected companies that will benefit from this kind of disruption.
How do the rest see this perspective?
I mean, I think in every crisis there's going to be opportunities. So I think that's a given. I mean, if you really look at it, I mean, the 08-09 crisis, I think you saw a lot of startups that came out from the US, whether it's Airbnb, Uber, all came around that vintage year. I think in China, 08-09, I believe Meituan started in 2009. So yes, you're going to have opportunities. I think that is a given. I think what it's going to be painful for Southeast Asia is the withdrawal from capital market will be a lot more significant. So I think point in view, even in China, we will see capital leaving the market. So whether you are a VC fund that's funded by university endowments, all right, that's what happened in 08, 09. They would, start to evaluate who are the winners, who can we live with, who can we not live with. So there would be some trickle down effect from this, from the fund side, and the fund side from the LP side down to the GPs to the startups. So if you are a fund or if you are a startup who managed to raise a fund January the 15th in 2020, congratulations, you are in good shape. But if you are a fund or a startup planning to fundraise this year, then it is going to be a lot challenging. If nothing else, is that we are now stuck at our locality. We can't do due diligence. We can't do due diligence on startups. LPs can't do due diligence on us. So we don't see this thing unfreezing until maybe September of this year. So I think that's the reality. I think we're going to see at least a year and a half in the startup. There's going to be opportunities, yes, but there is going to be a shakeup. So what has happened in China, like guys like Luckin Cafe, or in Singapore, like King Hong, the oil broker, there is going to be, a disruption, or shall we say, the tide has left, and a lot of those guys start on the beaches. Unfortunately, they will not survive. At least that's my 2 cents.
Francis, from both LP and GP point of view, how do you see this viewpoint?
Sorry, can I know what's the question again? I think I missed that question earlier.
The question is that of course there are shakeups and there are also opportunities, but I think because people can't physically move, so lots of things are going to be delayed, and that will cause casualties. So LPs can't do due diligence on GPs. GP can't do due diligence of startups. I mean, how do you see this, and how do you see this end?
I think we need to look at things with a longer term perspective, gentlemen. At least from our side here, Sumitomo, we internally have been also, well, for sure, I think everyone of you is also doing the same thing. We are, there are a lot of internal discussions about, what is the long-term implications of the pandemic. I think like all crises in the past, I think, let's say, for example, the 08 crisis actually set the tone of what I call the political economic development for the next 10 years, well, which we have just gone through, okay? So we are basically evaluating that kind of scenarios for the next 10 years too. And we actually feel this pandemic is going to set a tone for the next decade or so. And, LPs and also GPs, we also invest for long term. So, having said this, pandemic is sort of historically unprecedented. From our latest evaluation standpoint, I think this pandemic will drive a lot of new innovations, especially in biotechnology as a result. The situation is actually similar to the technology innovation right after the Second World War. The Second World War, which is also the human tragedy in a global scale, actually drive the innovations. What we are seeing today, the IT innovations back in 80 years ago, computer, semiconductors, software is actually all started back in those really, really long old days, and it just persists until where we are now. So we are seeing similar situations. Not, of course, not exact analogy, but it will be a similar situations. We are seeing well, let's say, for example, I mean, I think it's getting very obvious that the worldwide we are seeing worldwide concerted effort in driving what I call the fast prototyping of vaccination. Which is whether it will come out, in 12 months or 18 months of time. But I mean, in terms of the pace they're trying to get at, or target trying to get at, is absolutely unprecedented. So we are, so that is, we are going to see some breakthrough in technology somehow. We are also going to see, some what I call the rekindle interest in the environmental and renewable energy or technology. We all know that there was a boom of environmental, renewable energy technology, things like that back in about a decade ago, but it didn't go anywhere. Okay, but I think the reason, I think the frequent talk about the global climate crisis, I think, which people also debate whether this pandemic is a result of this global climate crisis. I think that will also lead to what I call the rekindled interest in pushing this, or pushing technology along this front. Okay, so which means that this is also an opportunity for venture capital. So definitely, I agree. In terms of, there is a crisis, there are always opportunity, and but I think from an investor standpoint, because the panelists are all very seasoned investors, they've been going through all the up and down cycle the past 2 to 3 decades. I think the key principle is to find startups that can really weather, all this up and down cycle. It is tricky, but I think that's the key principle. And somehow, technology like this video conferencing stuff, I think this is not new to everybody. I mean, the video conferencing has been around, almost 20 or 30 years ago. And, what I sometimes coin is what I call recession-proof technology. It sells in good time. It also sells in bad time. So I think that is, I think it's an interesting piece of, it's not technology, but it's an interesting piece of, the idea that, that do have what I call the up and down cycle, that is sort of foolproof to up and down cycle. I believe there are also others something similar along the way.
Spread over investment over different vintage years. Now we're seeing funds that are investing in 18 months. They fully deploy the fund in 18 months and then fundraising. I think that happened in Southeast Asia and that happened in China. So that was a big warning sign for us. So I mean, for our portfolio, I think since 2018-19, we've been looking at more investments in companies that have the ability to generate cash flow. I think that's one. And two is that there is a financial business model for them. And if it's a business model that relies on significant capital to bring it up to the next level, these are companies. We are not too confident of those companies raising funds going forward.
Yankan, maybe I can jump in here. So I think, so from my perspective, it's actually easy to see, I think, the market going very bullish. But I think what's hard to predict when is that correction point. So obviously 2020 is triggered by this pandemic. But if you look at year 2000, when the .com was doing well, actually it's very difficult to call when things will start to change. And the trigger was actually first quarter of 2000 when Microsoft released a bad quarterly result. So I think a lot of times the correction is actually very hard to predict. But I think the more important point I want to sort of bring up here is it always bad that there is a correction, right? Because if you look at the VC industry, when times are good, the problem is there's so much liquidity, right? So I think Boon Peng mentioned. So usually these kind of .com, days, you actually get a lot of businesses that's funded that has no business model, right? Basically, it's just because there's so much money chasing things, right? So what the downturn typically does is actually you weed out the weaker competitors, right? So there's a certain function that the downturn brings to the table, right? It's actually trying to help you. So as an investor, you're trying to invest in the winner, right? But the downturn will actually help you select the winner, right? Because in a bullish situation, you have to fund so much because all these competitors are actually getting funding as well.
Yep. Dimitri, your sense?
Well, to the original question of how do we prepare portfolio companies, you would be surprised, I guess. We've started a project, The Winter is Coming, because we believe the world has just gone insane and all the valuations stopped making sense in the middle of 2015. I miscalled that one very badly. I remained very pessimistic about the market in 2016. Started tearing my hair out in 2017. Realized it's not possible to, let me rephrase it. The market can stay irrational longer than we can stay solvent or investing, and therefore came to a conclusion that it's not possible to prepare any particular company to an event that you cannot predict. Instead, you can just engage in proper portfolio construction. So we gave ourselves an internal rule. If we see a company without substance, but with a lot of momentum, great co-investors, lots of growth, fantastic team, hot space, unreasonable valuation, all this good stuff, but no business model, we'll do one of those out of 10 in our portfolio till further notice. And that's how we've been going so far. Now we can talk a little bit about, I'm sure it will come up in the next questions, as to how we prepare things after the crisis hits. But before, I agree with my colleagues, it's bloody impossible. If you ask me, the unreasonables in the market started all the way back in 2012. If you remember Kaufman Foundation's report, we've met the enemy and the enemy is us. That was 2012. I just looked it up just before unicorn era started. But that's for a separate topic.
Can you repeat the last part? I think I missed the last part.
Oh, the last part was about if you're trying to look for the roots of the currently deflating bubble, you can go even before Tokopedia grab, you can go even before SoftBank, you can go right to 2012 when Kaufman Foundation did a pretty substantial bit of research from the LP perspective called We've Met the Enemy and the Enemy is Us, which I think laid bare entirely all the flaws of what we now call VC ecosystem.
Interesting. Anyway, so I think what has happened has already happened, that we are all in this situation now. And in the market, you hear the headlines every day. So and so is laying off, and so is stopping operations, and etc. etc. So how would you advise people, and especially startup founders? I mean, beyond obvious things to conserve cash flow, etc., etc., to actually, stay on top of this, especially when we are not sure how this is going to end. I mean, especially for those ones who are not so lucky that they didn't raise money before the 15th of January.
Grab talent, whatever talent is falling out of competitors who are doing this very same thing. Even if you have almost nothing to pay them with, there is always equity, there is always ESOP plans, there is always core investors who understand what it's like for a startup to get a proper CEO on board or head of product. And the second thing I'll just lob in there for further discussion is fantastic opportunity to clean up your cap table. That angel that has been nagging you about 100x return for 10 years, that clumsy investor that is value adding to you from 16 time zones away, that uncle from a nearby village who wants 3x liquidation preference in the next round and special terms, buy them all out. They're willing to sell for cents on the dollar, and there is obviously value in every startup, so there will be a right price point for that. So let me just start with these two grenades, and then we can go right back to cutting costs.
Maybe I can join in next. I think for us, I think besides the cost cutting, what is interesting is actually, once again, I think this pandemic always have two sides, right? Because you'll create winners and losers. So I think for companies that have certain diversity in business model, we are seeing them switch to, for example, need to have kind of businesses. So I'll give you an example, right? So let's say one of our staff is actually doing apartment rental. What they see immediately is actually this drop in daily rentals, right? Because it's dependent on tourism, that business is gone, right? But they have shifted to monthly rental, right? Because it's a much more local business. People need to rent apartments. So that becomes more like a new business model for them. We've seen other guys that are doing online recruitment, they have switched to online education, for example, right? So I think, looking at your business model, figure out what is need to have versus nice to have is also very important during this period.
Just like to add on to Kim Mok's point, I think at the end of the day is really choosing the battles to fight. Right? So the advice I give to my portfolio is basically you cannot have the mindset of trying to conquer all different markets at one go with your limited resources. So it's really down to what is the best way to achieve success with the limited capital that we have, right? So if you need to cut a market that you have already invested, but it's still a bloody battle out there and you're still not clear winner, then you might have to relook into your strategy and then consolidate your leadership in markets that you're winning. In the couple of months before that, everyone's talking about growth at all costs. You need to be a regional player. You need to be in 4 or 5 markets at one go. You launch at one go, multiple markets, and burning tons of cash. But right now, it's not necessarily that right approach, right? You need to conserve cash. You need to go to a market that you have clear leadership, clear right to win. And then for those markets that have no chance, just take the humble pie and cut loss or divest. Right? So that's kind of one of the things that we focus on.
Anybody else? Okay, cool. My last question for the panel. This has been very interesting, by the way. My last question for the panel is how has your optimism about Southeast Asia or your pessimism in the case of Dimitri about Southeast Asia changed? And if this crisis persists until end of the year, and how do you predict the world in this region in, say, 2022? How would you see the region taking shape?
Called me out by name. I have to go first. All right. So the pessimism is slowly being replaced with cautious watchfulness. And I will go right back to the point I made a few minutes ago about how even the clumsiest, most conservative, most slow-moving entities in the region are paying attention now. Like retailers who were still thinking e-commerce is a fad as of December last year are now engaging AWS in massive purchases of new instances. And logistics companies about setting up deliveries. Not to mention governments of various cities that suddenly are rethinking how, let's say, e-bikes are being regulated. Moreover, there is a factor which has always been present in Southeast Asia since I started here. Just put yourselves in the shoes of a strategic or a significant investor, even if they're not strategic, from Norway, from, yes, Japan and Korea and the United States. If you have investors all over the world, in crisis, which region do you retreat from first? Guess. It's not Europe, it's not China, it's not India. Southeast Asia. So a lot of very strategic, very well-funded competition is retreating from the region as we speak, withdrawing their best people, not sending new budgets in. So even opportunities that were supposed to be completely locked for startups are suddenly open because really nobody in the headquarters on the other side of the globe is picking up the phone. They will not pick up the phone for another 6 months. So optimism is emerging.
I just want to add to Dimitri's point. I think prior to this, I think Southeast Asia tend to be in a situation where too many funds chasing very limited or very small pool of talent, right? And especially look at Indonesia. There's just so many hype about Indonesia being a big market, but this pandemic has exposed a lot of crack lines in Indonesia ecosystem. The so-called unicorns are being under stress. So I think going forward after this pandemic, I'm more optimistic because when there is crisis and when the weak are flushed out, those who survive will be very attractive investment.
Not only multinationals leaving, but also multinational VCs leaving that area. So it's starting to happen. Whether if you are a German corporate venture or whether you're a Japanese corporate venture, Southeast Asia is right down the list at the bottom. So it's nice to have. It's not a must-have. So if you're BCD, yeah, I think fundraising going forward is going to be a challenge. It's time for you to call your shareholders and see who is still around, who is still flush with money. And if you really need the money, really you should consider doing a flat round. In worst case scenario, do a down round. So I think valuations would drop. I agree with BP's comments. Valuations will drop, and I think the opportunities in the early stage and in the late stage. So if Traveloka is coming out fundraising at a markdown valuation, yeah, I think people will be interested. I mean, the business will still be there after the crisis. That business model is being affected by COVID virus, but it is a proven business model when this crisis is over. So there are businesses out there, tech companies who have proven business model, who has insane valuation. If this bring them back to norm, I think that's good opportunity, at least for both VCs and private equity.
Okay, maybe just let me share my, once again, Southeast Asian perspective. I think the optimism is always relative. So obviously I agree that, short term, there's all these fund flow and there's impact, right? But I think if you look at it long term, this disruption once again is useful, right? Because number one, on the supply side, I think a lot of countries realize that there's too much supply chain that's being concentrated in China. So you start to see a lot of, things move away from China. Look at Japan. Japan is trying to move things back. US, Europe. I think some of these supply chain will also move to Southeast Asia. So you look at Thailand, is already the hub for a lot of this automotive supply for the Japanese, right? So I do see that on the supply side, there'll be some reconfiguration after the pandemic. I think on the demand side, it could be interesting as well because a lot of government has to reopen. They have to think through how to jumpstart the economy when a lot of economy is not coordinated, right? So which economy is opening up? There's no coordination. So I think cross-border trade may be affected. So what a lot of countries will probably resolve to doing is actually they do have to invest in infrastructure. They do have to create the demand again, right? So I do see, new things that's coming up. So let's say if you look at a lot of this labor that's being exposed, in the hospitals, a lot of factory that's going to be built in advanced countries. I think there will be a lot of demand for this automated manufacturing. There'll be demand for robotics because why would you want to have a nurse go into a hospital in a very dangerous situation? You could send a robot, right? So from my perspective, taking a long-term view, there's going to be, interesting stuff coming out from the supply side, demand side that will benefit Southeast Asia.
Francis, I heard the Japanese corporate investors being mentioned twice in the last 5 minutes.
Yeah, I sort of echo K-Bob's comment earlier just now. I think the one mainstream investment thesis for the next 5 years or so as a result of this pandemic is going to be what I call the global restructuring of the supply chain. And that's exactly what Sumitomo Corporation is doing these days. We cover China and also Southeast Asia, so we know both sides of the world. I think this pandemic, actually echoing your earlier question just now regarding, what crisis that we will foresee in the next couple of years. I think one major crisis we foresee in the next couple of years or even in the next 5 years is one of geopolitical. Okay. I think, before this pandemic, I think every one of us is very much aware of this China trade war. I think what is not being able to foresee back in about a year ago was that this pandemic came to exacerbate the relationship between the West and China. So somehow this, we have been seeing this sort of deglobalization thesis has been around for some time, but somehow this pandemic sort of trigger or sort of worsen this situation a bit further. So now all of a sudden, we're seeing, lots of people really talk about it. We're seeing, especially the G7 leadership is talking about the acceleration of retreating their supply chain in China and getting back to the backyard. I mean, for very obvious reasons. And yet at the same time, we're not seeing China. We realize that China will not sit there, as a kind of sitting duck. And also we are seeing in Southeast Asia as a result, because of the geopolitical proximity to China, I mean, it would definitely benefit from just what I call the reconfiguration of global supply chain. Well, the Japanese has been, like Kmart pointed out earlier, the Japanese has been, working out their supply chain ecosystems into Southeast Asia. Actually, I don't know since when, but at least probably back in 40, 50 years ago, and South the Japanese always has a leadership in terms of the global supply chain or the regional supply chain in Southeast Asia. So, from what we see, or from what I can observe here, is they actually further reinforce their, their infrastructure here as a result. Okay. Meanwhile, for China, I think China, as I said, they are not a sitting duck. As I think some of us, already realized that, they are also accelerating their, they're doing this 5 or 10 years every time, this, technology initiative to push, technology initiative for what I call to develop the China next generation infrastructures, or infrastructure no longer in the traditional sense, but it's more about, the communication infrastructures, information infrastructures. We all know that. Okay. So this is all, so this, we'll keep on seeing this mass. Question is, if the situation, kind of what I call the hanging situation persists for China, then we have to make some judgment on how risky it would be from the country's standpoint. But at least so far, I mean, this is what I can see. I think this pandemic, as I said earlier, is really set, the tone for the whole global economy development for the next 5 years, which is very critical for all the venture capitalists and the LPs as well to decide what the investment thesis will be for the next 5 years.
Thank you very much, everyone. I think it's been a very, very interesting panel. And as Francis mentioned at the end, that it actually sets the tone for the next years to come. I hope that, one day, maybe in 3 to 5 years, we can sit down all together to look at, all what we have said or what we have predicted, and anything actually happens. But during the meantime, everyone, so I know you can't do due diligence or whatever, but stay safe at home, stay active, and I'm going to pass the mic back to Yolene. Thank you, everyone.
Okay, thank you, everybody. Whilst you guys have been talking, there was a bit of lag in the YouTube channel, so the recording will be sent to all the participants who are still online. And in the later part, it was actually quite good, and I'm getting some good comments from some of our WhatsApp channels saying that this was a very lively and interesting discussion. So thank you, everybody, for sharing your thoughts. Thank you.
Thank you.
So,
Thank you very much.
Thank
Bye
you.
now. Bye bye.
Yeah.
Everyone's good.
Okay.
Bye now. Bye bye. Bye bye.
Bye. Okay. So then, moving on, I would like to invite our second, fireside chat the moderator, Alfonso. Alfonso, our head of Insights and Momentum Works, to be the moderator. And I'd like to invite Jonathan, Yan-An, and Christopher to come on board. So, Alfonso, are you there?
Yes, I am here.
Awesome. Okay, awesome. I can hear you well, loud and clear. And how about Jonathan, Yan-An, and Christopher?
Hello. Hey guys, I'm here.
Hello. Yes.
Yeah, welcome, guys. Thank you for participating.
Okay, I'll pass the mic over to you, Alfonso.
Yeah, sure. Okay.
Okay, cool.
Well, thank you very much for participating in this webinar. I hope that this conversation, it is actually a conversation instead of just a questionnaire or something that is very boring for everyone. So after the conversation that Yan-An had before in the previous fireside chat, I think that we could just begin by introducing a bit of ourselves. Maybe what if you introduce yourself and maybe you tell us a bit of your experience and maybe a bit of the company that you work? Can we maybe begin with Christopher?
Sure. No, thanks, Alfonso. So super happy to be joining the panel today. Great to meet everyone. I am Chris, one of the co-founders of Yuxte here in Indonesia. And we are a tech-enabled brokerage for rentals, very similar to Ziru in China. And just to give you guys some background, here in Indo, access continues to be the most significant problem for the rental market. Traditional brokerages have simply not wanted to take mid-tier units or even serve the middle class. And it's mainly been out of efficiency reasons. So at Yuxte, we've created like an agent network that opens up the affordable supply. And behind that, we've built a CRM data engine that handles everything from lead generation, pricing, all the way to contracts and collections. So really these tools are available to our agents, and in turn, customers can coordinate basically their rental needs with them. We've been around now for a year and a half, backed by some awesome investors, such as Tangling, Insignia, and Y Combinator. A bit about myself. I've been in Southeast Asia for the last 6 years. I was previously at a VC firm in Singapore, but before that, my career was in the Bay Area. So was part of AdMob and Google back during the last crisis, building one of the first mobile ad networks, and then later was a part of Groupon Game Time, focused on consumer apps. So this is, of course, first time being a part of GMIC. I really appreciate the invite and looking forward to the conversation.
Yeah, thank you. Great. Maybe Jonathan, can you continue, please?
Yeah, sure. So my name is Jonathan Zhong. So I'm right now currently as a founding partner of ADM Capital. So ADM Capital is the first, VC as a Chinese background to only focus on Southeast Asia. So then myself actually stay Jakarta for almost 5 years. And before I was doing that, I was doing a live streaming startup called Nono Live. So we exited to the Douyu, which is the biggest live streaming company in China, at 2018. Before that, I was working in Alibaba as head country manager of UC Web in Indonesia. Yes. Glad to hear. Hope we'll join discussion later.
Okay, thank you. A very nice background, by the way. So now we can continue with maybe Yan-An, please.
Hi, very happy to join the conversation. So on Dean Capital, we started in 2018, and we founded the fund with my partner Randolph and I, and we actively seeking startups in Southeast Asia with the potential to actually integrate the local market insight with probably advanced technology, either grown locally or from China or US, because both my partner and I had most of our careers in China and US. Before I started the fund, I work at JD.com, and then have rotated to JD ID and JD Central, and also helped the Tiki transaction. So quite familiar with Southeast Asia potential. So I'm happy to join the conversation to see some interesting insight within it.
Okay, thank you very much. This was very useful. So I will begin like talking a bit about COVID-19. I suppose that this is like the main topic for everyone. So for your particular business, how do you think that this virus has impacted your business? And maybe after that, if you can share your thoughts about how has impacted the market, your market in general, you know. And maybe anyone can just begin sharing your experience.
Well, I think most of us actually gonna have a similar feeling, right? So this pandemic actually has a lot of negative impact for a lot of like offline business, face-to-face business, services. And I saw some of the retail they going to down 70% of their sales at the March in Indonesia. So, but it definitely is also a very strong stimulator for the pure online business. That's why we say that the online entertainment, online music, online even e-commerce actually it's picking up, not too much, but still picking up. So let's say if we say in the past, South Asia, most company actually is doing this offline online combined business model, right? Like Gojek, Grab. So they have a sort of like a business of link with the real world, and other parties are doing online. But at least this time we see that the pure online company is very limited in South Asia, like Garena. But according to this, I think this pandemic is going to give a positive impact on this kind of pure online companies. This is what we say for startup thing. But of course for the fundraising and we see definitely right now we saw everyone slowing down and very careful, mostly are focused on their own portfolios, right? This is what we see.
Right. Okay, thank you. Christopher?
Yeah, sure. I mean, the COVID situation has certainly been terrible health and economic wise. And, without question, Indonesia has been impacted, and particularly the real estate market, has been exposed. We've been seeing like constantly. Fortunately for us, we have not been materially impacted. Point. On the growth side, just given the lockdown and we are seeing a slowdown, but we are starting to see a change actually right now, and particularly this weekend. And specific to Indonesia, Mudik was canceled, and that's usually the mass exodus from Jakarta back to hometowns, and we see that potential tenants are realizing that this is a new reality. They have to stay, and so we're seeing an increase in terms of people looking for places to live. So in our case, our model has always been to provide Indonesian office workers long-term housing. So just given, modest salaries, it has always come down to pricing. And so, we're not in the business of refurbing or standardizing units. And generally we see added costs are actually bad for the end consumer. And so what this means in the COVID environment is that really for us, there just isn't better options out there. We are priced the most competitively. And in the meantime, in the overall markets, we're just seeing this rapid consolidation, right? Multinational companies are sort of leaving. A lot of the supply that was previously on their platforms are now coming onto the market right now. And so we're just seeing the market become a little bit more rational.
Yeah, that's interesting. Very interesting. And I think that it makes sense that everyone is taking things a bit more slowly. Yan An, maybe you can share your experience.
So, I think it's a very sad situation for the coronavirus thing. But then, for our fund, as we are not we're not fundraising right now. We have cash on hand, so it's actually good for us because we have the deal flow comes in exponentially. So we have many more deals to see compared to like this before this situation. But for startups and our portfolio companies, we actually think it's a very critical moment for them because most of the times, also from my experience when I running an e-commerce platform myself, it is always very difficult to change people's behavior, which all startup tries to do, and then acquire new users. But this force of coronavirus, force everyone to do something different, spend their time differently. So create a lot of opportunities for them to acquire new users, and then with this transition, be able to generate different models of behavior, which I think also could be very beneficial to Christopher's business.
Right. So Christopher was mentioning that some of the costs increased, but on the other hand, we have that Jen An is saying that there could be some interesting opportunities due to this new situation. Can you maybe expand a bit more what kind of opportunities you can actually find? We can actually think in very obvious ones, like, okay, obviously things like Netflix and online gaming is gonna increase, but how do we actually translate that into a profit? I don't know if you can actually help me a bit with this.
Sorry, who's that question for? Was it for me?
It's for everyone.
So maybe I can.
Yeah, you do first. Right.
Yeah, maybe we can jump in here. So I think of course the situation is really sad, right? But I think what we are also seeing with just the last few years of investments, et cetera, and strategies is that it's really been I would say race to the bottom tactics and subsidies, right? And so that has really just skewed unit economics, et cetera. So we actually see the correction in the market as being rational, right? And so, specifically on the supply side, right, owners are not, they can't rely on effectively like venture-backed cash to sort of meet their yield guarantees on their properties. And then on our side, it really is about optimizing our business, right, to be efficient. We are very adamant about being, contribution margin positive. And really it's really evaluating everything, right? So we see, downstream, aspects of our business that we can optimize, right? Vendors and vendor prices are decreasing right now. And that makes it, that's either cost that, we can reduce our sort of bottom line, or we can pass it, off to, our customers who are in need of, like lower priced,
Jonathan, you want to say something here?
Well, I think what I observe, I shared that if you look at the Google Play top grossing in Southeast Asian countries, you will understand actually it's quite different, like compared to half a year ago. So you will see that before all the people paying for the games, right? But right now, if you look at the Google Play, you will understand that the people are starting paying for the social media for the strangers. People are starting paying for the games. The novel books. People start paying for cartoon. People start paying for all these online entertainments. So that's why this actually is a change, met of the user behaviors, actually, format of user behaviors, what I saw. But and also that I saw some of the companies are trying to pivot the business to have a little bit cash to support their main business. Some of companies we saw that they're doing this 2C business. Right now they are moving to 2B. That means they can generate some of the cash to support them. But fundamentally, I think this is at least special moment. It's important to think about the fundamental of your business. Fundamental that is that business you are building is actually stable for longer period, like 10 years, 20 years. Any kind of problems gonna happen to hit you very badly. How do you balance yourself, right? So this, I think, is to give us opportunity to really think about the business fundamentals.
Yes, I agree with Jonathan. I think the change of this coronavirus changed people's behavior. So we can see that from the numbers, the time that people browse on YouTube is 10 times more before the coronavirus, and also the ad spending. So apparently there will be industry or type of business like online gaming, like online service, online education will be benefited from this situation. But more importantly, I think is that even if you are not online gaming or e-commerce, startups should try to use to like truly understand or to at least analyze how people's behavior change because of this very thing, to adjust your way of acquiring users using different content, different channels, and then more efficiently get users who normally wouldn't be interested in your platform or your business. That include maybe probably like giving different gift or brochure that people like normally do not have enough time to see in the ad. Now they are staying at home and they will spend time on that.
Right. Yeah. So I think that there are like 2 points that you mentioned that are very important. Like Christopher mentioned, like that you need to be more competitive. You need to be basically improve your services in order to survive. And also because right now, many of the online businesses are growing in terms of volume and also maybe in terms of value. So in order to be able to be on the top, you need to actually provide like a good service. You need to provide a good experience at the end. So I think that this is something that you actually mentioned here right now. Don't you think there is some kind of threat from other companies moving to the online businesses, and maybe they are going to begin competing with you at a certain point? For example, in the case of Christopher, this could be a bit more it could be a reality that will happen more sooner, because in the case of Jonathan and Jenan, you work in a very different kind of company. So Christopher, maybe this question is more related to you. Don't you feel, or don't you think there is some kind of threat of companies moving to compete with you in a near future?
Yeah, sure. So, we're seeing a few things. One is, I think even prior to the coronavirus situation, the real estate market here was already being hit. And we, of course, saw different models, et cetera. And I think, relating back to the previous panel discussion, we're seeing, multinational companies really decrease their presence here. However, that being said, what we're also seeing are things like, Airbnb switching into long-term rentals, right? Which is very much what we're doing. And so I think the thought process is that we're doing short-term rentals are actually making that switch right now. But that being said, one thing that we realized, because we did experiment with short-term rentals a while back, is that it's not something that you can just, snap your fingers and that will happen immediately, right? There's all these processes, et cetera, that need to be changed. And so, a lot of especially with rentals, given that it's a service-based industry, and it is this online to offline sort of experience, in particularly controlling your top of the funnel is the most important. So as I mentioned in the beginning of this panel, we have our agent network. And so what we typically see with existing sort of players is that they either rely on third-party brokerages or they get squeezed by OTAs, right, when it comes to short term. And so while I believe those shifts are happening, and I think, what we see just in the market is that everyone is trying to figure it out, we do think that we're well positioned to defend against it.
Jonathan and Jenan, do you think that the competition is changing the way that they're doing their businesses?
I think well, there will be probably new competitions, but I think startup who have already in, say, like online business or e-commerce shouldn't be worried too much about like a previous offline company and decided to, say, like start a new online department to compete with you, because like it's actually, if you are like, it echoes what Jonathan says. If your fundamental is good, your product is good, when people they spend more time online and see your product compared with the new product that provided by the offline company, and then it will only increase the competitive advantage if your product is better. Like people, like the feeling is stronger, you know. But at the same time, I think it would be very important for those previous online companies to find ways to actually expand sort of like horizontally to increase their competitive advantage. For example, say you are an online education company, you provide tutoring or you provide online course. And now that people like previously only spend like 10 minutes on your platform, and you definitely want to try to add more either content or channels or services, like because people now will spend more time on it. You can do it on your own, or you can probably try to work with other startups to do that. And that's how we are helping our portfolio companies doing right now. So collecting the users, collecting their resources to make the whole online experience more reachable. And I think once you build that, it will be a huge advantage for you to compete against those previous offline companies.
Right.
Okay, so I think I agree with Yan in a large extent. But there's also examples I actually want to mention here. For example, like Walmart actually is doing quite successful on the online setting right now, compared what they're doing 5-10 years ago, of course, in US. And if you look at then they can consider be a good competitor for online shopping, right? But in China, if you look at the online education, actually, some of the company like, Hawaii and that like New Oriental, Xindongfang, which is that originally start from offline, right? Then they then adopted the knowledge. They are merged as an online merge with offline OMO company. Then start to building their presence online, and they become very very strong competitors in online space as well. So I think this pandemic is, give us the opportunity to think about, if you're not, your competition before, we only think that is that the new startup, the online player is all competitor. But at this new age, I think, because, the people are going to moving for diversify themselves. Offline can be, they will try to diversify them. Online company try to also build their business models all offline, so in this case, give us idea. We should really, when we think about the competition landscape, we should also think about the whole verticals, like whatever their online, offline competitors. And in the future, we're going to meet each other because online company is going to offline, offline company is going to online. They can be all emerge, they can all convergence in some time frame. So if we're competing in the future, we're competing both online and online company, online, offline company at the same time. Are we still have a really good products? Are we still have a very good value proposition? Are we still have very high efficiency versus others? So that's why I think this gives us a new angle to look at the fundamental of the companies.
Yeah, that's great. And I think that this is particularly interesting in Southeast Asia, because in some cases you see that the smartphone penetration and the technology is increasing, internet penetration is increasing, but on the other hand, you have that there are many offline services that are not there yet. For example, we have that like in Indonesia, like less than 5% of the population have a credit card, for example. So in terms of that, how the online businesses are going to strive. So you have to be very careful actually when you are trying to position your business only online, because there are many things that may be missing in the offline channel too. So I think it's very interesting what you have you have been actually mentioning. So for Jonathan and also Yanan, you as venture capitalist or working in a venture capital firms, don't you think that it may be an opportunity to filter better the kind of company that you want to invest? Because in some cases, these companies may reveal what's the reality after the after the virus, because in this difficult situations, at the end, everyone is showing like their performance. So don't you think that this may be an opportunity to actually invest in a better way in these kind of companies, or maybe to change the way that we are actually measuring companies in order to determine their success? Go ahead.
Oh, yes. In fact, even though that we are receiving more deal flows right now, but I think our criteria is still the same, because all in all, we still think that coronavirus, well, it's very serious and could last for months, if not years. I think the fundamental how we evaluate a company is unchanged. What may change is that we are aware of this special situation, and we are more than willing to help companies that could like they are suffocating right now. They are actually in good shape. They are just lack of this one breath. Then we will be more flexible in terms of the speed of evaluation, in terms of the form of evaluating the company. So that's our side.
But I like your insistence in the fundamentals, because I think that those is actually what it really matters in a company. But I also wonder about why there are so many startups failing. And I think that in many cases it's because they are getting some kind of funding that they shouldn't have, because they are not being to do it successfully at the end. So maybe that question that I did, it was maybe related to that. Maybe to change a bit the way that we're actually doing things in order to make startups work better. And basically to do our businesses better, right? So I like the answer related to the fundamentals, because I think that everything should be there. And also we, in many cases, we talk about like having like a great team, but how do you measure that in terms of performance, right? You may have a great team, you may have a great technology, but if you don't know how to actually use it in order to generate some kind of useful output, it's going to be very difficult to measure the success of the company. But yeah, so now moving to a different point, what do you think, like from your point of view, is the most critical challenge that the online businesses are facing? Anyone can answer.
Yeah, sure. So, I think it's not particular to online business per se, but just being operationally efficient, right? And so, everyone, as you alluded to, is trying to draw out their runways right now, and to make sure that they can survive the situation. And it really comes down to the fundamentals here. And so that's the first point. I think the second part is, and I think generally speaking, is actually on the strategy side. It's really about going back to the drawing board. A lot of the trends, metrics, and insights that we're finely tuned, like pre-coronavirus, you have to make those adjustments accordingly, and that spans like all aspects from marketing to your internal processes to even like supply chain. And so I was at AdMob in 2008 during the last crisis, right? And so we were seeing a lot of brands test out mobile ad networks for the very first time, right? Trying to see how they could generate revenue or create brand awareness through mobile ad networks. And I think it's both. Of course, the fear is actually driving a lot of the current innovation, right? And I think the challenges is producing new innovations, right? On either in terms of content or in terms of business models, right? And so we also see like people trying to figure out like what the new equilibrium is, right? What this new normal is going to be. And of course, right now it's very extreme, right? In Indonesia, we have this lockdown, but of course, if it returns back to somewhat normal, I believe social distancing is still going to be in play. So how do you, especially if you're an offline business or have an offline component like us, right? How do you establish, one-on-one relationships or customer service without meeting in person, right? And so that could be everything from testing things like video viewings to, video checkouts, etc. So I think in general, it's just about, it's a multidimensional problem. There's a lot of things to optimize for. And sort of, it's going back to the drawing board.
Okay, thank you. Jonathan or Yanan, I don't know if you want to add anything else to that answer.
No from my side.
Okay. So, talking a bit about the changes in the consumer behavior, Jenan actually mentioned this about people changing their behavior, and actually basically consuming more online services like YouTube, more online gaming, and the numbers are going up. So, what do you think is going to happen once it has been, I think that it has been already established that the COVID-19 is not necessarily going to end soon. So, but what do you think is going to happen, maybe if things are actually improved? Do you think this consumer behavior is going to remain, or do you think it's going to go back as it was before?
Sure. I think, like your previous question, like how online business deal with this situation. So I think online is just an element to a business, like e-commerce definitely has a online element, but at the same time, it heavily relies on the offline supply chain, the logistics service. So for different companies, they will have like different, they need to deal with it differently. And there are definitely companies that like very, very, like they relies rather lightly on the offline element that I believe would thrive in this situation, like online gaming, like I think like HR service, like job recruiting, online job recruiting, which I think will also thrive because many companies like laying off people and they will find jobs later and then still keeping the social distance, and then online job recruiting would be something big. But I think for all the companies, including startups and the non-startups, what's really matters is that they need to analyze the data in this period of time differently and carefully, because startups, they acquiring new users in this period of time. It's not a normal situation, so they have to treat this data differently, and they have to retain them differently, like by different ways. They have to be very creative. So they have to be very, very agile. So like previously, maybe their marketing strategy or like user acquisition, user satisfactory program is one way, but now like dealing with this situation, they have to deal differently, and then treat the data differently, because some people will definitely stay, and then you have to give them new incentives to continue to use your service. And some people that you have to distinguish that they will never, like they will just use it temporarily, and you don't want to spend too much budget on them. And these new data are different from normal times, so they have to, like, I think, really deal with it.
Okay, thank you. Jonathan, you want to mention something?
Well, I think if you want to study on this one, I think we should look back to some of the things happened in last 10 years, right? So in China, there's a SARS, 2003. There's a financial crisis in South Asia, 2008, 2009. And, so I think, what you can, if we can recall that JD actually is getting huge growth when they start doing this SaaS, right? So when JDs used to be open offline shops, many. Then there's a SaaS time. Then they start to selling online, and it's getting like step by step what it looks like today. That Alibaba is same. Alibaba actually the company get the quarantine actually working at home because they have detected 1 or 2 employees got the SaaS. So they start to find a way to working at home. So that you look at that after the SaaS, actually the e-commerce penetration is getting much more faster compared to the before, right? Because once people realize that they can buy the same thing, lower cost, and also that much more efficient online, they never go back, right? So it's very difficult. So that's why I think this pandemic is a really good opportunity for
Yeah, don't worry. It's the new normal, right?
Yeah, so that's why I think after this crisis, I think that the e-commerce is going to be doing much more faster compared to used to be like 1 or 2% a year growth as a percentage of the total retail. That's something we can foresee, I think. Secondly, definitely is like online content and consumption is going to pick up stuff from now, because once they start to reading start to play games, and once they started doing this novel and the music, it's difficult to go back, right? So that's why I think we should focus on these things, that these trends that they are changing, but they're difficult. They were not coming back. So the important thing is that how we are going to, as a company, going to catch the opportunity, right? So that when this opportunity coming, how can we catch them and keep them stay with us after this pandemic?
Okay, thank you very much. I'm gonna do this question now that we have been talking about the new normal. So in terms of the online businesses, and maybe as we already clarified about the just general businesses, how do you think the new normal will look like for online businesses and just normal businesses, maybe from your perspective?
Yeah, so maybe I can add on here, and I think this is also kind of relating back to the previous question. And so, I think a lot of people in Indonesia have lost their jobs, and so what we're also seeing right now is that this sort of agent model is really working out, right? People are looking for independent work. And it's not just, like working from home, etc., right? And so, and in particular here in Indonesia, right, we're seeing government support for, re-education and redevelopment of the workforce. So, what I see is like, online businesses actually taking advantage of this, right? And creating apprenticeship sort of programs for people to learn how to sell, either, to make side money or to make it their full-time. So that's number one. Of course, the second thing is that we're seeing like communities move online. Recently participated on an online workout, right, with 200 plus people, 220 people, and that's in Indonesia. Oh. And so, I think more and more so, what we see with these communities is that it's working. People, when they have no other options, they're still able to be with, going to a gym, etc. And so a lot of things are going to happen at the home. And so I think online businesses are going to have to start taking advantage of that, right? Which is bringing the services to the home versus what we currently see right now.
That's interesting, very interesting. Moving things toward the home in an online form. Yenan, maybe you can add anything else?
So more people will use online service for sure. I think I've been emphasizing that repeatedly. So if people start to spend more time online shopping, watching videos, showing videos, and that will definitely change the whole supply chains affiliated to that. So, like more directly, I think we will probably see more sort of like expand from e-commerce to social e-commerce that we have already seen in China. And at the same time, China has probably because it's like the past few years about the artificial intelligence and technology, we can see that the new normal will definitely including like facial recognition, including like IoT things that are being deployed in all buildings and also within people's household. I don't think that will we will see the same in Southeast Asia that soon, but probably years later, the same concept will also grow in Southeast Asia as the two regions has such close relationship. And at the same time, I think people will also be like starting, because once that whole supply chain has been previously been evolved from like grow stronger, you will also see services that previously only like or majorly offline coming to online. Something like I would say ordering like business supplies like online, or having people going like deliveries like deliveries like a same day delivery or same like within hour deliveries that happening in Southeast Asia, which we also have seen that in China already. So I think near term, like people's life will actually I would say that a lot of business model or business innovation that we have already seen in China in the past 5 to 10 years, I'd say that they will play a stronger role in Southeast Asia, because Chinese internet company indeed is very good at, like using internet to provide all kind of service and like make people addicted to it. And then in terms of the IoT things or the artificial intelligence things, maybe, but I think maybe not that soon.
Right. Thank you. Jonathan, I basically asked for the guys what they believe is going to be the new normal for online businesses and also for non-online businesses. So maybe you can share a bit with us.
New normal. So
yeah,
I think what is the new normal? So it actually is come from usually in Chinese government they say right now we're going to middle speed of growth country. GDP per capita, then we're going to a new normal. So what did it say? I think the new normal, for, as I just said, is going to be merge, online offline merge. So they're going to online or going to offline going to online. It's a new normal. Second new normal is that when the company start doing the business, they should also consider not only the product benefit, also need to consider business model and very careful about the cash flow and working capital, right? So before, actually, a lot of companies, we understand that if they can find the product market fit, it's already very good. So they are sacrificing their business model and also the working capital, the healthiness of the working capital. So as today, maybe you need to consider all at same time, right? Building a sustainable, like a healthy, business for a longer terms. That's something is also going to be a new normal. I think as investors, when we look at the company, we were not only looking at the, how hot is the year, how fast they can grow. We also look at how long they can live, right? So that they are going to, how are they going to sustain if there's a, instant happen, how they are going to be resilience, so these kind of things we also look at. So I think there's something that we learn. We are keeping adding this kind of, things in, or, when we look at the startup, when we start look at the business. when the business try to expand them territories from online to offline, offline to online. I think this kind of things, it's what I think as a start point from now on.
Okay. Thank you very much. I don't have any more questions, but I'm very happy for having this conversation with you. I think that it was very interesting for me, and also I think that for the audience it was also very insightful. Right now, then we will continue to the next section. Basically, Jonathan, that he just shared some insight with us. He's gonna share a bit more about his perspective about the company and about what's going on. Okay, so I'll leave this to you, Jonathan. Thank you, guys, for participating with us.
Thank you.
Yeah, thank you.
Yeah, thanks so much.
Thank you, Alfonso. Thank you, guys. So Jonathan, can I just check
Yes.
with Yolin here? Just want to check with you. Do you have something to share?
Yes, I have a slide, so I'm going to play from my laptop, right?
Okay, so I'm going to stop sharing now, and then I'll let you share your screen. Okay?
Thank you very much.
Okay, no worries. Yeah. So whilst we're setting up the dynamics, okay. So over to you, Jonathan. Cool. Okay.
Can you see my screen right now?
I can see your screen. Yeah.
Okay, very good.
Yep, can see your screen. Go ahead.
Yeah. Okay. So today, actually, thank you for having me. Actually, I would like to share a little bit our understanding about the investment in South Asia and also about the COVID-19's impact for the region. So, so a little bit ourselves. We have three founding partners. Tony actually is working for Alibaba investment department before. Invest on Meituan and the UC Web when was in Alibaba. Jivis actually is the co-founder of the Oppo Indonesia business. Myself is actually previously working at Alibaba and also co-founded a live streaming company in start 2016 to end of 2018. And we all together start doing all fund at the end of 2018 and also only invest on South Asia. So far we invest on the one of the largest express company in South Asia called GMIC Express. So when we look at the South Asia, people always mention that is there another China like 5 to 10 years ago. Actually, I would share some of our observations in here. So if you look at the GDP per capita, some of the countries like Indonesia, maybe 2000 equal to 10 years ago versus China. Some of them actually more developed than China, like Singapore and Malaysia. Some is very, very, let's say, similar to China, and now Thailand. But Thailand actually, the GDP per capita is actually there are some of them low down, but low estimates. And if you look at the population is like 10 years younger than China. China is right now 13.7, 13.8 years old. So whole South Asia is like the middle age is about 13 years old. So you understand that South Asia is young, growing faster, 5 to 6% a year, and also that very, let's say, very quickly to digitalization. We compare it to the South Asia with China is like 2010. You understand that the internet population is somehow similar, and the total valuation of the whole big companies, which is very similar to the top three BAT in China back to 9 years ago. Sorry, 10 years ago. And you will see that the money actually is putting into South Asia is about 10 billion, 12 billion a year right now. But of course, definitely it's going to be a huge downtrend at today, this year, right? And if you look at the penetrations for e-commerce, OTA, and e-payment, you understand that China right now at least is 37% e-commerce in total retail. In Indonesia, you can about 3 to 4%, something like that. But you understand that the that's why we understand that the e-commerce maybe it's 10 years ago. Maybe if you compare the OTA, maybe it's 7 years ago. E-payments, maybe it's like 5 years ago. So you have to compare, and you understand the message. And we got Chinese companies, big companies, giants. They are expanding their business in South Asia, and whether they are backing some of the vertical leaders, or they are actually just joint venture, or they are doing by themselves, right? So you can see that the breakdowns, the TikTok actually has tens of millions, DAU in South Asia, and the Grab actually, and also the Tencent, Tencent actually, and they are investing in Gojek and Shopee, right? So you can see all of these giants there, aligned together. So maybe similar to China, at some points, some of startups have to choose side. If you this picture is borrowed from the Northridge Partners. So you can understand that this is different verticals versus the companies IPO in China in terms of timeline. If you go back to the South Asia, so you can see the green part is this company reached their unicorn status, and you understand that there's a huge opportunities doing this online domain, right? This is online healthy, that the online booking, social chats, online video, fintech, and the e-commerce logistics. So those are actually opportunities. Right now, we saw some companies in here around 100 million, even less, like social commerce right now just start, but we're expecting more and more, unicorns will be coming from this domain. Okay. And by not just copying China used to do before, and we also have a lot of localized innovation. If you look at we have a gold investment platforms, top journal or via the agency. We have this donation services only related with the religion, the Zaka donation. We also some of like a satellite to Wi-Fi box and to that mobile phone media services, which is never happened in China before. So that we understand that the entrepreneurs actually they're also doing their own innovations according to their each country's situation. But we should also look and understand that South Asia is a very complicated, different economic region. It's not entity. So the language, religions, and the infrastructure, and also the people's behavior are very different, each country. So one of the things we learned is that you should not trust in the data, actually, whatever you get from internet. You have to go in to see and try understand by yourself. Just for instance, that if you see the Vietnam, okay, the GDP per capita is about $2,600. Indonesia, which is about $4,000. But if you really asking the people, after they graduate from university, after they start doing their first job after high school, so you understand that in Ho Chi Minh City, the people's disposable income is higher than Indonesia's Jakarta. So you understand that in some way that Vietnamese GDP per capita actually is underestimated. Or you can say that Indonesia has a lot of rich people, which is mainly Indonesia Chinese. They are inflate the GDP. So and then that's why you have to really to interview the local people to understand how they live their lives, right? And also in South Asia actually is it's not a lot of countries, a lot of services you only can do in big cities, right? So that then you should consider that South Asia is not the 10, 11 countries, but maybe like 10, 20 big cities, which is giving them much more higher disposable income and level of education, which they can enjoy your services. But let's also represented there's huge opportunities. Who can crack the lower tier cities in that country can have a huge market, which is nobody right now can penetrate, right? So secondly is that the internet development logic is very different versus like in China. So in China, that we first develop our e-commerce, then we're coming up with our e-payment system, then red hailing, right? And that's it. So, but South Asia is different. South Asia is like everything happened at the same time. So the red hailing happening at the same time is e-commerce. The e-commerce and the payments also happen at the same time. So you understand that who actually has more promising to do the wallet payment, it's the red hailing, it's not e-commerce company, right? Which is a very different pattern if you compare China. Second is that we understand that because of a lack of infrastructure, some of penetrations and the development, we are not as fast as India and China, right? Because there was India actually doing a lot of innovations on like UPI, and the government is like a cash ban to speed up, whether intentionally or not, to digitalization process. And there's also Geo actually bring a huge online people to the market, which is very unbelievable if it's going to happen in South Asia. And also that we see that that's very important that I think in doing South Asia is most importantly that it's not important if you are online company or if you are a startup innovation company. The most important is that can you do a successful meaningful business in the long term? You can lose money, you can have your a trade-off at the beginning, but in the long term you must be really making a positive cash flow and beta. So what we observe that if you're doing this e-commerce companies in doing online, you lose money, right? You do brand, you are doing the vertical. But if you're doing offline, the UE is very positive. You make money if you're not really doing bad. So one of the things we think that it could be you start from offline, but having the technology, having the talents, and also the ideas in your mind, that one day you're going to do online, then it's possible you build up like offline to online company, right? Which is both strong on both domain, which is a very very different as China 2 or 3 years ago. But right now, more and more people agree that all the business should be like end of day same online offline both available. And we see that and we also want to change that we understand that before we doing this company, we saw that something so internet plus something, right? So that we have the internet, we have a technology plus some business, whether it's education or that's grocery. That's one business model. But I think there's a possibility is that those players after this pandemic, they realize that they also can make money. They also can grow the business in online. So let's start to invest on technology. They are investing on their the online infrastructure. Try to build a business in both domain. And those people, we call it the industry plus internet, right? So this kind of business model, we think that maybe we're gonna happen in a few months and a few years in the future. And third thing we think that in South Asia is very different versus China is that we saw different nationality and the background founders, Chinese from mainland, India, from the Singapore or from India, and also Western entrepreneurs. They all play important roles in the whole ecosystem. To fill the gap of the lack of enough talent in the entrepreneur domain. So we think that that's a pattern we can look at them. Firstly, that this kind of founders we invest also over them, right? By the way, and we think that different backgrounds has a different minus and plus, right? So first we think that the team should have experiences. They have been doing similar business in the region before, understand the dynamic of the market. Second is that they should have a stable team which is believing in each other. If it's a tough time, people are can still stick together. Second, determination. Are they really willing to move into the market? Stay in the local country. Understand the dynamics. and also that the founders should have a comparable advantages, right? How they understanding about their products. For instance, that the India founders usually they can more easier to sourcing their technology platforms, developers and also the CTOs versus Indonesia founders, right? So that's why if there's something like a more heavily on technology, AI or SaaS, maybe India founders could have some of the advantages at the beginning. Chinese founders usually can leverage the supply chain in China. As a combination of the local co-founders to doing some like supply chain, e-commerce business, and Western founders actually are more familiar with how to do SEO and also that acquisition from Google and Facebook, and also very good at the financial services. So that's why we have to we can look at all different teams and to define what kind of let's say strategic advantage they have on each kind of a different type of the business models. So after we talk about the let's say investment in Southeast Asia, and we also want to share a little bit about our opinion about the COVID-19. So if we look at the COVID-19, actually it started from China, the Wuhan, it should be December, right? November, December last year, and the first cases has been reported in US is the end of the January. Italy is also end of January, as well as other in Southeast Asia countries end of January. But you can understand that in Indonesia, actually, it's the first one announced at March, right? So actually, that's a month and a half differences. And if you look at the mortality rate in Indonesia, it's about almost 9%, and they are totally infected ratio inside the whole tested people. It's about 18%, almost 18%. Which is giving us very, understanding that the testing is not really in places, and the government seems like trying to, push back, slow down how was looks like on the paper. So that's why why we should care about this one. It's showing that the governance of the country, and also that showing us that if we understand that China right now is resumed to the normal working schedule, maybe at May or June as a max, and I guess that the US is coming back to work maybe at August, but Indonesia, as President Jokowi says, maybe it's going to end of the year. So that's why we should be very careful that if you really prepare your own way, I should understand that at least you need to prepare for 12 months to 18 months to be in the safe side, right? If you're in Indonesia, happen. So that's what giving us a sign. And also surprisingly that the two countries are doing very good. One is Vietnam and another is Singapore, right? The Singapore is doing very good because that the mortality rate is very low. So the infrastructure is good. But the Vietnam is also surprisingly doing very good. They control very early decision, and the government has a very strong execution, right? Also almost lockdown, like not like China, but it's also very strict in the region. So we understand that if the Vietnam government try to do something, they also can do it, very faster and in a very efficient way. Okay. So what do we learn from our observation from the COVID outbreak? So if we look at of course, a lot of industry is getting huge impact, right? Retail, travel, hospitality, restaurants, and those we already know that. But what they do, right? And so we understand that for a lot of industries trying to find their own way to coping with challenge. For example, like Informa is a furniture offline chain company in here. They are doing this live streaming shopping. They'll actually give you a private video call with their salespeople. So they help you to tooling with their gallery and choose the furniture for you. Actually, it's more it's a very interesting experiences. And also you can see that, Indonesia also you can doing this gasoline delivery online. So you can order gasolines, to your home. You don't need to go into the gas station, right? So every industry try to find their own way to deliver services. Definitely, we saw a lot of growth from this. Everyone we should know that education of online offices, online healthcare, gaming, and e-commerce platforms. Right? We have, I think, everyone share our same understanding. But what I want to mention that I think e-commerce is going to right now. What we see e-commerce in Indonesia is still with a small picking up. Right? So some of the big sellers, their volume is getting down because they are cannot getting enough supply right now before the pandemic. But we saw the overall, the volume actually is picking up. So what I think that after this pandemic, more and more people get educated for how convenient if you can shopping online, then they were more and more highly possibility they were going to be shopping more online in the future. I think it's a very good, stimulator for the e-commerce business in Indonesia. So when we talk about the impact on the investment side as a VC, I think we saw a lot of US dollar LP and also VC are very cautious. We also some of the term sheet has been issued, but they want to be postponed or they are withdrawn to their original countries. So which is a very unfortunately we're seeing. Secondly, is that we saw that most of VCs are focused on their portfolios rather than doing new deals. And some of the money is going to this bargaining hunting in South Asia, which we can find some of the good price, flat wrong, but the good fundamental business. We are also doing such right now, trying to understand which one is going to have a bounce back when things are let's say getting better. But what we are feeling that mostly agree that South Asia or bounce back will be like a U shape. It's not going to be V shape bounce back. Looks like US stock market as today. And we understand that some of the money, which is later stage, they actually are flow like a family offices and just kind of follower investors, LPs. They are investing to the US in secondary market, which is trying to catch up at the momentum. And but we understand that there might be another 2 or 3 waves is going to adjustment, and also the shock wave is going to coming in the future, right? So when all these US company, when all these big companies to revert their financial reports, so that's why I think we should be very, very cautious still from now on to the end of this year. So who will get funding, right? Because definitely as some of the companies still fundraise if they are really in need of money. I think some of the companies, when we look at firstly they are the market leader. Secondly, that if the market is going to bounce back, they're going to the first one to acquire the market share. They are the first one to enlarge their leadership versus their competitors, right? And second is that this company is not really burn too much money on their marketing side, on their subsidizing side, right? They burn money on their technology platforms, products, and a few people. That actually is much more healthy. So I think this kind of company is very good advantage when they're going to raise money, close before the pandemic. For the long-term impact, I think that the beneficial industry we already talk about, right? Some of the positive benefits will be never come back, right? Education, e-commerce, and also I think the online gaming entertainment. They were doing much more faster, maybe 1 or 2 years ahead of their original schedule. For some of the only lose travel, right? And some of the industry we saw is going to be goes ridiculous. The OJK announced that there's a 900 million USD non-perform loan right now currently on the market, and it's going to be expecting even more in the next few months. So who actually can go through this crisis, and who actually can really control the risk. That's can prove in a really good team, right? I think for long-term opportunities, that I think we can invest on the some industries, especially actually the consumer behavior pattern started changing because of this pandemic and working at home state approach. How to some of the traditional business, or let's say offline business, which is extending their online branches, or really trying to digitalization their operations, which maybe also opportunities for the investors, right? So overall, as a summary, I think our key takeaway is that we think that South Asia is still the most compelling and promising digital investment destinations after China and India. But still, there's a risk in here, because the region is highly connected, to the world. And whether there's a flu or there's earthquake, we will get a feeling in here. But historically, that the most countries demonstrate the ability to recover very quickly, which is a good sign for us. And so that's why when we start doing, I think still we're still investing at this special period, but we should keep eye on the history and global economic development. COVID-19 recovery time, especially US and China, to understand how fast South Asia is going to recover from the future, right? And also for the investors, actually, we were going to be more look at the working capital management, ability to earn the free cash, and just kind of more in the future. And I want to share with all the audience today, and hope to, if you want to discuss anything, it's my contact, the email chat, so you can reach me out there. Okay, Yuling, I think my presentation is finished. Hello.
Thank you, Jonathan. I think Yuling is on a call at the moment, but let me just introduce the next session. We're talking about, big businesses, super apps, unicorns, big companies, how they are responding to the crisis. And to moderate the session, we have Alex, who is ER with Momentum Works at the moment, and he's based in Kuala Lumpur. Alex, over to you.
Hey guys, thank you for all of us joining and for all the panelists before us. I think we had a very good start, a lot of complementary discussions to, what we're going to be discussing now. I guess first off, what we could do is, introduce our panelists. Maybe each of you guys can give a brief introduction to yourself and your background, and maybe how some of your experiences might have related to maybe big companies or super apps. Maybe Jonathan can go first. John can go first.
Hey, Alex, sure. Let me just switch the video on. Hang on a sec. So,
no problem.
Hi, everybody. I'm John Russell. I'm Southeast Asia editor for The Ken. Hopefully you've heard of The Ken, but you might not have done. We're quite a new startup name in Southeast Asia. We're a subscription-based media company that publishes one story every day. We have a team of 5 people across Southeast Asia. I'm personally here in Thailand, but we're across Singapore, Malaysia, Indonesia, and Philippines also. Before this, I was with TechCrunch for 5 years, so I am coming at it from the media side of the angle, basically.
Okay, Professor Chan.
Hi, Alex. Thanks for your invitation and thanks for moderating the sessions. So I am a professor. My name is Guoli Chen. I'm a professor of the strategy at INSEAD. So my research is related to competitive strategy, innovation strategy, platform strategy, which is related to the super app, or sometimes we call it the ecosystem. And also I'm very interested and do the research on Chinese companies and how do they go overseas in Southeast Asia, and also how multinational companies get into China. So that is my research and teaching interest. Thanks.
Okay, thank you. And Satyawan or Wawan?
Hi, everyone.
Yeah.
Sorry. Okay. Thanks, Alex, for moderating the sessions. My name is Setyawan, and right now I'm doing the fintech advisor in several startup companies. But previously, I was a director in OVO, handling the government relation and also risk management. And before that, I handled the risk management as well and compliance in Gojek. I think that should be enough for the quick introductory. Back to you, Alex.
Okay, great. So I think as everyone can see here, we have a great mix of panelists, one from the media coverage, so hopefully has a lot of details from researching and talking to sources, one from an academic perspective of actual strategy, which I hope we can get into later, and then actual insider information from, two very large companies. We'd love to hear the insights and contrast against, academic versus insider from one from internally and what they're heard. But before we move forward, I'm not going to assume everyone has the same understanding of what a super app or a unicorn or big company is. So I guess maybe we can go into, from your different perspectives, what would you guys consider? What is a super app? What's the general definition? Maybe John, you could start.
I'm quite cynical about this because super app has become a really big term that everybody's doing, right? So anybody that's got any app that does, two or more things is a super app, right? But I think in terms of this conversation, it pretty much boils down to ride-hailing apps, right? So guys that are offering from obviously like Uber style taxi services to sort of fintech services, food, anything else that's on demand. So I personally don't really like the super app phrase because I think it probably is valid in some cases, but it's overused by a bunch of companies who try and sort of play up what they're up to, I think.
Okay. Maybe Professor Chen, would you agree with his definition, or is it maybe a little bit more broader?
So from the academic side, okay, so overall, this is the question about the business model, right? So historically, most of the traditional business, what we call it, is the vertical line of business, right? So for instance, if we want to manufacture this like cell phone, we have clear who is the supplier, who is the customers, and how can we get the materials we needed for the manufacturing process, and do this magic process and then sell our products to the downstream customers. So this is traditionally, we just call this the vertical line of business. And then the focus is, of course, to try how can we create value for the customers and how can we reduce the cost structure and then maybe push the pressure to the suppliers so then the focal firms can get the profits. So this is the traditional one. And then because of the digitalization, especially for these years, and then we see lots of like business model, we would call it the platform business. Platform type of business is different from the vertical line. It's like literally, it just create the platform. There are some buyers, there are some services providers, right? So for instance, like the earlier version of like Uber, right? We have the passengers who need the services. We have the private car drivers. So the platform itself, like Uber, just bring the potential supply and potential demand. So overall, it's just a platform, and I try to facilitate the transaction of the users in that platform. And then to me, I think super app it's a cumulative of the multiple platform in one mega platform, if we want to put the definition for what is the super app, or sometimes academically we just call the ecosystem. We do not use a super app. I mean, super app is much more appealing for the readers of the media or the public domain. People talk about super apps. It's much more sexy, and perhaps it's much more appealing when you talk with the potential investors. But for us, I think it's more about the ecosystem, right? So if we use the more stringent definition of like ecosystem or super app, I mean, some of the cases of companies that you mentioned, like Uber, I'm not pretty sure this is the super app, or like including or Didi in China. Again, I don't think it's a good illustration of that is a super app. So the super app, I think some of the examples, which I think is much more closer to the definition that I think is the ecosystem, which includes, like in China, for instance, like a WeChat, right? And or Alipay, right? So like WeChat, we can see there's a lot of services that the users can approach by using one single app. So the app itself facilitate a whole bunch of different parties and entities, provides all kinds of services in one single platform. So if we use that definition, actually not many companies or not many apps could be considered as a super app. Actually, it's very limited rather than the common concept of when you talk about like Airbnb or talk about Didi, many others. Actually, it's not the super app. So that is the way I think about the super app.
Okay. Well, would you like to? Yeah. Sorry. Go ahead.
Yeah, I would totally agree with both John and Mr. Chen, because many people right now are talking about super apps. Well, practically what they do is they combine several use cases in their application, but then easily they mention it as a super app. However, the way I personally see super app is that it creates an ecosystem that a lot of use cases around that ecosystem can be used inside it. For example, like Gojek. Gojek, Grab, probably in Indonesia, there's a Tokopedia and some other application as well that has multiple use cases, starting from the ride-hailing, logistics, and then go into the food deliveries, and then a lot more in that, even including the payment system itself. So a lot of players want to merge all of these use cases into a platform, an ecosystem, rather than creating separate application. For me, that's how I see a super app, where we can combine everything into one place. However, again, like Professor Chen mentioned, is that this super apps is actually created as a platform. So it hosted multiple platform inside it, multiple application perhaps, and it will serve as different purposes for each of them. That's the way I see it.
Okay, great. Yeah, so I think that we hit on some good ideas, and I could tell that I think everyone generally agrees. Maybe for John, from his perspective, it's from a Southeast Asia perspective, where ride hail tends to be a super app, like Grab or Gojek. And I guess that begs the question, though, is this really a new phenomena? Is it really just a media-driven kind of thing? Has super apps existed before in the past, or is it just really this kind of coming together of mobile and this new technology coming together, where it's kind of this new age thing? Maybe do super apps also exist in the West, or is it also just a Southeast Asia thing? So, what do you guys think?
I'm not convinced they exist here, actually, to be honest with you. I'm a little bit skeptical. I mean, it's the pipe dream, right? I mean, everybody wants to have an app, as the professor said, like a WeChat style app, where that is the internet for a user, right? Where most of the activities that they're doing on a daily basis are kept inside your app, right? That's the pipe dream. But I think it's exceptionally hard to do. And I mean, personally, I haven't seen an example of that happening in Southeast Asia yet. That's not to say that, I mean, I think a lot of the fundraising and the valuations and the big numbers that we see are in anticipation of that happening at some point, whether it's like Gojek in Indonesia or whether it's Grab. But to be positive about it, right? Because I want to be positive and not negative. It hasn't happened yet, I don't think.
Professor Chen, would you tend to agree that we don't have any currently, or in your opinion, do they exist now? Maybe where they came from?
So I think this is related to one of the big concepts in the strategy world. It's like, to what extent strategy, it's planned strategy or very intended strategy, or versus the other one is what we will call emergent strategy. So first, I think because of the digitalization and the wide penetration of the mobile users, at least it provides a possibility to have another super app in Southeast Asia. So the possibility is there. But whether it is well-planned strategy or emergent strategy. I think if we take a look of the historical development of the existing super app, I think in China, like for instance, Alipay will be one of them, WeChat will be one of them, and maybe more recently, the Meituan Dianping will be considered as one of the another super app. And if we take a look at the historical developments of all these three companies, actually lots of business or services, when they keep on adding to their app, it may not be like well planned in advance. It's more about, for instance, right, when Alibaba have this like Taobao.com, which is the core e-commerce business, and then, to facilitate the transaction of the potential buyers and users, and then they launched the Alipay as an escort account to make sure that, to try to build the trust between seller and the buyers. And similarly, if we take a look of the development of the Meituan Waimai or Meituan and Dianping, historically it's more about food delivery. It's kind of another version of, so originally it's more about like Groupon, the idea, but then they're getting the food delivery, and then actually the food delivery business doesn't make money, or maybe the profit margin it's very thin, if not making losses. And then they gradually get into the other line of the business, like the hotel booking, like, ticket selling, etc., etc. And recently they've been discussing to get into the power bank sharing, right? So, which means like if we take a look at the historical developments, they are not well planned actually. So a lot of things is more about emergent response to the consumer needs. So which means that, okay, if we expect to have another super app coming, if sometimes people think maybe Grab is already a super app, or maybe Gojek is already a super app, that's fine. People can debate whether it is or whether it is not. My point is that, okay, if we want to create another super app or like further strengthen the existing super app in Southeast Asia, it may not directly copy, replicate on the business model in China. So there's some copy or imitation, but at the end of the day, I think the good company need to understand the customer needs in Southeast Asia, and then perhaps launch some of the services which cater to the local customers rather than a direct copy of the Chinese model. So to me, I think it is possible. It take a couple of years, and also in the super app ecosystems, another critical phenomenon that we observed, it's like typically it's the winners take all. That is the reason why, like in China, big countries, lots of consumers only have this. To me, I think it's only 3 super apps, and expect that the ecosystems are going to compete with each other, right? So back to Alex's original points, I think it has the potential in Southeast Asia. It's still evolving. I hope that the company in this region can, develop some of their own distinctive business models. May not 100% the same as the existing super app in China. And personally, I believe that the phenomenon of the super app ecosystem is much more likely happens in the emerging markets like Southeast Asia, compared to the United States, because like the immature economy like United States, the market is already pretty good defined, and then it's harder to change the existing consumers' behavior. And versus in the Southeast Asia, because the younger generations, the new penetration of the mobile users, and then at least to me, it provides a possibility. But let's wait and see whether like 2 years later, like for the 99% of people will agree, maybe Gojek or maybe Grab are going to be another super app, or in India, like Jio, right? So, yeah, that is my view.
Yeah, I think that's a good point. It brings up a good point about China and how it developed organically. And I think, what we're seeing is, I think what John might be pointing to is that there's maybe a lot of copying, and there's a very big question mark of will these companies develop into becoming a super app? And some people will argue that it's already there, or they believe it is. But I think we still have a long way to see if it will mature in the same way as China has. And then I guess the later discussions could be about about the strategy about doing that. Maybe one from your opinion, where do you think these apps came from? How and why?
Well, actually, what you mentioned about the strategies is the thing that we need to look at when we want to see whether this super app phenomena, if I can say it, will be emerging in Southeast Asia, because John already mentioned, right? Like a lot of super apps, like what people said, is gonna rise in Southeast Asia. People are gonna try to include as many as use cases, as many of transactions as possible in their application. But then, what's next? What are the objectives of these companies? Are they looking for transaction? Are they looking for user engagement in their applications? Because some other areas that we can look at is, rather than creating an ecosystem by itself, there is another path that we can look at, which is the collaborations. Some companies in Indonesia that start trying to go into that direction. Rather than going solo, creating a gigantic super app like Gojek, they try to collaborate each others, and then they try to combine forces into one platform, one shared platform. One example that we can look at is how Grab and Good Doctor is joining forces. So the Grab Health is supported by the Good Doctors. And then we can look at how OVO and Tokopedia join forces to create an e-commerce that has an online and offline payment capabilities. So it's no longer about one player's gonna rule and then gonna rise as a super app by themselves, but they can collaborate. They will try to embrace with any other players that share the same vision throughout the strategies. Especially if you look at this COVID situation, there will be new normals, right? The consumer behavior will change. Will the strategies, the current strategies that all of the super app players have, will it still be applicable in the next month or two? To be honest, I don't think so. Because in Indonesia, we can see that even like the tech giant, one of the tech giants in Indonesia, travel agencies is dying right now, right? So they lay off a lot of people. And that will be, to be honest, I don't think that's going to be the end of it. More and more tech companies going to face the same thing. So if we look at how the definition of super app, the combining all of the possible use cases into one application, in the end of the day, it is intended to embrace the customers on any aspect of their life, so that they can go into this one platform and then do all of the things they need to do on a daily basis, be it looking for groceries, looking for healthcare that is critical right now, and then looking for food deliveries, which is, I don't know, probably there's some up and some downfalls on the groceries itself. But again, the strategies will need to change, and then we will need to see how each player is going to use their strategies on either creating a super app or, in my opinion, do a collaboration with a lot of startup players across Southeast Asia, across Asia, and then they create some common platform.
Can I have a quick comment on this one? Because I've been thinking this question for a long time. So like why, for instance, right, in the US, we rarely see this like super app concept or the big ecosystem. I mean, they have Amazon, they have Facebook, but the concept of like, WeChat, like mega ecosystem, actually, we do not see it in the United States. So I think, to me, I think maybe that like three reasons. One, it's something I think it's relatively from the academic side, it looks like we understand a little bit better. Others, actually, we still think this is unsolved questions. First, I really appreciate your earlier comments. Actually, it doesn't have to be, being a, mega super app, and then so that you try to kill all the others and you would become the one. Like I said earlier, like in the US, more matures, and then so every division of the business already have someone occupied there, which is very different from the emerging markets, so that everything is new and then you create the chance. So that part I think is relatively clear. The second, it's I'm not pretty sure whether this is like more about Chinese culture or like in the private sector that the competition is so fierce that we see lots of cases that actually is a throat cutting competition, and then sometimes the people might use like sometimes it could be the or illegal or maybe some action which is in the gray areas to do this like the throat cutting competition, which is I think is on average it's from the long-term perspective it's not good or not healthy for the whole business ecosystem. Okay, so that part I think lack of research, but it's more about observation. The third one is I think that could partially explain why in the emerging market we tend to see the super app. The reason is because in the emerging markets and lack of these like well-established institution. So we see that on average, right? So like consumers like in the emerging market tend to believe or trust a big brand, right? So that's the reason why we see like in the United States, we see the diversification discount, right? If a company do too many business, like the GE perhaps is the last conglomerates, and eventually people discuss it's going to get some diversification and then to be more focused on certain core business, right? So in the emerging markets, because lack of trust, lack of institutional setup, and then people tend to need some companies like big name to build the trust, and which enable the possibility of the consumers to trust one specific platform, and then which is the snowball effects, right? So once you get the reputation, it's much easier for you to get into the other line of business and provide more services, and then from the platform business models perspective, it makes sense for them to keep on growing because the platform or ecosystem will tend to see the winners take all effects, unfortunately, because of the snowball effects. So that part could partially address like why in the emerging markets that we see more or the possibility of the super app. But fundamentally, I actually believe it doesn't have to be the one single dominant player, because if there's one single dominant players in one regional market, actually it may not serve the best interests of all the consumers and also the other suppliers, because this is a monopoly situation.
Yeah, some very good points, and I guess if I'm reading in between the lines, I think from what I'm hearing historically from China is seemed to develop more organically. The U.S. when the technology was already there, everything was already kind of walled off and built up, so that we don't kind of see that theme of a super app. And I guess then for Southeast Asia, what it sounds like is because China developed organically, what we're seeing is that it's more purposeful. And I guess what Don is alluding to is that they're not there yet. He doesn't believe they're there, but I think people are more trying to purposely kind of build into it. And I think, while Juan talked about some strategies of how they want to go about building that, it's kind of like having a blueprint from China in a sense. So I guess that kind of brings us to the next topic of, before the COVID crisis hit, what were the strategies that these companies were building? And maybe before we could talk about the strategies, what do you guys think? Who do you think is maybe a potential super app, or is already a super app?
In my opinion, we can see from the Indonesian market how the Gojek ecosystem evolved from only ride-hailing into like multiple use cases inside it. And in my opinion, I think both Gojek and Grab in Indonesia has already become to some extent as a super app. They can serve people's use cases on a daily basis. But again, right, like Professor Chen mentioned about the competition too fierce, it is true because especially in Southeast Asia and laser focusing on Indonesia, people are super price sensitive. So even like less than 1,000 rupiah, probably around 10 cents, 10 Singapore cents, people gonna change their perspective. People gonna change their selection. For example, if suddenly Gojek get a discount slightly like 1,000 rupiah more than Grab, people gonna churn from Grab and they just use Gojek. And that's also happened in the e-commerce side. All of the marketplaces are facing the same thing. People opening up stores in each and every marketplace because they're gonna look who's burning more money. Because they're gonna sell on the same price, but customer gonna pay less, and then they get more sales, right? But that can't happen now. People are keeping their war chest right now because it's gonna be a long run. So again, looking into the strategy, previously, Gojek, Grab, Tokopedia, and then we can see how Bukalapak and some other players are trying to embrace all of the use cases into their application, becoming a super app. Because they want to rule, they want to become number one or number two. Because it's either number one and two, or you becoming nothing at all. That's the perception before this. But then, since the situation changed, we need to be really cost conscious about everything. So it's either we want to expand the business and do the trial and error, try to incorporate one more use case, another use case into the application without proper thinking, or we can try to look into the market, people that can share the common strategies, that people can create a strategic partnership and collaborate with it. So each and every player can focus on their use cases, be excel about it, and then try to minimize the burning rate. But again, it can serve the people's purpose. In the end of the day, it's not about, if you look about this startup, the fintech, the strategies is always about how we can serve the customer better. At some point, in my personal opinion, serving the customer better doesn't mean that we serve them for all of their needs, but we can direct them into our priorities, into our partners, right? So we can still get the spread out of it. That's my opinion.
Great. So I heard a few names. I guess you're considering Gojek and Grab, Bulapak and Tokopedia. Would you guys say there's any other potential or already existing super apps in the region? Professor Chen or John?
I mean, if you look at what could be a super app, right? It's really any app that you're using on a daily basis. So you could potentially argue that Facebook could have a super app in Southeast Asia, even though it hasn't done anything, right? And there's been lots of rumors about Facebook adding payments to a WhatsApp, right? Obviously in India, they just did an absolutely huge deal to create what they're calling a super app again. But I mean, it's still early days, and Facebook could do something here eventually. So I think for me, I mean, one thing I've noticed is in China, the super app phenomenon came after the app was super, right? So the app has people using it every day, and then it makes sense from there to add other services. What's happening here is apps are adding other services to get users in, and I think that's a strategy that's not the same. So you're building yourself up as a super app to get users, whereas the true super app case is the other way around, right? Which is having users first and then serving them afterwards. But I think it was a good time to be a startup, because I think there was, from what I've heard, there's a lot of companies that sort of Gojek and Grab were keen to either invest in or to sort of buy. And investors, I think if you're going to pitch investors and sort of Gojek and Grab were in your area, you know, whatever it is that you were doing as a service, I think that also stood to reason that you were doing something important. So I think as founders prior to the COVID outbreak, I think the super app phenomenon was actually a good thing in Southeast Asia. And as to what happens next, I think it's anyone's guess. I think Grab just recently put out a note saying that, you know, it's obviously the biggest crisis they've ever had in their history as an 8-year company. You know, Anthony Tan, the CEO, is always very bullish to the point where you think, can he really believe what the things that he's saying? But on this occasion, he said that he's very concerned and that there'll be sort of cost cutting happening at Grab, which is, to my knowledge, the first time we've ever heard that. So I think it's still early days, and you read things about the numbers that they've got going down, like very, very high drops. I'd imagine like 50% plus from certain countries and certain verticals, right? So I think it's still too early to know what's gonna take place. But it's certainly notable that, yeah, the Grab for the first time has come out and said that, you know, this is going to be a really tough period.
Professor Chen?
Yeah, so like John mentioned this, like WhatsApp, right? So broadly speaking, I think in this region overall, there's two possibility. One, of course, is like American companies like Facebook or WhatsApp. The other one is more about the local players like Grab, right? And if we take a look, the fundamental elements of the super app, and eventually it needs like a mega base of the potential users. So which means that perhaps in Southeast Asia, every one single country, maybe perhaps Indonesia will be, the outlier. Otherwise, like India or Indonesia could be the outlier. The single market, it's big enough, just like China. But all the other countries in the South Asia, the single country itself is not big enough to support the concept of super app. So from that perspective, maybe the local players like the Grab tend to have a bigger chance, at least like as it looks like right now. Compared to other players, I think it's better in terms of getting the different countries in this region. But fundamentally, right? So if we go back to this, what is a business, right? Satya mentioned about to serve the customers better, and think about the fundamental of the business, and also it's about how to make money, right? It's not only always how to burn the money. It's much easier to burn the money rather than to make up money, right? So for the super app, I think one of the, or any platform business, okay, if I use the more platform rather than the super app or ecosystem, any platform business, actually, there's several critical questions that we have to think about it, right? What's the potential network effects? What's the potential effects of the winner take all, the possibility? What's the parameters that determine the winner take all? The other most critical question to me, I think, is about the value creation versus value capturing. Okay, so we see this nowadays because of digitalization, lots of apps create lots of value for the customers. It's true, they serve their customers very well. They create value for the customers. But where is the money side? Okay, you can subsidize by using or use the money from the VC, from the angel investors, from the IPO. You burn the money, it's easier. But where's the money side, right? So how can we capture the value from the super app? Actually, that is, I think, it's not only the question for the Grab and also for many, many other companies by using these ecosystems. And like I said earlier, if we take a look at historical development in China, actually the money side, or how to capture the value, actually it's kind of organic growth. It's like when WeChat or maybe like Ali, when they design this whole system, actually at the beginning they're not very clear where they can make money. Okay, so eventually, like in Southeast Asia, we get some experience from the US, get some experience from China, but again, what are the unique elements that we can create in this region? And eventually, if you want to create a super app, I think there's several fundamental things that people should consider. One is like, how can you make, how can you get a big base of the loyal customers? Although the super app can provide all kinds of services, but eventually, there will be one or two core services that make your platform very sticky compared to others. Okay, if you do not have one or two core business that can make your consumer to stick in your platform, and eventually it's very difficult for any platform to make money. So core business is very important. Second, it's maybe I think any super app perhaps needs financial payments, this kind of services, which is the infrastructure could be built into the super app. Otherwise, it's more about business activities. It's very difficult to use my earlier words to create this stickiness, and how can we use the infrastructure to get deep penetration of all kinds of business activities. So eventually, I think the question, especially in this post-COVID-19, it's not about like how can we burn the money. It's where can we strengthen our core competitive advantage? One or two services which can create the stickiness of the users. The second is how can we capture the value in addition to just create the value. That will be the core question in the post-COVID-19.
Yeah, so it sounds like, pre-COVID, from what I'm hearing is that a lot of these super apps were fundraising huge amounts of money to acquire their user base. And now it was sooner or later, I guess, where there's time of reckoning where you have to start making money, like the professor is alluding to. But I guess before COVID hit, what were some of those specific strategies? And maybe Wawan can describe what he saw in Gojek and maybe on Ovo. So what was the competition doing? And then I guess later on we can contrast that to post-COVID, what's happening now.
Okay, well, if you look at the competition, regardless about the competitions, right? The value creation and value capture, as mentioned by Professor Chan, is really interesting concept because, again, if we look into the condition right now, even in Gojek and Grab as the ride-hailing applications, the riders, they have a certain amount of money they want to accept regardless the distance. But looking into the customer, they just want to pay as you go, right? If I want to travel only a short distance, then why should I be charged on a minimum? They have to be a minimum charge of it. So there are some incentive given to start with. And then there's a lot of incentive given to drivers, to merchants, to business partners to combine forces and to create these ecosystems, right? So that creates a problem, and that creates the challenge when we're talking about the competition itself, because both Grab and Gojek also facing the same thing. Right now, it's always neck to neck in terms of price. If the price difference changes a bit, even a tiny bit, like for example 1,000, or even make it slightly bigger, 2,000 rupiah, and the swing is huge. We can see one time Gojek have the 70% of the market share for the ride hailing, but any other time it's changed into like 30-70 for Grab. It changed into like 70% for Grab because of the price reduction, and it always goes on and on, always like this. Whenever Gojek creates a new platform inside it, go into the food deliveries, and then right now go into the e-health, Grab is also doing the same thing. Pretty much everyone is creating the same thing with the different flavors. But in the end of the day, it's always going back into the costing. In the end of the day, to be a platform, to be a big platform, to create an ecosystem, it needs an economic of scale that can help the company to fight all of these costs, all of this incentive that they need to expense in the first place. We look at if you look at Gojek, they have GoPay as well. The e-money side, the payment side, burning a lot of money. All of the payment side burning money. We look at Grab, we look at Ovo. The cashback is also the same thing. All of the e-money players in Indonesia facing the same thing. And then all of the e-money going into this super app function going into this ecosystem. Minus plus all of the minuses from the business become the interesting competition, because everyone is running on minus. Everyone is relying on additional source of fund the next round. Everyone is eyeing on the sustainability, on the profitability. But how to do it if they always try to incorporate everything into one gigantic package? It's tough for a startup, for a digital players to do it, because the nature of the company itself is agile. And for me, I saw companies, a big corporation into a small startup, into a small fintech. The nature is totally different. If we go into a big company, loss of $100,000, we can yell around. We can just screaming around saying that, okay, we have a big loss. But in fintech, in this super app era, loss of $1 million, suddenly we just say that, okay, let's assess our next steps. Okay, should we continue do this, or should we pivot to other stuff? So it's totally different the way I see it. Although the competition, it's always going to be it's always about the pricing in Indonesia.
So very good points. So it sounds like pre-COVID, the money used and raised was to basically incentivize users and discount it, which led to price wars and essentially what you're saying, this is a big facet of what we're seeing. So I guess that leads to the next question. What do you think what is happening now? What are the super apps doing? Are they still deploying the same strategies of discounting, opening new verticals, reducing price, getting market share, or has that changed yet? Or what do you guys see?
Well, if I can start answering this question, at least in Indonesia, the place where I really familiar with is that even these big players are starting to collaborate. Like me, from the OVO days, we always try to collaborate with Grab, with Tokopedia, and then collaborate. Right now, Grab is collaborating with the Good Doctors. So it's more on the try to reduce the cost, try to reduce the expense, and try to reduce the expansion, while trying to deepen the potential source of income from monetizing the customers, monetizing the services that we already have. While at the same time, they need to also focus on trying to look for an addition or another way to incentivize both the both the supplier and the customer side on how they can attract these parts into to engage with their platform. That's going to be the challenging part.
Just some quick comments. So to me, I think the competition is right now, right? Most of the apps actually is funded by capital. Okay, so the capital could be from various resources, right? VC or IPOs, and then so eventually, I think in the post-COVID-19 cases, and then the VCs are much more cautious to funding not only the super app, but many business activities. So eventually, I think the cash burning rate, my guess, it won't be like similar to the pre-COVID-19 situation. The second is go back to the earlier comments, right? So like for instance, Gojek and Grab, fundamentally, I think the original business, which is the ride-hailing business, it's not so sticky compared to other business. Like when we think about the WeChat at the beginning, it's about social networking. In Gen, it's much more sticky because all your friends is in that WeChat, and then you are sort of forced to use the WeChat. It's not your choice, literally. And in commerce of like the Alibabas, eventually, the stickiness of because once you you submit your bank accounts to the e-commerce, you buy stuff there. So eventually, actually, the business transaction is much more complicated and it's sticky compared with like ride-hailing business. Like in China, it's like Didi, right? Gojek and Grab is the same, right? So back to around like 2016, when I wrote the case, at that point of time, Didi and Uber are still fight fiercely in China. I think, okay, if compare the business fundamental, it's very easy for one to copy the other. No matter how smart you are, eventually 1 month later or 2 weeks later, they're going to launch a similar business. So under that situation, actually, it's very difficult for the company to build the unique competitive advantage and make the user sticky to your platform versus the other. So based on that judgment, actually we can expect that Didi and Uber will merge at some point. And this is the same happens in China. It happens in Southeast Asia when Grab merged with Uber. And possibly, I mean, from the business logic, right, if they cannot find some value capturing side, if they cannot find the sophisticated or complicated business transaction, which make the user to stick to the platform eventually, maybe Grab and Gojek at some point of time, if the we call the Chinese called cash daddy, right? If which is the or sugar daddy or whatever you call it, if the capital from the capital side that eventually nobody can really sustain the big cash burning process. And then, so we might see another merge at some point of time. So post COVID-19, I think fundamental reason it's the cash. It's like to what extent that you can still sustain the current business model if you cannot find some good way about the value capturing. Yeah, that is my thoughts.
John, would you like to add anything to that?
Yeah, sure. So I don't personally know what's going on at Grab or Gojek. I'd love to know. So if there's anybody out there who knows, please contact me. Discretion is obviously guaranteed. But what I do know is that since the end of last year, right, SoftBank is a very key investor in Grab, and obviously the WeWork disaster had refocused every company in the SoftBank portfolio on being more cautious with the burn rates, right? So I think even before the COVID outbreak, Grab had been wary that they needed to cut the burn rate, and I guess by association, Gojek too. And obviously they both just raised huge amounts of funding. I think I've read somewhere, I think that Grab has about $5 billion in the bank. Gojek just closed off a round that I think is over $2 billion in the last couple of months. So obviously they have the runway, but I think, as I mentioned, to have the Grab CEO going out there and being, for him, like quite candid about how tough the situation is, I think you can read a lot into that. That behind the scenes, Grab is definitely trying to cut that burn rate. And as you said, Professor, there's been media reports about the potential tie-up, like a potential merger deal between those two companies. I don't have anything else to add to that other than what's already out there. But I do think that it's quite hard, and that there's oftentimes companies do meet with each other privately. You don't always read about that in the press because we don't always know. So it's hard to know whether that is a meeting that is of substance or just a meeting anyway. And obviously it makes sense in some ways for there to be some kind of consolidation deal, but I think there's lots of egos and lots of opposition in terms of like how each company's ecosystem has grown up, right? As we said earlier, like they've all copied each other. They've got their health companies that they've invested in or that they've acquired. They've also bought fintech businesses. They've matched each other like for like in various verticals. So perhaps doing some kind of merger deal makes sense on paper, but it's quite hard to figure out how that would look. But yeah, I think we'll find out in the next couple of months from Grab and Gojek. I think the fact that Anthony Tan's letter was like a week ago means that it's still very early. So I think the full extent of how Grab and Gojek are cutting back on their spending will become evident soon.
Okay, great. So I guess this brings us to the last topic. I think Wawan was talking about how the super app companies probably need to look deeper into each of their users and extract more value. Professor mentioned they need to really sharpen up their what is their actual value capture to really make it even more sticky. So I guess the last question would be about what would you guys advise for these super app companies if you were to work for them, or say you were at the top. What should they be doing at this moment in time? And I guess post COVID there are some lasting effects. So I guess you guys could talk about what are those effects and what they should be doing.
In my opinion, first of all, we need to look into what is the new normal is going to be looks like, because although there's a lot of write-ups about this new normal, but it's going to be different from country to country, from area to area, right? And as part of the super app that goes to serve customers and also to ensure that the business itself is sustainable, they need to really understand what is the new normal going to look like and how it will impact each and every companies that they have. And then after that, in my opinion, again, another way of creating this new super app, creating a big ecosystem. You don't need to work yourself. There's a lot of potential collaborators that are waiting for to be asked by you to partner. Right? As we can look into value creation that we can create, and then we need to ensure that we can get revenues out of it. It's not like always burning money. It's not like we need to capture at least 70% of the market before we can gain profit. But it's more on the cost conscious, and then try to focus on what we can do compared to the new normal post-COVID, which I think it is too early to tell. There will be a lot of changes along the way. So right now, it's more on the wait and see, and try to maintain the war chest feels.
Okay. Professor, any advice?
So I think the earlier comments is very interesting, because eventually, if we think about the turn of the ecosystem or partnership, so actually in the platform, the original purpose is to try to encourage partnership in the ecosystem, which is directly opposite to the competition itself, right? If you take a look at the strategy in 1980s, right? So the Michael Porter said, okay, what is the competitive strategy? So how to compete and how to squeeze your supplier, how to squeeze your customers so that you capture the money, right? So that is like 1980s, 1990s, and then competitive strategy. And nowadays, actually, people care much more about the potential collaboration, the partnerships, the way that we call it ecosystem. I think the original term actually about the ecosystems is we can imagine like in the ecosystems, there are lots of players that they can thrive, they can blossom in that ecosystem rather than like the cutting throats of competition. So I think it's like, I totally agree. That's actually, we need to think about not only about the platform-based competition, but also the potential collaboration, how to enable all the entities in these ecosystems to thrive and blossom, right? It's fundamental. And use the platform strategy fundamentally. I think some of the points that I highlighted before is valid in the post-COVID-19 situation. Number one, it's where is the value capturing. Okay, eventually your investors will care about where's the value capturing. It's not only about the value creation. So eventually you have to think harder, where is the money side rather than just burning the cash. And also post-COVID-19 situation, then the resources, including the cash, is going to be more limited. We can see perhaps in the next 6 months or maybe within a year. So how to manage the cash flow, how to be more careful in terms of spend the money. And to me, I think it's always very important to strengthen the core advantage, right? Go back to this, like the platform or the ecosystem. Eventually, there's just one or two core business that you can grow your customers in terms of numbers, and also you can serve them better so that you can increase the stickiness of your ecosystem. Otherwise, another 10 cents of the lower price in other platform, and then I can easily switch to the other platform, and then I just call the motorcycle or cab. That eventually will not create. I mean, it's create value for the consumers, okay, but it's very difficult for the company to keep on sustaining, burning the cash for 5 years or 10 years. That's my view.
John, you have any advice for these companies?
Well, I would never tell any of these companies how to run their business, right? I mean, I'm not a business person, I'm a reporter. But what I do know is, what I would say though is broadly, the impact that these companies have had on Southeast Asia has been huge. And one of my colleagues in Indonesia, she recently wrote a story looking at the sort of upskilling of people in this gig economy kind of period. And we found interesting things, that there are people who were running their own businesses. I think was a photographer, and he quit his business because he wanted to ride for Gojek, and it made financial sense for him to do it. He could work the hours that he wanted to work. And there's these stories across Southeast Asia for Grab and for Gojek. And both companies have spoken about the social impact that they've had on the region. They've made claims about sort of the GDP growth that they think they've enabled. And so I think that it's incumbent upon them to make sure that their business is not going to die overnight, and that they can survive COVID, and they can exist for the folks that basically do the work, right? The ones that go out there, and especially now, right? They're the ones who are out there risking infection and doing the things that we do, so we can get our meals and we can get trips. And so I mean, I know they're taking this very seriously, but I would obviously hope that they find the right systems to ensure that these people continue to make the money that they need to make from these platforms, so that they can put food on their tables too.
Thank you for your insights. So I think it's a very good summation. These super app companies have brought a lot of value to the region. I think that hopefully they can continue to provide the value. A few question marks, maybe sharpening up to see where these companies will land. But overall, I think a very good discussion. So thank you for the panelists. And I pass it back to Yorlin or Jangan. Thanks, guys.
Thank you, Alex. Thank you, Momentum Work, for organizing this. Thank you.
Thank you, everybody. Thank you. It's really, really interesting. Okay. So moving on. I think this is going to be so Jangan, your ventilator, we can just move it to the Easter egg, yeah?
Okay.
Okay, cool. So this is the last and final panel of the evening. So can I invite Blake, Andy, Juliet, Vaibhav to come on board?
Hello, this is Vaibhav from Monsanto.
Hi, Vaibhav. Hi, everyone.
Hello, everyone. This is Andy. Nice to talk to you.
Hi, Andy.
Hi, Juliet.
Hi, Juliet. Oh, I love your backdrop. Is this at home?
Yeah, that's it. It is.
That's so cool. Okay. And Blake is there as well. On mute. Yeah. Okay. So I think so basically the last panel usually is the most interesting and the most challenging panel, because you have to close on a bang, right? And you guys have actually have so many smart people in front of you, sharing their thoughts and taking away all your good points to talk about. So this panel will be very, very interesting. So and I think Professor Chen and Ken has already set the stage. Hey, Blake. Hey, has already set the stage. I think they mentioned a very good point for growth companies, like how do you not die overnight? How do you conserve cash? what is the value generated? So I think before we move on, right? So the agenda for this panel is priorities for growth companies, and based on that, let's kickstart this panel. Bearing in mind what Professor Chen, Ken, and the previous panel has actually shared. Yeah. So let's do it. So as a start, could I get all of you to give short presentation, but short 1 minute introduction about your company. What are you most proud of your company, and then what were you doing before COVID-19 hit? So we start with Nick, since you're the first one in the.
Sure. Thanks for having me. So Lala Move is a crowdsourced intra-city delivery platform. We started in Hong Kong in 2013. We now cover more than 300 cities across China, Southeast Asia, India, and now Latin America. So I think the thing that I'm most proud of is that we actually tackled China and Southeast Asia relatively successfully at the same time, which is a pretty unique story in and of itself. And then I guess pre-COVID-19, we were dealing with the pre-CNY delivery rush. And so that's where we were before this all started. And yeah, I guess it's still what we're doing.
Okay. Okay, funny. Okay, Andy, how about you?
Hello, everyone. My name is Andy, the CEO of Silo. Silo based in Singapore, providing AI decision engine for banks. So we aim to bridging the gap between SME and financial institutions. Our presence in Singapore, China, and also our main market is Indonesia and Thailand, and also Japan. So for the things I'm most proud of, there are three. Firstly, I think with our technology, so we can see our clients using our product to really accelerate their processing, make the banks more efficiency, and before using us and after using us, we can see the difference. And secondly, I think our team is fast learning, and we keep improving ourselves. And yeah, this is really important to a growth company. And then the third thing is, I think I'm quite happy we miss a lot of opportunities. For example, ICO or maybe a cash loan. So those are the opportunities can easily put us into crisis. And it's not a negative comment for those business models, but I think it's not really suitable for us. So meaning in short, it's like we are able to say no to a lot of opportunities. This is really hard for a startup, I think.
Okay, so hang on to the point. I'll come back to that later. Juliet, how about you?
Hi, everyone. Juliet, I'm CFO of Carsem. Carsem is a transaction platform for used cars. We operate in Malaysia, Indonesia, Thailand, and Singapore. We currently transact about 4,000 cars a month. So interesting, Andy said that the kind of not to be opportunistic. I think one thing I used to greatly admire about Carsem before I joined, by the way, I recently joined a company, a VC turned operator. So it's a really interesting time to be an operator. Yeah, so it's one of the companies in my VC days that never pivoted. I think it's the insistence on value creation in a market that desperately needs some basic infrastructures, and it takes a lot of groundwork to build. And I think I really admire that quality in the company. And to each their own. I think some people might criticize it as being less opportunistic, but this is actually one thing I'm quite proud of.
Okay, and then Vaibhav.
Hi. Enchanto is a Singapore headquarter enterprise SaaS platform company. What we do is we provide a software platform for logistics companies to run their fulfillment operations, and to brands, retailers, and sellers, a platform to sell on multiple channels, marketplaces like Lazada, Zalora, Shopee, or the web store builders on, like, for example, website built on Magento or Shopify. What we are proud of, we were actually a logistics company, right? And we did a very successful pivot in 2017, almost resetted the whole company from zero revenue, zero orders on our platform. And today where we are is last year our users did almost 48 million orders processed using our software across 14 countries on an average on a million order per week. And most importantly is we tested profitability first time in history of Enchanto. So been profitable for the last 4 months, which was a big achievement for us to reach with very limited funding. So yeah, that's about Enchanto.
Okay, cool. Okay, so then on that point, right, Bob, I'm just going to go for you for the next question. So how has the events in 2020 impacted your company? So I've heard from everybody since this morning, there's always the pros and cons, and there's always opportunity. And I presume your company has actually benefited from the fact that most people are going towards e-commerce. Would that be right? What's the realistic landscape for your company right now?
So yes and no, right? So are we benefited? I don't think so. No, at least in an immediate term. So what has happened? This still feels like a sci-fi movie, right? So nobody told us about this thing coming, and we'll be locked in our houses like this. It was unimaginable. It has impacted us negatively in terms of immediate new sales. So we are a B2B company. We have to go and meet our customers to do sales. We can't travel. We can't do new sales. People don't sign B2B core system contracts online right yet. So in terms of new revenue, we see that there is an impact for sure. Existing customers wise, so far, if you look at the month-on-month growth, right? So March 2020 orders as compared to March 2019, we see 17% growth in terms of orders for the absolute same number of customers. But that growth is actually coming only because of essential categories. We see essential categories are growing sometimes, certain weeks they grow like 68%, maximum that we recorded very recently. But e-commerce, there are a lot of non-essential categories. And in many countries in the region, like in Singapore, you can ship everything. You can ship essential and non-essential. But most of the countries in the region, you can't ship non-essential, right? And also, people have started not to shop the things for example, fashion or cosmetics, or like small spends like $5 spend buying a random USB connector. People aren't buying that anymore, right? So we see certain categories. In fact, the large number of categories has dropped. In e-commerce, generally, fashion, cosmetics, and electronics are the biggest categories. So we see impact definitely. That not able to sell immediately to new customers, existing customers, non-essential category customers. They have negatively impacted, and we've got to help them somehow. We don't know when this will open. On the positive side, what has happened is that people have realized the importance of e-commerce now. So we see more inquiries right now. That people are thinking about it, businesses are thinking about it, CIOs are thinking about it. But again, it's thinking. We'll see how actually they deploy resources once the market opens.
Okay. Juliet, how about Karsam? What has happened since 2 months ago?
A lot. I think immediate shock would include, operational shock. Because I think the priority is to make sure our employees are safe. Be it with our other team members or with the customers. So procurement, the PPE, I know it's really boring, but it took me quite a bit of time to source that out. And immediately the management came together to form a employee COVID support fund to help employees in countries where testing is not free. It's actually quite expensive. And for any medical expenses that's not covered by insurance, and a lot of them don't cover. So we've done that quite rapidly. And we've streamlined and moved online our operations and team meetings as much as we could. We had our first ever virtual town hall as a regional company. I think that's a kind of a silver lining in all of this. We did get better at working remotely with each other as a regional company, which used to be quite a bit of challenge. I think in the midterm, we're seeing some behavioral changes we're quite excited about. And I think echoing what Jonathan mentioned earlier, because the peak happened about a month and a half earlier in China compared to us. We're seeing the response, the recovery of the market like a crystal ball. So we're kind of reading a lot of behavioral changes, especially in our sector. And we are actually getting feelers out into the market and gathering some useful data about the change of behavior from both dealers as well as customers. So that's really interesting.
Okay. Andy, how about for Silot?
Firstly, we can't travel, so especially for financial institutions, if they don't meet you face to face, they won't buy anything from you. And secondly, even we make the sales and we couldn't deploy, and a lot of like modeling has to be on premise. So as the result, the sales volume definitely reduced a lot, and our team member couldn't travel, so we couldn't meet to each other, and it sounds like super terrible, but actually not. I think overall, I think it's 50-50. Another way there's a picture spread in net about I think several weeks ago. The question is who made the digitalization innovation? The answer A is CEO, answer B is CEO, answer C is COVID-19. So actually COVID-19 pushed a lot of financial institutions to make the move. And more financial institutions, they understand trying to reduce the human touch, especially to reduce the cost, closing some branches and make all the onboarding applications through online. And this is more and more acceptable by the client. So we start to pull back all the team members and also focus to we call a word as building the value for the company. So we're trying to pivot from hybrid solutions to a purely SaaS model on cloud basis. So it's really hard to convince the financial institution to adopt the cloud-based solutions. But nowadays, even they are not working, so they don't enter to their server rooms. Their data has to make some change, and then they get some results. So another way, we definitely beneficial from this crisis, and also we launched some apps into market, and with people, especially the business owners, stay at home, the organic growth increased rapidly. So I think it's 50-50 impact to us.
50-50, okay. And finally, Blake.
Yeah, I think
how's Lala been?
Yeah, it's been interesting because we've been able to because of our geographic coverage, we've learned something at each stage as it's gone east to west. Fortunately or unfortunately, we've got 270 plus cities in mainland China under our whole Lala brand, right? Unfortunately, you get to deal with the problem in the biggest market first. The good side of that, though, is right after Chinese New Year, when it's the slow time of this year anyway. So from a revenue standpoint, I mean, when everything got locked down, we lost over 90%.
Wow. Okay.
The good side, though, is in over 85% of our markets, we're actually now back above our pre-CNY levels. So I feel pretty fortunate that we've been able to recover, but consequently, we've also seen the impact as it's moved down to Southeast Asia, the virus kind of following China, then to India, then to South America. And for us, because it's very local delivery, we don't do any international or cross-border. We have to adapt a lot to the government policy, and depending on the sophistication and or kind of how the wind blows, that can change in a city or in a country on a daily basis. So India is basically still on almost lockdown right now, but there are certain markets that for us are growing. We're up 400% since January. So Latin, Malaysia, and Philippines, Singapore even. So for us, it's very much a mixed bag. But in the long term, we're very, very bullish because as our primary customers are SMEs, this is forcing them to think about being flexible. The only thing that when you can't talk to people or see them in person, they can kind of bridge that gap is technology. And so as people try to, reduce their operating expenses, they look for technology-driven logistic partners to kind of fill that gap. And, we're well positioned to help them kind of weather the storm as well as grow into the future. So actually, I think in the long term, it'll really speed up an adoption in our industry of the acceptance of the model.
Yeah, and I think just now a previous panelist was saying that this COVID virus is actually quite good for investors because it kills off the weaker companies, and the companies that survive would be the strong ones, right? So I just wanted, and I just wanted to understand from you, all four of you, right? Starting from Blake now, what kind of strategies have you taken to defend against this kind of volatility, and how have you position yourself to be agile, to be able to be good or bad, be able to deal with what comes your way as a company?
Yeah, it's probably pretty cliche, but like actually your DNA before the crisis will probably carry you through the crisis. So it's pretty hard to shift who you are as a company, especially from your values and how you operate just because of a pandemic. So for us, we're kind of like the tortoise as opposed to the hare. And so we've always been really prudent, very financially conservative, very pragmatic, and understand that we're in the long game. So we went into this in a very, very strong financial position. We're coming out of it in a stronger financial position, and those are not things that just change overnight. So I think the DNA of your company is what really sets you up in this type of circumstance. That being said, operationally, you do have to adjust things. We really, pride ourselves on our contact with the drivers, personalized training for all of our drivers. Well, we've gone to all virtual training now. So there are operational things day to day. How you educate the market, how you spend your marketing dollars changes, but actually the core foundations of what made your company strong or weak before a crisis, it's very hard to change in a crisis. So I think this is really what carries companies through times like this.
Okay, and then jumping to Juliet, would you have anything? Would you have anything to say to that? I see you nodding your head.
Yeah, because a lot of what Blake said is very much what I have in mind. I think staying true to your value and staying true to the fundamentals that got you to where you are is it's definitely something you should hold on to. I think just on top of that, we're witnessing some really big and permanent changes in consumer behavior, and I think what that changed in us at Carsome is we have accelerated some really cool ideas we've been working on in the pipeline. And previously we were worried about, when you're at a certain size, you worry about disruptions to your BAU with launch of new products and ideas. But now that has been disrupted for us. So we have accelerated a lot of that development work, I think, since two months ago.
Okay, and I'll get to that in a minute. How about Vaibhav? How has this crisis impacted your business and going forward? How have you been tweaking your business model, or has it been the same all the way?
No, it has changed a bit for us tactically. I think in the long run it will remain the same. But what we see is that we are doing a quick adoption to some of the realities, right? So, to give an example, right? Enterprise sales can't go and meet customers, so we kind of arranged inside sales training and social sales training to all of our sales team members. So what we did is we completely changed KPI from the revenue to lead generation, qualified lead generation with the target market and senior executives or C-level executives from brands, retailers. So we're measuring them now. So we still do a sales call. So it's even if the new revenue is zero. And what we discuss in the calls now is purely lead generation and contact establishment rather than an actual sale. So that was one part. We also saw that a lot of people had difficulties to work from home because we're a small team, but spread across 6 different locations. So we had to kind of adjust a schedule to make sure that and become a bit more arrange help for some internet access in some remote parts of India where they had to go overnight with their families during the lockdown period. So, and we saw that, people kind of, so some of the developers, they said, look, I know that these 5 guys are not able to work because they had to overnight take a journey and they're not contactable. So developer kind of rolled their sleeves and they ended up doing customer support, for example, right? So we see a lot of team members adopted the roles very fast, which is very great to see. That's kind of in DNA of Enchanter to do what needs to be done.
Okay.
In terms of the business, I think we are not adjusting our product or services. It will still remain same, and we're just waiting for a market to open gradually and then back to the same again.
Okay, cool. And Andy, so just now you're saying that you guys have created an app for, and is that one of your business strategies? Anything else happening at Silot?
Yeah, so firstly, it's actually before the COVID-19. So we see the opportunity and then we just launch it. So I think for us, for example, like a tech-based company, so we see 3 layers of innovations. Firstly, on the fundamental technology. Second layer is on the application innovations. And the third one is the most competitive, which is business models. Business model innovations. So as crisis time, I think the money getting cold and it's really hard to raise more money, and the product layer actually need to be start generating revenues. And we don't have too much time to strengthen the technology, but we have to think about how can we adopt this ready technology and ready solutions into the application layers. When the money is getting hot and people start to building based on the existing technology and the application layer, so there are more and more business opportunities, business innovations happening. So I see in this time trend, especially on the economy recession, so more and more players, especially our clients, they become more conservative, especially on lending and also payment itself. So for us, definitely to reduce some costs is necessary. And just now, one of my friends mentioned why everyone talking about opportunity, but no one talking about crisis. So I think the crisis is there. No matter how we talk about it, it's there. So we have to think about how can we overcome it. And the innovation and more technology will actually help. So for our perspective, I think this crisis actually bring more and more restructuring for the industry, and definitely survive longer, have a better long run is totally makes sense. And to play a conservative model, then that's more important.
Okay. So, and I think you've touched on my next question, which is basically, should you go on a conservative model, or you want to go on the defensive and aggressive model? Do you want to just capture it for the next second half of the year? How do you intend to go forward?
Firstly, the fundamental is survive longer. It's more important for all the companies. And we could, as unclear situation, I think everyone is conservative because we do not know when will this circuit break or lockdown period will end. And even in the market, we couldn't meet clients, couldn't make sales, couldn't face-to-face talk to investors, or maybe couldn't hire, even interview people. Then stay at the same situation and start continuously to building the value for the company is more important. And when the situation getting clear, so we see a downtrend of the confirmed case, then we can try to be more aggressive depending on the financial situations and also the customer on board.
Okay. Blake, how about Lalamove? Do you share the same sentiment as Andy?
I think for us, we again, I don't think we're going to change a lot how we do. We may speed up different initiatives or slow them down, but the one maybe silver lining for us on this is that because certain external things you can't control, say you wanted to open a new market and you can't even travel, or you want to go after a new client and you couldn't go talk to them, we actually have the opportunity to be very planful and very thoughtful, where most of the time we've always, in a good way, been very execution, and then adapt as you go. But now we actually have the privilege of a little bit of time to think through some of the strategic things, think through what other opportunities are, and then make sure that we're fully prepared, that when the external things get out of the way, that we can capitalize on them. So this is, we kind of sit between aggressive and defensive, but what we're trying to do is position ourselves to be very aggressive. And when the things that we can't control alleviate themselves, we will definitely be aggressive into pursuing those strategies.
Oh, okay. Vaibhav, what do you think?
Yeah, so for Enchanto, right, it's where we are today. We were kind of lucky to have closed the second tranche of investment just Q4 last year. And most of that money is still intact. So because we've also been operationally profitable, so but we are very frugal in our approach, right? So we don't want to do anything stupid or go kind of very aggressive because we believe that the market. The silver lining here is that market will be ready, SMEs and brands will be ready to embrace the concept of multi-channel e-commerce and logistics. But we also believe that the time to ROI will be longer, right? So we don't want to do anything new or stupid. We want to make sure that we preserve our cash. Right? So that's priority number one. Once the market opens, I believe that we'll have to adopt the new ways of selling our platform. Because again, the traveling will be restricted and we may not be able to have those frequent FaceTime with customers. So we want to prepare more for that and take a very cautious approach. But of course, if there's an opportunity for us to do something which the time to ROI is not too long, happy to take this on a very opportunistic basis. But in general, it is going to be a very conservative approach. We just don't know when this will end.
Okay. And Juliet, what is Carson's approach?
Yeah, I think it depends on the area of the company we're talking about. For cash flow and budgeting, we're definitely going on defensive, try to stretch out our cash flow as much as possible. And I think similar to Enchanto, we closed our funding before the turn of the year. That was really fortunate for us, but there is uncertainty in the market. So we are negotiating hard on our payment terms. We put every single expense under scrutiny. We had all this, basically I have to approve every single expense. It's a really, really worthwhile exercise. I'll encourage every company to do that. And we put, I think, productivity of every employee under the microscope. So I think this is the time we can't tolerate any underperformance. But I think we are definitely getting more aggressive in terms of product and development. We have, if I'm not wrong, increased our tech teams by 35% since the beginning of the year. And this is already in the pipeline, but we're just, I think, adding gas to this. And we are definitely, I think for headcount, it's a twofold approach. On one hand, we want to definitely be strict on productivity, and on the other hand, we are hiring the good people that's finally available in the market. And historically, that has been the bottleneck of development for most companies in the market. So I think that's the approach. Yeah.
Okay, and just now you mentioned a point which I found very interesting. You said that you're seeing a very fundamental change in customers' behavior. Can you explain more on that?
Yeah, I think maybe just a couple of words. I think when I joined the company, I was convinced that the status quo will remain for quite a bit. And just to give a bit of context, we're dealing with the industry that has been doing things the same way for the last 20, 30 years. In the used car industry, so dealers behave in a certain way and consumers behave in a certain way, especially in Southeast Asia, such a low trust market. So we were of the belief that the situation won't change drastically overnight, and we will continue to fight the same fight we've been fighting for the past 5 years to kind of move part of the transactions online and fighting with the 99% of the market. But right now we're seeing a lot of, I think, proactive inquiries from both sides. I think dealers are desperately looking for more ways to further automate their business and move their business online. And customers are more susceptible to online transaction, contactless transaction. And we're seeing that in China, we're seeing that in US. I think we're quite excited to see what's going to happen. It's not going to be a frog leap, but it is a push that we've been waiting for.
Okay. And I presume it's the same for Enchanto, Lalamove, and Silot as well, that this is a good push for users. Yeah.
Yeah.
So
I guess, Yorlin, from our side, just very anecdotally, and this is not even the KPI we look at that much, but our website traffic has gone up 4x since the beginning of COVID. So like that generally just shows, and like this is not a channel that we focus on that much, but it shows kind of the people are looking for solutions, especially digital ones.
I see. Okay, cool. And I think, Bob, just now you said that more inquiries have come in as well. So hopefully you can find a way to convert them once this crisis is over.
Yeah. So as Andy said, right, the COVID has been the biggest propeller of the digital transformation in the company.
Yeah.
So there is a realization, and what we also did something unique, not so unique, but what we did is that we started to generate quick case studies and started sharing those on like emails or some B2B marketing platforms.
Yeah.
And people are sitting in front of the computers, right? A lot of time every day now. So we start to see that we have a lot of uptake for our contents, and that is what is driving our leads as well.
What's the last thing you said? There's a high uptake of
content that we generate. So, for example, case studies of other brands, how we work with them on name basis, or moment basis, and describe that how we solve a particular problem, and then it generates a lot of interest. So the content has been. People have a lot of time to read content nowadays, so content has been working for us.
Okay, that's cool. Yeah. Andy, anything to add?
I would like to share something from another angle. I read a very spicy article recently. So the article argues that in a competitive landscape, when the economy is very good and there are so many players in the market, actually for a lot of good talent, they are spread into the different type of companies. So in this situation in the market, like Southeast Asia, actually the market lack of very good people and very experienced team members. So in the current crisis situation, actually the situation will pull those people into those company that able to survive, and they have an effect that to gathering more and more very excellent talent to be fight in the next level of battle. But in previous situation, the landscape is very messy, and the people is actually people's opportunity actually delayed in different type of companies. There are some like unqualified company should be disqualified in this competition. So the economy actually help to digest or maybe doing some selections to pick up the industry leaders. So that is very healthy for startup landscape. And I think after maybe 5 years or 10 years, this historical moment will actually happening in a lot of articles, I think, in Southeast Asia. In China already, we can see in SARS or maybe in the financial crisis, there are great company just grows into a very large company. So I think this opportunity is actually very good timing for those companies play in a right way.
I see. Okay. And based on this is a very interesting point. And so if we expand on it, right? What is sorry. So on this point, right? Well, what is Silot doing to just grab hold of this historic moment to make sure that you can actually attract the good people, the good investors?
I think for us, I have a mentor told me that financial services, the core is on the trust, and no matter it's banking business or any services related to financial institutions, trust is very important. And for us, definitely important thing is we need to let our investor, team members, clients, industry, everyone know that we have a patient to participate in these innovations and initiatives, because we can see the trend from past years in payment in the different kind of landscape. So in this way, definitely we, just now I mentioned, we miss a lot of opportunities, actually putting us in a very crisis time, and actually we understand to earning fast money couldn't survive for longer. And anyway, we should be paid back. So like the crisis in the Chinese company listed in US, I think more and more effects already happened. So for Silos, we have the patience to start with financial innovations, and from there we building up our core technology. We follow our patterns, and we also have a group of investors. They have a potential with very similar visions. So I think together with a group of team members and also a group of investors is very important to us. So in the past 3 years, we never doing something like urgently trying to make a huge profit, probably that not belongs to us. And this is a right move, and keep this speed. The regulators start to trusting us, more and more banks start to trusting us, and the industry players start to trusting us. So this is quite important to us. Besides on the technology side, definitely in this crisis, building more technology and make the product become more solid, I think is important to all the companies.
Okay, interesting. And Blake, over to Lala Move. And the last question for the panel today, for everybody, how do you see this in the future? I mean, how do your investors see you and how you're playing out? You're not changing your DNA, but you're growing in certain areas. What's next for Lala Move?
Yeah. Again, I think for us, we've been in a pretty strong financial position because we've focused on that since very, very early, when we almost ran out of money a couple times. So we've been, those couple bridge rounds early on were pretty scary when you're 3 or 4 weeks from running out of money. And ever since then, we always said we wanted to be basically default alive instead of default dead, which means that we could basically fund ourselves. And so over the last, 3 years, we worked really hard. And as Juliet said, you have to really rationalize every dollar that you spend. And consequently, we put ourselves in a position where our cash flow is very positive, we're profitable, etc. So, it makes it easier to have discussions with investors about your growth plans, the strategic plans, because it's your unit economics and the foundations of your company are no longer hypotheticals or assumption based. They're proven track record. So I mean, generally, I would say the sentiment when I talk to not just our investors, but just investors in general right now is it's not that they're not willing to invest. Actually, you still see it, but they're really going to scrutinize how the companies actually scrutinize their own spend, and that the unit economics of the underlying business have to be there for them to feel comfortable to continue to back you, because in certain markets, you don't know how long the economic downturn will be. Especially, I can't imagine being in like a tourist-driven industry or something like this right now. We're fortunate that our business hasn't really slowed down that much. But even so, I think companies that really can show that their cash management was strong before, their unit economics make sense, are going to come out of it with the investors. The money's still there. They're still looking for great founders, great management teams. They have money to spend, but these are the things that they'll really focus on when they look to make their next investments. Even more so, they always said it, but now they're forced to.
Yeah, that's true. That's true. I think the first panel investor was saying that if Traveloka were to ask for more money, they'll invest as well. So I think it's a good point. But Bob, from your perspective, lucky you don't need to go for investment. But what's planned once this COVID crisis is over? You mentioned just now that you're frugal, but I think you're looking for new opportunities. You're building up the pipeline, and then what's next in second half of the year? Any last any thoughts?
So, in fact, we announced that we're going to raise a big round in January this year. We started a process, and this COVID thing happened, right? So where we are today is that, based upon the experiences, I don't think that at least in our space, you can't raise a round with people that you have not met so far, right? If you met them before COVID and there have been face-to-face discussion, then there are some chances that rounds will go forward. But meeting new VCs on a Zoom call and trying to raise some serious money, $35 million looks remote. We are in process. Process has slowed down because of this whole COVID situation. It will take time, but for us is that the plan with which we started this round in January 2020 was that to expand Enchanto into Europe and US market. So the funding was largely for that. So we're still pursuing it, but it will link to the funding and then subsequent investment after that. But meantime, to run our business in core markets, we're very comfortable. But yeah, every dollar that we spend has to go through 2 or 4 eyes for sure. Otherwise, 4 eyes. We don't spend it.
Yeah. Okay. And Juliet, so are you still you've closed a round also in December. Congratulations. And then what's now that you are having this aggressive defensive strategy in products and finances, what's next for Karsam? Oh, Julie, I think you're muted.
Okay. Yes, I'm muted. I think cash-wise, we're good for a while following the fundraising, and the team has historically been very prudent with the cash flow and spending. I think similar to Lalamove's story, there are a couple of times we cut close. So I think that every time that happens, team just get a little bit better with cash management. And we did have a plan to fundraise, but not until the end of the year. Around new initiatives of the business. I think that for now hasn't really changed. And the same approach, I think, with the solid unit economics and outsized growth potential. And in fact, we have kind of received a couple of inbound inquiries from investors who see the business as recession resilient, who sees the consolidation opportunity for the segment we're in. So I think we are considering some of the options right now. But I think we're not actively fundraising at the moment. It would be a pretty difficult time to be fundraising right now. I think another note on investor sentiment and putting back my VC hat on. From that world, I think investors are very good at gathering a lot of secondhand information and put it in a very convincing framework to tell their portfolio companies what's best to do. But in terms of assessing new situation, adapting to changes in the market, I think operators definitely more sensitive to that. So I think maybe a word to the VCs listening to the call. I think sometimes after enough communication with your portfolio companies and your team, you just need to choose to trust them.
Okay. Very, very good point. I see smiles across, so I think everybody agrees as well. We have 5 more minutes. Any last words before we close off? Anybody wants to do the honors? Yeah? So I think this has been a really good panel. So if I may summarize, what I'm hearing is that cash flow is really important, being frugal, and then managing expenses is also very important. I like what Andy said about that we missed lots of opportunities, and so now you can survive. And I like the vibe of what you were saying is that we're going into more different building up the pipeline and controlling the expenses, and then building trust. from the customers. And finally off, I think what I liked from Kasim is basically that even in this crisis, it's opportunity to build up the certain areas like products and take hold of this changing customers' behavior. Yeah. On this note, I think thank you everybody for your time. Thank you. And can I pass the mic back to Jangan? Okay.
No problem. I'm here. So actually, I'm Lucy. I'm the co-hoster. Yeah. Hi. Glad to meet you. Yeah. Thank you so much for all the speakers from the Southeast Asia. Yeah. So I'm so glad to have like all of you guys here. Yeah. So like I think today we have a really wonderful conversations with everyone. We have get a lot of ideas of like what happening with COVID-19 situation in Southeast Asia, and also we're helping a lot of the Chinese investors, even the friends from India, understand what's happening in Southeast Asia. So I think now we have Jangan here. Hi, Jangan.
Hello. I think it's been a very, very fruitful half a day for all those from Southeast Asia, and fruitful 2 days for those from China, looking at both Southeast Asia and India. I know everybody is just, apart from the ones from China, everybody is still stuck at home, but I think it's been great that we are able to communicate, we're able to share, and I think thanks to Lucy who put everything together, and let's keep our spirit up.
Yeah, thank you so much, Jangan. And so I think this is not the end of our conference. So tonight we also have one really wonderful roadshow. So have like 3 different sessions. So one roadshow is about logistics and transportations, and the second is about the content and social network, and the third is about the fintech section. 今天晚上这个其实不但非常感谢所有的观众，我们到现在为止的这个7000多观众的观看，然后我们也非常欢迎大家在未来关于任何的关于印度市场和东亚市场的信息和我们一信资本还有共同创投一起来交流。然后今天晚上的话呢，我们还有一个非常精彩的印度市场的一个企业路演和昨天晚上内容的形式相似，然后每家企业会有10分钟的一个展示时间。然后我们今天晚上的话会有3个环节，第一个环节的话是我们的这个物流和这个通行环节，我们有3家公司 Let's Transport is the leading O2O logistic trading platform in India。我们可以把Let's Transport 看成是印度版的云鸟，他们解决的是这个企业乘配的最后1公里问题。And Local so is a ride sharing platform。它是同城的这个类似我们的滴滴这个搭车拼车功能，是印度现在非常火热的一个 APP。And we have a company called Kako, the digital logistic platform offers logistic shipping service to the 3PLs and trucks operators。然后我们也有印度最大的这个物流承运商，是物流储值承运公司，然后 Kako， 然后我们可以把它看成是这个印尼版的这个货拉拉富有卡车。And we also have the special session called work。我们还有一个第二的话是在我们主演的话是在今天晚上北京时间7点钟准时开始。然后第一个环节的话，我们的7点到7点半。然后第二个环节的话是在我们的7点半到8点半。对，第二个环节的话，我们有Milo， 还有这个 Milo 是 the best India。Milo is a company as the best Indian pregnancy and parenting company。我们可以把它当成是印度版的宝宝树。And we have a trail in this so it's like more like social medias and content sharing and shopping platform。我们可以把它看成是印度的小红书。And we have a company called the Asia Parent, the largest the pairing company for in Southeast Asia。这个是东南亚版的宝宝树，也是复兴瑞正和我们今天的这个演讲嘉宾 ATM Capital 他们一起投的。And we have a headphone, India's first open the audio platform， 印度版的喜马拉雅。Mainspring is the leading digital providers and online gaming publishers in Southeast Asia。Mainspring 的话是一个游戏发行公司。And at 6 p.m. So that is a 8:30 China time. We also have the section, the fintech sections. 在今天晚上的北京时间的8点半，印度时间的晚上6点，我们还有这个非常精彩的7家互金公司给我们带来这个互金的一个分享。互联网金融方面的关于印度市场的创意是8家 DOT an offline to online merchants platform in India， 我们可以把它当成就是印度版的这个支付的硬件提供商 ，and Creditly is a HR software and the payroll software in India， 我们可以把它当成是这个印度版的帮助企业去做更好的这个企业的后台管理，然后还有这个员工管理工资支付的这样的公司 ，and Paytm Banks India is a consumer neobank。我们还有Rupic, an online leading platform that's especially in current risk gold loaning and personal loans. Rupic 是一个非常有趣的一个公司，它也拿了 GGV 在内的包括很多以前资本的钱，然后他们做的事情是把这个个人的金饰作为抵押物，然后去对印度的这些人民去做一个长期的一个贷款，长期和这个中短期贷款。然后他们因为印度黄金在印度人民心中来讲的话，它其实是带有很多的情感附加值的，所以说他们用这样的一个方式去降低他们的这个消费贷款的还有这个个人贷款的一个坏账率。And we have the LifePal, the #1 online marketplace in Indonesia for the insurance. 我们可以把它当成是印度尼西亚的这个 Policy Bazaar. 然后还有 KISS, the India online platform that's enabling the instant credit for the consumers to make the purchase at digital points and sales. 我们还有这个 KISS, and we have Carbon's corporate credit card for the Indian startups. Carbon 的话，他们是一个给印度的企业提供信用卡的这样的一个初创公司，然后创始人也是我们很多人的老朋友佩服，然后他以前是领域创投的这个合伙人。对，然后 KISS 的话，我们可以把它看成是这个京东白条，然后 Creditly 的话是我们的这个印度版的理财网。所以在今天晚上的统一链接，希望大家可以回来继续观看我们的这个从北京时间的晚上7点开始的一个分享。谢谢大家，晚上见。然后如果说大家需要联系我们的话，也可以一直点击屏幕下方去联系我们的招会小助手，或者直接联系我。然后我是这次大会的主办方印星组织资本的创始合伙人陆景林，然后我平时 base 在班加罗尔。然后大家对于印度市场有什么感兴趣、好奇的话题的话，也都可以找我们联系。然后我的微信是17858935253，大家可以添加我的微信，然后也可以找我们的招会小助手，然后他的微信二维码的话，也就直接在我们链接下方了，大家可以去找他，然后对接我们这次大会的所有的参与嘉宾，如果大家感兴趣的话，感谢大家。
Hello all, I'm Pushkar, founder CEO of Let's Transport, India's leading urban trucking platform. Prior to this, I was working with ITC, one of India's largest CPG companies, and launching products for them. By qualification, I'm a mechanical engineer from IIT. Our vision is fairly simple. We want to be India's leading app-based urban trucking platform connecting enterprises and truckers. Allow me to spend some time on what's logistics in India and what's our canvas within it. As a country, we manufacture products in a few cities and then we distribute it to different parts of our country. Clients use big trucks to move products between two cities, and then once it arrives at a destination city, it gets unloaded onto a large warehouse on the outskirts of a city, and then we use small trucks to move it through their distributors, retailers, and then to end consumers. The latter part forms urban transportation, essentially the canvas where Let's Transport operates in. When I compare China and India, China happens to be a $13.6 trillion economy on my right. The bars that you see represents the economic activity of those particular regions, which also tells us that a densely populated country that China is, they have 143 cities consuming $20 billion of GDP. When I look at India, we are a $2.7 trillion economy. However, those bars that you see are just 12 cities which consume over $20 billion of GDP. What this has led to is a very unique trucking ecosystem which is both fragmented and broken. I'm comparing two provinces, one in India, one in China. It's a province in southern part of India. It consumes $200 billion of GDP, with the capital consuming about $100 billion coming in from Bangalore alone. As you can see, the other smaller cities consume a fairly minuscule portion of the GDP, which is why in India products are distributed to Bangalore and then to other cities. When I look at Zhejiang province in China, There are about 9 cities which consume more than $20 billion of GDP, which is why a manufacturer or a distributor in China would directly ship out products to those cities. This gives rise to our trucks average size. China has about 25 to 30 tons trucks, which are fairly large trucks, while India's average truck size is a mini truck of 3.5 to 7.5 ton. Now, because the truck sizes are fairly small, none of the traditional family-owned business have ever organized this industry. What it has left us with is about 5 million small trucks running around India, and 95% of them are owned by driver themselves. What is the Indian urban logistics opportunity and why now? If you look at what's happening in India, new age commerce is gaining significant share. When I was in my previous company, the only way we would sell products would through a captive network of distributors and retailers. Today, a consumer can shop for the same product through a Walmart from a modern retail and right up to a Amazon from the e-commerce segment. Not just that, a consumer today has an opportunity of shopping a direct-to-consumer brand which otherwise was not in existence 5 years ago. This has led to two broad trends. Consumers now expect faster delivery, leading to an extremely variable demand patterns for enterprises to deal with. And now these enterprises are unable to handle this complexity with the given fragmented trucks of 5 million units which are out there. The above row shows historically what's happened. However, the row which is highlighted in blue and orange shows what B2B and B2C e-commerce platform are changing the dynamics of commerce. Today, the retailer now has an ability to shop from an Udaan right up to a Metro Cash and Carry with extremely high consumer sensitivity as well as service levels, and consumer on the other hand expects round-the-clock deliveries from B2C platforms. This has happened in China and this will happen in India. China today, about 25% of their total retail comes in from new age commerce. However, in India, this is fairly small today. However, we are looking at a 33% of our total retail by 2025 coming in from the new age commerce in urban cities, which requires a different and a technology-powered distribution systems and not dependent on a fragmented trucker ecosystem. That's exactly what we do. Let's Transport connects these individual truckers who are looking for demand and clients who are looking for more efficient ways of distribution or accessing and discovering these trucks. What we offer is multiple capacities to our clients. This enables them to save more as well as increase their sales throughput because a consumer no longer has to face a delayed delivery. What lies at the crux of it is technology enables category creation across industries. Technology also becomes indispensable with decreasing average order value. I'll cite 3 examples of different industries. If you look at banking, earlier we had brick and mortar banks which would lend out to large corporates where average ticket sizes would be north of $1 million. As we progressed, we've now seen different companies, different banks, brick and mortar though, giving out loan to MSMEs and white-collar workforce. Where technology comes in is this also enables a $100 loan to a blue-collar workforce, which otherwise cannot be done by brick and mortar because their cost structures prevent that from happening. You need technology to disburse, you need data to underwrite, which otherwise would not exist in brick and mortar. When I look at personal mobility, 10 years ago, Avis Enterprise, where average order value was about $200, these were luxury cars, these were cabs for 2 to 3 days at stretch. Came the era of Ola, Uber and Didi, where we're talking about point A to point B transportation of about average order value of $10 to $20. Now what technology is bringing on using IoT and mobile application is bike sharing, wherein your average order value is $5 to food deliveries. If I extend the same concept to logistics, traditionally larger logistics enterprises have been people and institutions operating in shipping industry, wherein your average order value is north of $100,000. As I go down the value chain, I look at large trucks. Your average order value is still about $1,000 to $2,000, allowing traditional family-owned businesses to operate profitably there. As soon as I look at the industry in which we are in, the last mile intra-city 200-kilometer space with a truck size which is 1/10 that of long distance, we're talking about average revenue or average order value of about $10 to $20. Now this can't be solved by manpower dependent family owned businesses, and you need technology to enable all those truckers to come to the grid. That's essentially what we've created, wherein some of our deliverables are we have 99.7% reliability. Most of our clients would observe a cost savings of 20%, while our trucker partners would see an earning increment by 30%. We use demand forecasting engine, we use pricing engine, matching engine, rating engines to enable us to achieve all those three. This is a view of what client looks at. It's a very intuitive, very simple to operate application. I think what we've also done is we've created a very simple and intuitive trucker dashboard, largely because these are truckers who are illiterate in nature, and somewhere this has enforced or a higher adoption across them. This technology is what that gives us the tangible results across large clients of ours. They typically observe higher sales owing to higher utilization of on-demand trucks to manage their demand variabilities. Metro Cash and Carry, which happens to be globally the fourth largest retailer, has seen about 15% cost decline in their deliveries. Unilever has seen a higher customer happiness index by about 12 percentage points. This has led to 3x wallet share expansion in just the last 9 quarters, enabling us to achieve the following milestones along with a brilliant team which we've assembled. We're now a $31 million revenue run rate, 108% revenue growth year on year, 3x wallet share expansion. We're there in 14 cities and are trusted by 200 large enterprises in India. We have about 12,000 daily active trucks, and we empower about 50,000 trucks on our network. Not just this, we are a fairly capital efficient company wherein we have posted EBITDA city break even in the last 9 months of FY20. We're there in a growing market with a significant headroom to expand, largely because it is poised that we would consume 70% of India's GDP would be taken up by the urban centers. This cuts across enterprises, e-commerce and SME. We've had a fundamentally sound unit economics. While last year we did about $25 million of annual revenue, we are set to achieve $300 million by 2025 and set to grow our margins from 10% to about 19.5%, which even today we see in a few geographies that we are present in. One of the purpose and mission of building this company was to also help the underserved trucker partners with ancillary problems that they had. Some of the partnerships which we've striked are vehicle maintenance, truck sales, insurances, personal loans, fuel partnerships. All of this either brings 3 things to their table. One, either it helps them earn more, we either help them save more, or it gives them a convenience of operations. We envision Let's Transport as a super app for trucking network wherein enterprises, SMEs and e-commerce companies could send across their demand fulfillment patterns, and the truckers could pick up the job, which is very simple on just a load board model. Not just that, we can also help them access to a whole bunch of partnerships across fuel, maintenance, insurance and loans for them. The pressing question, way forward, and what has COVID-19 impacted and how it has impacted us. While it is an unprecedented situation, but I would say some of the steps that we took were, we got insurances for all of our driver partners because these are frontline warriors and they are risking themselves to deliver products to you and I. We do some checks such as temperature checks, hygiene trainings. We've given them masks, sanitizers. We even do food delivery for them so that they don't end up going hungry to the bed. We also look at daily SOPs, detailed practices, best practices that prevents them from contracting the disease. While India was under lockdown, what we did observe, we observed that new clients needed us even more. Now, there were 2 sets of clients which kind of, we onboarded over the last 3 weeks. We've done more than 20 onboarding of clients. These were brick and mortar stores, some of the largest in India, which you see on the left. They are now piloting deliveries with us direct to home. I think we've leveraged a lot of our learnings across different industries, across time, that essentially has helped them go live. We're also seeing a lot of direct to consumer brands working with us to have a larger and a better sales throughput for them. We're raising $30 million Series C with a clear goal to reach about 1 million truckers and $300 million of revenues. 50% of it would go into expanding new geographies, sectors and building products for our trucker ecosystem. About 35% would be deployed in building a world-class team across business and technology, and 15% would be allocated to consolidate market position. What we think large global outcomes have been created by solving very unique regional problems. Being present in this country for the last 5 years, operating over here, we understand the driver demographics very well as the client demographics, and we envision and aspire to be one such company which is the leading platform for urban transportation network. The team comprises, the 3 of us are from IIT. I spent time with one of the CPG majors, Sudarshan Ravi. I spent time with JP Morgan. Prateek Pujari, who heads operations for us, is a Wharton alumnus, along with Wharton he has spent time with Unilever. We're backed by some of the leading institutional investors, Fosun from China, Bertelsmann from Europe, Mitsubishi, Rebright, GMO, and Mitsui again from Japan, and they've been backing us for quite some time now. Thank you so much. Kindly stay safe, stay healthy. Looking forward to meeting you once I'm back. Hello all, I'm Pushkar, founder CEO of Let's Transport, India's leading urban trucking platform. Prior to this,
of Loka, which is a shared micromobility company. Today we wanted to share with you the problem that we're solving, the technology that we've built to solve that, and the traction that we have seen so far. Our primary market is short trips, which is trips up to 5 kilometers. In India, the daily short trips are about 100 million, and 70% of these are direct, which means riders going from their home to the office or back, and about 30% are first or last mile, which means riders going from their home to a metro station or a metro station to an office. Cumulatively, this is a $20 billion addressable market, of which we think the total opportunity for us could be upwards of 4 billion. Right? And that is a massive opportunity, and it's completely untapped, as you will see later. The main pain point to solve in this space really is on the affordability and reliability. To give you an example, riders who use the metro station may end up taking 20 first and last mile trips in a week, 4 per day and 5 days, working days a week. Right. So both of these, affordability and reliability, are much more important for that segment compared to a general trip to a mall, for example. Right. And that is really the opportunity for us. If you take Ola or Uber, especially in the last 6 months, they have become extremely expensive. A typical 3-kilometer ride will cost you between 60 to 120 rupees. There are some cheaper alternatives, maybe like a bike taxi or a Vogo or a Bounce. The challenge with these self-drive kind of solutions is that they don't work very well in places with high demand velocity, like a metro station, which has passenger arrivals of 5,000 to 10,000 per hour. Self-drive assets need very high level of rebalancing to be able to serve that kind of velocity. So that's really the space for us to operate. And we've been fairly successful in doing that so far. Our price point is about 1/3 or 65% lower than Ola or Uber, and it's cheaper than a scooter rental as well. Right? We want to take you through the technology that we built to be able to solve for this. And before I take you that, let me quickly walk you through our team. We have a very strong and experienced senior leadership. I was a principal with the Boston Consulting Group for about 9 years in the telecom, media, and technology practice. Krishna, who's a co-founder with me, has 15 years of technology experience across Amazon, LinkedIn, and Microsoft. And we have a fairly senior team outside of the both of us, looking at very specific aspects of engineering or operations or marketing. And we think this puts us in a very good position to be able to scale this business in the future. Coming to the technology itself, the two important aspects. First is the core ride allocation engine, and the second is the way we have designed the service to improve the utilization and the throughput of the overall system. So the way we differ from a typical ride hailing like a Uber or Ola is that in our business, or for us, putting 2 or 3 or 4 riders into a car becomes extremely important, which means we need to take the decision on which rider is the right person to go into a specific car. Whereas in Ola or Uber, the decision is typically left to the driver to accept or reject a trip. Or secondly, they do not have a situation where there are 8 riders and 2 cars, and you have to sort of mix and match and figure out which rider goes into which car, really. So at scale, the only way to solve this problem is through machine learning, because otherwise, if we try to do it through brute force, which is what we've been doing so far, it becomes incredibly complicated, almost impossible to do it. And so we are implementing a machine learning based logic, which will significantly, on top of the utilization that we are already seeing, improve that further and make the system much more scalable. So what this engine does is it generates all possible routes based on the current location of the vehicle, its existing route, and the capacity, and creates different combinations to identify which vehicle could accept which request. And this is very, I would say, different from some of the other competitors. We don't have any fixed routes, we don't have any schedules, none of that. It's completely dynamic. So there's no planning. We don't have any feet on street, any operations team members who are actually coordinating any rides. Everything is very specific, or a network of pickup and drop points only, and these are very smartly chosen. So it's a planned network. What it allows us to do is it significantly improves sharing, because if you think about it, if you and your colleague were looking to share a ride, but both of you book from different sides of the road, you would not be able to get into the same ride, right? So these fixed pickup and drop points significantly increase sharing. They make the vehicle arrival time much more predictable, because we know exactly where the pickup and drop needs to be done. Where there is very little driver and rider overhead. There's no communication to coordinate with the driver. About 80% of our rides happen without any rider and driver communication. And these pickup points are very dense. So, there's a pickup point every 200 meters. So it's not really a friction in accessing the service. It's just a 2-minute walk. Right? So this is a quick gist of what really differentiates the service and positions us uniquely to solve this problem. And we've created an app, which is how the rider accesses the service. And this user journey is customized for ride sharing. So when you open up the app, based on your location and the destination that you want to go to, the app presents you with a set of pickup and drop points to choose from. And we also recommend a point based on the availability of the vehicle, the current location, or the price difference, or the amount of walking effort. So we try to personalize this as much as we can. The second is the many more options for ride sharing available. So recently we introduced the social distance sharing, which means that in a car you can choose to be put with a maximum of just 1 or 2 more riders, right? And you can also choose to be pooled with other riders of the same gender. So female riders prefer to go with other female co-riders. And the app gives you very clear directions to your pickup point, along with a picture of the pickup point, so that it's very obvious where the ride needs to be taken from. And the last is, you get some information on the co-riders, so you're able to rate them. So it creates a good community behavior. People show up on time. Our waiting time for the car at the pickup point is less than 30 seconds. And the technology has really delivered on the utilization. Our seat utilization is about 70%, whereas the break even is between 30 to 50%, depending on the vehicle type. Our share of off-route traffic, which means traffic which is not on a fixed route, is more than 40%. And this is important because it demonstrates the value of having dynamic routing, because then it increases, as you can see, by a factor of almost 50% the traffic that we can serve. Our wait times are less than 5 minutes for an average rider, and the detour time, which is the amount of time that you would spend compared to your direct journey, is just 4 minutes. So if your ride would have taken, if you went directly, your ride took 10 minutes. With us, your ride would take just 14 minutes. And so, which makes it very comparable to self-drive. So we are able to serve that customer segment as well, which is time sensitive. And in terms of utilization of the hard numbers, so this is what our utilization looks like at different hubs. In the first hub, which was the one that we started our operations with, about 88% of the rides go with greater than 75% seat utilization. So that's a very aspirational number when we had started off, but we are seeing the technology play out and the hypothesis play out. And if you look at these utilization numbers and our unit economics, our unit economics are such that for one rider, it's a conscious decision. We choose not to take any commission from the driver. We just pass on the fare from the rider to the driver as it is. It's partly a supply retention strategy because for single riders, which is what Ola or Uber do, our commission is 0. But on the second and third rider, the rider as well as the driver saves, and we make a gross margin of between 10 to 30%. Right? So on an average, the take rate is about 22% overall. Right? So those are the basic unit economics. And as you can see from the left, that the utilization is already there. Right now, we're in the process of setting up this marketplace, so the driver incentives are higher, but we expect to rationalize that very quickly. Let me just quickly walk you through the current traction as well. We had many choices of use cases to start with. The metro last mile connectivity use case was the most obvious because it's present in many cities. It's a very dense source of traffic, so customer acquisition becomes cheaper. So in general, it's a more efficient way to scale, and the future looks great as well. Metro ridership is expected to grow from 12 million to about 50 million. So it's a right initial investment as well for us to start serving this use case. Our ridership growth has been phenomenal. We started operations in March 2019, but the first 2 months were more of a beta, a soft launch, or sort of a pilot. So the past effectively 6 to 7 months, we've been able to scale our ridership by 10x. The ridership in February was soft because of the Corona impact. But other than that, from a response perspective, it has been incredibly strong. And you can see that in the health of the cohorts as well. Our 6-month retention is upwards of 40%. And if you compare that with month 0, if you compare it with month 1, M1, our retention is upwards of 70%. The fall from, as you can see from the graph, from the numbers, the majority of the drop happens between M0 to M1, which is because we give some initial discounts, and we are not using an existing sharing infrastructure. We are building this shared traffic ourselves. So there is some amount of customer acquisition which does not intend to use this in a long-term basis. So what is more important for us is the retention after M1. As you can see, that's close to 70%. And the frequency of the riders that we retain, they use us on an average. And this is at the entire cohort level is about 15 rides per month, which we believe is very strong, and it allows us to recoup the cost of customer acquisition in less than 6 months. From a supply perspective, we are very well placed. If, as an example, we need to do 500,000 rides in Bangalore, the amount of supply that we would need across 2-wheelers, 3-wheelers, or 4-wheelers is not more than 10% of the currently available supply in a marketplace model. So from a supply perspective, there is no challenge to scaling this business across any market in India. And we are very honored and proud to have partnered with Fosun and Stellaris for our seed round. And for the angel round, our lead angel was Apramea, who was the co-founder of Taxi for Sure, which eventually got acquired by Ola. So far, we have raised $1.1 million in seed and angel round combined. And we are looking to raise about $5 million in our Series A round, with the objective of reaching 100,000 rides per day in 15 months and demonstrating citywide profitability. About 60% of this would go towards customer acquisition, where we expand from 7 hubs where we are present currently to about 85. And the rest would be towards building the team and supply infrastructure. So that is really quickly about us and problem we're solving and the traction we have seen. We are really excited about the journey and the potential so far. I will be very happy to take questions from you. I am on Gautam@locarites.com. That's my email ID. And thank you so much for your time and attention. Thank you. Have a good day. Hi, my name is Gautam, and I'm the co-founder and CEO.
Hearing from you. Thank you very much. About, I want to introduce you guys to Cargo Technologies. We're Indonesia's largest trucking platform. Thank you so much for having me in today's event. Indonesia is a big country with a lot of islands, and a lot of people ask me, why are you starting a trucking company or a trucking platform in an island nation? What we have to understand is that Indonesia is majority made up of 3 islands, and they're highlighted below: Sumatra, Java, and Bali. These 3 islands are connected by ferries that run on an hourly basis every single day, and there are highways being built today by the government that really connects all the way from the north all the way to the south. These 3 islands together make up 80% of Indonesia's GDP. And about 60% of the population. So, economic activities is really concentrated in these 3 islands. And it's, to us, it's one big lane and corridor, that really focuses all of Indonesia's, economic activities. Indonesia's high-level numbers on logistics is very big, and you can see this throughout many different reports out there. It is one of the biggest spenders of logistics in the world. It roughly spends about a quarter of its GDP on logistics, which is transfer of goods in this country. It's very inefficient. It's very antiquated, and it is a place where we think technology can really help to smooth out operations and to really be able to aggregate the supply base that exists in this market. Out of that $200 billion a year spent on logistics, we believe a large portion of that is spent on trucking. Numbers range from 30 to 50 billion USD. And this extremely fragmented market, we think there are 7 million trucks that was sold in the last 10 years from sales data. And most of these trucks are owned by trucking companies that have less than 20 trucks in their fleet. And when we speak to truck owners and cargo owners, we also see that there's extreme sort of middlemen, extreme sort of fragmentation of middlemen or brokers, all extracting value from this network. And we think that this is where cargo can really come in, be able to aggregate supply, be able to connect directly between shippers and transporters. The biggest problem that we see in this market today for transporters is because of the extreme fragmentation and very regionalization of networks, is that there's just a lot of capacity and underutilization of these assets. We see that trucks in Indonesia over its useful life gets less than half the mileage of neighboring countries like India and Thailand in the region, and India obviously as a comp in terms of where it is in its economic growth of a country. For shippers, everything is done by phone. I like to say that there's not an ounce of technology really in this industry, because most people don't have GPS tracking. They have to be able to call. They don't know where their assets are. And a lot of these empty backhauls and a lot of going to places with no loads back really contributes to the inefficiency and the high cost of sending items. This is where cargo comes in. We are a marketplace at our core, and what we do is we connect 90% of these SME transporters with 100 trucks, with demand that we also aggregate on our platform. And we started serving, A1 shippers, what we call, enterprise level shippers like those names that you see, Coca-Cola, Unilever, Heinz, Danone. But we realize that not only these guys need trucks. There's also 3PLs, and there's also small and medium-sized companies. The average manufacturing company in Indonesia needs trucking, and so we go and aggregate all of those demand. The insight here is that for a truck driver, for a trucking company, they don't really care where the demand comes from. They don't care if it's a Unilever load or if it's a load from DHL or if it's a small sort of factory. They just care that their truck is utilized, and they care about getting paid fast. And this is really where cargo comes in. One of our core competencies and one of the core sort of value proposition of the platform is that we install GPS and we verify every truck that comes into our marketplace. We connect shippers with the right truck at the right price at the right time. We guarantee availability, and we have customer service agents and account managers that really can ensure that the shipment is done, and we show that in real time, right? For the transporters, any job that's provided by cargo, we guarantee that it's a job, and we guarantee that right after you have completed the job, that you will you'll get paid right away. And when we see where the trucks are, when we see sort of the availability of these trucks, we can then assign the right truck, which really improves the utilization of these small trucking companies, and we make sure that the utilization goes up on both sides. We've been around for the last year, and I'm really proud of the team that we're able to assemble. I started Lazada and Uber all about Southeast Asia. I built the first warehouse in Lazada in Thailand, and I launched our Uber business in multiple countries in Southeast Asia before going to China and ultimately becoming our head of Western China business for Uber before our merger with Didi. My co-founders are Indonesians. Yodi is an entrepreneur that has launched multiple businesses from Indonesia. He's Javanese, he speaks Javanese. And Waylon, who used to be my head of expansion at Uber, used to run his own commodities business and had to deal with trucking as a family business. So we really try to combine data analytical rigor with very, very aggressive offline to online tactics that we've learned at Uber. And we couple that with logistics experience by bringing on folks that have deep relationships that they've built in logistics. I want to call out a few more key members of the team. We hired Rahul from Ravigo in India, which is a trucking unicorn, and we brought in a few folks that have done debt capital markets experience. John, head of finance, and Shivom, who spent his early years at KKR building their credit business. It's really important to show that we have great support both from Indonesia and globally. Intuitive Ventures, one of our biggest shareholders, their LPs are 20 of the biggest prominent families in Indonesia. Sequoia India led our seed round, and they have invested across the world in these trucking unicorns. And so for us, we always thought digitalization of logistics is not a question of if it will happen, but it's just when will happen, who will do it in Indonesia. And we're proud of the fact that we have great supporters from all over the world. This is just a slide that shows Indonesia compared to US, China, and India in terms of its size on logistics and its annual spend, as well as how many trucks are out there. So we see that Indonesia is very comparable to India, and we know that there's been success stories and case studies for us to look at in BlackBuck and Ravigo. For us, this is a network business and this is a scale business. The more trucks we get on our platform, what it leads to is a lower lead time. And we look at this by lanes and by routes. We see that our margin profile increases over time when we have more network density. This is a true network business, unlike Uber, where you have to build, city by city. Once we have enough liquidity in this country, what we're able to see is that, we can be able to connect transporters on the way back into other lanes and other cities, which really helps the fact that we can bring down prices in our service. When we have aggregated all of the supply and we have given, these small and medium-sized trucking companies jobs, daily jobs they'll be able to find on our platform, and be able to earn the trust from these transporters that we will pay them on time. We earn the privilege to be able to serve other value-added service to them. So these are a lot of the value-added services that we have already started providing. We provide, invoice financing and truck ownership plans for trucking companies. We also, connect them to insurance, freight insurance, and everything is done through our app, which is eClaim. And we are in the middle of adding other value-added services, in terms of e-toll, gasoline cards, maintenance, and truck manufacturing sort of partnerships, throughout our platform. So we believe that a big platform will have both operation and network effects. When we have aggregated, as many trucking companies as we have access to almost 10,000 registered trucking companies in Indonesia already. And we also will have technology levers because, we are getting data around every single truck type, every single route, and we have real-time pricing data around how goods are being moved in Indonesia that, that helps to feed our pricing algorithm. Over the last year, we've grown very rapidly, and we've been able to serve, the biggest clients, biggest FMCG clients in Indonesia. Here are just some of the names of brands that we have served. And because I think we want to make sure that technology is the core of our DNA, almost 40% of our teammates today are on product and engineering. So thank you very much for listening, and please, here's my WeChat and my email if you want to get in touch. We'd love to meet folks that can help us, and is an expert in the logistics business, financing business, and I look forward to hearing from you. Thank you very much. Today about, I want to introduce you guys to Cargo Technologies. We're Indonesia's largest trucking platform. Thank you so much for having me in today's shareholders. Their LPs are 20 of the biggest, prominent families in Indonesia. Sequoia India led our seed round, and they have invested across the world in these trucking unicorns. And so for us, we always thought, digitalization of logistics is not a question of if it will happen, but it's just when will happen and who will do it in Indonesia. And we're proud of the fact that we have great supporters.
Hi, I am Vineet. I am founder and CEO of Milo. Milo stands for My Little One. We are building India's first full stack parenting platform. Prior to founding Milo, I have done stints at product companies like Wink Music and Make My Trip. I have about 10 years of experience in the Indian internet space. And in our leadership team, there are a bunch of other senior people. Sameer comes from brand and retail experience, and he has worked in companies like Pepsi and Kama Ayurveda. Shweta, she heads our content and community, and has in her previous background, she has launched a chain of play schools in India. Ashish heads our engineering. Overall, with 30 people team, very well-rounded team, which has built internet, commerce, and consumer products. Bit about parenting market opportunity. One thing in which India is significantly ahead of China is number of babies born. There are 30 million babies born every year in India versus 15 in China. Overall, there are 125 million babies in India which are less than 4 years old. this is the market that we are targeting. Within this 125 million babies, about 50 million babies, they belong to the families with very good disposable income, upper and middle class. Our target segment is these users. These users, they are spending around $1,800 every year on their baby, which makes it a $90 billion market. A parenting platform, a full stack parenting platform like ours, has an opportunity to cover at least 1% of this market share in next 5 years to make it a $1 billion revenue opportunity, which we are after. So this is where Milo comes in. Milo is a companion product. We are designed to help 100 million young parents to raise happy and healthy families. And how we do it, most people in India, they have 2 kids. So that makes the LTV of a user about 10 years, starting from their first baby till their second kid goes to school. That is the market that we are targeting. That is the journey that we are targeting. And within that journey, there are 3 things that we provide to the user. First of all is authentic content and tools. Second is a trusted community. And third is the right products and services that they need. These are 3 problem statements that we solve for the user. I will cover on each of these as we go in detail. A little bit about who our user is, what is the persona of these users. Most of these users, they're living in nuclear families, and 76% of them. Also, thanks to other e-commerce companies, by the time they become mothers, they have already online shoppers. Most of our users are first-time mothers and 30% are second-time mothers. Lastly, our users spread across tier 1 and tier 2 cities. Now, looking at this, one interesting statistics in India is also that most of the women, they are not working. 80% of women, they are not working. So this makes a value of a platform like ours, wherein a woman is sitting at home and she is staying in a nuclear family and sitting at home. They're all coming online to a platform like ours. In terms of traction, we have achieved solid product market fit within last 1 year. Our D30 retention is 20%, which is best in class in this category. We have also seen rapid product growth, rapid user growth, 50x growth, and this has come with a very, very minimal marketing effort. We will spend less than 5% of our budget on marketing. We have focused very heavily on retention and engagement, and you can see our engagement rate in terms of DAU/MAU ratio is more than 30%. And also want to stress upon, this is a very highly monetizable user. Unless other content platforms or community platforms with 18 to 24 male category users, which are not very monetizable, this user is spending around $10,000 in the context of parenting, and that is why that makes them very, very attractive kind of a user set. So I'll cover a little bit on the content, community, and commerce. Within content and tools, we have built the product as a personalized journey for the user. We have built many mobile-first content formats like daily tips, like infographics, like daily doctor videos, and we have covered 350 parenting topics across 2 languages already. And we have also built a lot of useful small tools like a weight tracker or a pregnancy diet chart or a tool to make your baby sleep. All of these are structured in your journey to help you, manage your parenting concerns better. And we continue to launch more and more tools as we learn from our community what kind of solutions they need. In terms of the engagement of this cohort is doing D30 retention, which is significantly higher than top news content apps. So that tells you the kind of engagement and the fit this kind of a solution has found with its users. Coming to the community, which is the second leg for Milo. In community, we think of ourselves like a Quora or a Zihuo parenting. Their mothers ask a lot of questions, and now that user is also posting as well as talking of stories. We have around 1 million plus user generated posts already, and moms, they make new friends and they kind of leverage the community in multiple ways. I think there are many products in China which are famous like this. Not so many in India. We are well on track in building the leading Indian community product. One of the key things what makes Milo community take is that mothers feel very safe and secure to discuss their deeply personal and intimate topics. 25% of the posts, they're anonymous, so users are able to express freely about their deep needs, kind of things that they're not able to talk on other social networks like Facebook and WhatsApp. This also speaks again in the retention numbers. Our D30 retention again for this cohort of community users is 31%. This is significantly higher than top social networks, and also in terms of creator percentage, around 3.7% users on our daily actives, they end up being creators versus 1% for any social network. So having solved for the content in the community, we are now building our commerce product. And when we go into commerce, we have two distinct advantages. Number one is the complete feedback loop. The content and community and the commerce, they sit together. So, and the loop is accelerated. The loop is accelerated between both of these engines. And more importantly, this also gives us a complete ownership of the user. We can retarget the same user within the same product and bring them back to increase our conversions. We're working with all of that. The second key advantage is the CAC. Our CAC is already 1/10 of any commerce play. And unlike many commerce platforms where your CAC keeps on increasing as you scale, we have an opportunity to actually decrease the CAC as we scale, given the organic shares are increasing and community virality is continuing to increase as well. On commerce, this is like a beta product that we have built. You can see the product is, it shows up natively within your content and community, and from there on we convert the user. So far, we have done POC on 5% of the users and already done 3,000 plus transactions. Some of our top products, not like baby wipes or stretch mark cream or anti-hair foil oil, these kind of products which are under the Milo brand are very popular and very well received by our community. We are now building our supply side. In personal care, we are building this brand. We are building the brand for Milo Care, which is some of the products that you saw earlier. Milo Essentials is baby gear and utilities. Here we are setting up our China supply chain as well as the India supply chain. On food and clothing, we are talking with third-party players to launch their products on the platform. In terms of investments, we have raised 2 rounds. Seed round was led by Fosun. We have built a highly engaging content community platform using that. We have recently closed our Series A round led by Xiaomi. We're building our commerce vertical with that capital, and our focus is to build a sustainable business model and build the commerce play with the right kind of unit economics. So company is well capitalized right now. We continue to execute on our plans. We will raise a Series B of around $15 million to scale the community and commerce business model in future. Thank you. If any of you found it exciting what we are building, and would be more than happy to connect and take it forward with you. Thank you. Hi, I am Vineet. I am founder.
My name is Prashant, and I'm the founder of Trail. In the next few minutes, what is it that we are building at Trail, and why this company, this platform, is going to be super community around lifestyle interest in Indian languages. You can see on your screen the categories in which we are operating at this point in time. We are in personal care, beauty, fashion, recipes, travel, movies and OTT review, gadgets, intimate care. At this point in time, we are in 5 Indian languages. We'll be launching 3 more Indian languages in the next few months. Let's try to understand why we are building this. What's the vision behind this company? So at Trail, we are empowering every Indian to make better lifestyle choices. If I were to give you an example or help you imagine this company, I would take names of, let's say, think of that we are localizing Pinterest for India. We are localizing a Saihongshu for India. We are thematically similar to those companies. However, our story is rolling out in a very different way, and I'll be talking about it. Why this is the right time to build a company like Trail, build a lifestyle platform in India, is because of this. If you understand the Indian millennials, they have very strong lifestyle aspirations. As they look more and more to the West, to the Mideast, to the Europe, they are trying to have better lifestyle. They want to upgrade their lifestyle. It is also proven from their spending patterns. If you look on your right, that's a report from Deloitte, which says 23% of the monthly income of these Indian millennials is being spent on lifestyle upgrade. But there is a larger gap that I'm going to talk about. Now, India, as you know, is different from India as it is. So if you look at this snapshot, this is what talks about what India it is right now. 199 million people are able to consume information in English, whereas there's a 536 million Indians who are not comfortable or cannot consume information in English. Now, those are the user base that I'm talking about, which are starved for meaningful content on lifestyle choices. They are willing to go for a lifestyle upgrade, but there is gap of information. And there is documented proof which talks about why this information gap is not or is a blocker for those set of users. Now, talking about why that gap is there. That gap is there because there are not enough content creators when it comes to lifestyle. 4% of the lifestyle creators or lifestyle KOLs are catering to 69% of this market when it comes to Indian languages. So that's the gap that we are solving at Trail. Only 4% of Indian languages lifestyle creators are mapped to the 69% of the audience. You may ask me a question, why are you going after this market? Why the non-English market? Because that's where the gold lies. Now, this is a report from Redseer, which talks about the monetizable Indian language users have 2x spending power of their English-speaking peers. And for the same reason, companies like Amazon, companies like Flipkart are trying to go after that particular user. But that user has to be served differently. And I'll be talking about that in a while. For the same reason, if you look at it right, when we said information gap and so on, we have 4 promises that we make about Trail. Before that, I'll talk about the product, but then I'll go into the promises. If you look at the product, it's a very simple product where you choose your language. There are 5 languages right now, 3 more on the way. You choose a category and you keep browsing. You keep browsing and you find your content, you watch your content and so on. The content is available in 2 formats. One, videos, which is 3 to 4 minutes long. Then there are these blogs, text blogs. As a user, depending on what your preferences are, you can consume this information in either way. You can also chat with the KOLs, discuss your problems and so on. So there are 4 promises that we're making to our users at Trail. The first one is we'll help you with the discovery of lifestyle choices in your own language. Second, which is the most important part, is we'll provide meaningful content. That's what the Indian users need. We'll provide personal experiences, recommendations, and reviews from influencers, from users in your own language, in your interest, which you can consume, be more informed, hence be able to make a decision. And for this information gap, we are building a key opinion leader community, which we are grooming at the same point in time. And we'll be helping these KOLs to monetize on the platform. So these are the 4 promises that we are making to this entire community on Trail. Now, like I talked about, right, our numbers are like this, and this sort of proves our initial thesis that there's an information gap. Users are flocking to Trail. If you look at it, right, in the last 1 year, we have grown 25x. 34 minutes of time spent per DAO per day in March. That's probably one of the largest lifestyle platforms in the country. So this is how the MAU has grown. 7.8 million monthly active users. Now, let's double tap on a few of these aspects. Like I said, the core of the company lies in the content supply, the high quality, meaningful content supply that we have built over time. So if you look at it right, on your left, you can see at this point in time, we are getting 1.5 million high quality content pieces every single month from users. And this is how we have grown over the past. If you look at the content creators, we have 500,000, around 600K content creators who create every single month. And if you look at the retention here, it's self-explanatory. The creators are loving the platform. They are creating high quality content to be able to influence the masses and so on. Now, this is how it is. It's not, this community is not focused to some tier 1 cities, it's spread across the country. And it's growing and it's nurturing in small towns, in all of the towns of this country. Now, why community? Because the power of community is amazing. So if you look at it right, if you look at the screenshots here, these are the screenshots that our creators have shared on other platforms talking about Trell, how they love Trell, why they consume and why they create information on Trell, and this is how the sharing has also improved. Now, because of this sharing, what has happened is this. This is the power of community. So our creators are bringing new users. So if you look at the correlation here, as our monthly active users are increasing, the organic install percentage has also increased over the months. 72% of the installs that we're getting are organic. Now, if you look below, this is a very, very important point for you to consider. The blended CAC. Our blended CAC at this point in time is 1.6 Indian rupees. That's probably the lowest in the market, is what I would say. And that's the power of community as we are talking about it. Now, this is what differentiates Trell from all other platforms right now. One, being in Indian languages. Two, about lifestyle, the focus, and it is led by women. 55% of the users on the platform are women. 75% of the content by volume comes from women. The demographics is what is the key differentiator for Trell against most of the platforms which are there at this point in time. Like I said, right, we also focus on grooming our creators. So there are internal engines and modules where we identify a young creator, we provide them material, we provide them tips and tricks, we convert them to a meaningful creator, and we help them to eventually become an influencer. We have these creator grooming programs in the company where we are educating and training a lot of these creators, helping them create better content, drive engagement on the platform, and so on. And there are these modules which are based on personas. Let's say we identify a creator, their need, and we custom make these modules and send it across to them for their own benefit and so on. Now, talking about monetization. Now, Trell as a company is all about context. The context is lifestyle interest. You come on the platform because you have that interest, and you consume information because you are interested in it. Hence, the probability of monetizing well is very high with a platform like Trell. So we have just launched a pilot pre-COVID. The categories we are focusing on is beauty and grooming. Just to give you a quick snapshot, our average order value during our pilot was around 900 rupees, and the take rate was around 20%. And we were working with some of the key brands. Maybe we can talk about it after. So you can find the content on the feed where you can find the buy buttons. There's a shop section as well. The key of the platform is authenticity and trust, and we have deep moderation modules which help us maintain that. The team. So there's a team of product, tech, and growth veterans which are focusing on this segment. My background is that I come from Microsoft and Samsung, have product experience, have built products back there. I studied at IIT Bombay. And if you look at it, right, we are building a team which comes from one of the finest companies out there. So team from Daily Hunt, team from ByteDance, team from Nykaa, and so on. My other co-founders have deep experience in content building, in building community, and we come from very well tech backgrounds and product backgrounds. Talking quickly about our investors, we are proud to have these investors on board with us: Fusion, Sequoia, Bnext. We have previously raised $5.5 million in total. And now we are looking to raise around $10 million for financing our next 24 months. You can find the split in your screen. It's broadly to grow. It's broadly going to be invested in the team building, creator community building, and so on. And by 2021, we are targeting 50 million monthly active users. And the focus will be primarily on two parts: ensuring the trust and authenticity on the platform through high quality community and content, and be able to monetize that content by partnering with brands, giving them new reach and avenues and so on. So that was broadly about what we are doing at Trell. I'm happy to have your questions. Please feel free to reach out to me. Thank you so much. Thanks for listening to our journey. Namaste.
Be a GMIC community and commerce platform. 7 out of 10 moms living in Southeast Asia uses the Asian parent to help her have a healthy pregnancy and raise a healthy family. At a time like this, my 250 strong team is working day and night to ensure our moms have the best quality content and right products to help keep her families safe and sound. Since GMIC last year, the Asian parent has doubled our traffic and grown our revenue despite COVID. My colleague Vanessa, also on this video, will share more details about the company and our traction this last year.
大家好，我是来自 The Asian Parent， 我的名字叫 Vanessa， 然后我姓陈，中文名叫陈依兰，然后我现在当然就是在新加坡，以前呢我是在北京，也是都是在互联网公司，以前在微博跟陌陌都做过，然后去年我们也参加过 GMIC 的活动，在广州，然后今年就是在网上跟大家见面，然后也感谢我们的投资人复兴，邀请我们就是来参加这个活动。然后我在The Asian Parent 是东南亚第一大的母婴社区，等一下我会详细介绍。然后我本人呢，在这个公司，我是在 CEO Office， 然后是做一些新的项目，以及融资。那就话不多说，我就直接给大家 share screen。OK， 就像我刚才说的，我们是东南亚第一大的母婴社区，然后我们的主要的市场就是新加坡、印尼、马来西亚、菲律宾、泰国和越南。那么我们在这6个国家都是第一的这个母婴社区。但是我们也不仅限于在东南亚，然后我们现在也在非洲和这个斯里兰卡，包括巴基斯坦都有一些我们的业务。然后我们先简单看一下这个全国的母婴市场。东南亚每年出生的婴儿数量是大概1100多万，然后它的生育率呢是比较高的，是 2.3， 这个是比中国和美国都是要高，在现在来看，尤其是像比如说菲律宾啊、印尼啊这样的国家，生育率都是甚至到3或者3以上。当然新加坡的生育率还是很低的，大概就是应该是比中国还要低的。然后呢，但是就是说东南亚整体来讲是一个生育率比较高的一个市场，所以母婴的话，其实在这个市场还是一个比较好的一个行业。非洲呢，我们现在已经有进军到非洲去，然后我们的产品叫做 The African Parent， The African Parent。拉丁美洲和中东是我们本来以后也要就是考虑的市场，因为我们这个公司呢，在母婴行业里面，如果说把我们区别看来的话，一个是当然我们在东南亚是这个是我们的主市场，还有一个就是我们对于本地化做的是非常的熟练。因为其实在东南亚来讲，所有的这些国家它也有自己不同的这个宗教，包括自己不同的文化语言，这个用的货币都是不一样的，所以我们已经把这个市场都 搞得很清晰了之后呢，其实我们比如说印尼市场是一个穆斯林市场，那么我们就是进军中东的时候，其实在这方面我们也是有优势的，包括我们的内部的资料，所有的我们的内容然后跟不同的这个文化、宗教这所有的这些内容，跟我们内部的一些团队的实力，其实是允许我们在4天之内进军一个新市场的。然后这个我们也在几个市场里面测试过。那回到这个全各国的这个生育率和人口的问题呢，中国是每年出生的是这个1400多万的婴儿，美国呢其实是只在400万左右，所以其实美国还是很小，就这个出生婴儿的这个绝对值还是比较小的。那么中国跟美国这两个市场呢，都有一个问题，就是说他们这两个市场的母婴行业的这个竞争者是非常多的。我们自己其实就见过很多，大概7、8家中国的这种母婴的社区的做母婴社区、母婴电商所有的这些公司。美国就更不用说，当然也是很多，竞争10几家，对吧？就是非常的这个竞争力很强，很 crowded。那么东南亚的话，当然就是说我们是唯一的这样规模的这样一家，所以说我们的竞争没有那么的严峻。当然我们也是做好各种准备，包括内容方面来讲，我相信也没有其他的任何的一家母婴公司像我们一样有这么丰富不同种族、不同这个文化的这种内容。OK。那么东南亚的新生儿的数量呢是美国的3倍，并且将在3年内超过中国，就是东南亚新生儿这个数量总和。这个当然是归根于它的这个高的这个出生率。OK， 所以东南亚其实人口呢还是虽然说是比较少，但是它是一个非常年轻人口为主的一个地区。OK， 那现在我们其实就直接进入到我们的商业模式。我们的商业模式呢，以我们自己来总结，其实我们把它叫做 3C， 3个 C， 一个是 content， 也就是内容，还有一个就是，那么内容就是其实是我们的网站 website，另外一个 C， 第二个 C 是 community 社区，其实也就是我们把它归类于我们的 APP，我们的 app。还有一个就是第3个 C 就是 commerce， 也就是我们的电商，那么我们一会儿也会讲到。那现在我先给大家介绍第1个 C， 也就是我们的 content。The Asian Parent， 我们是通过可靠的内容和强大支持的社区来吸引妈妈们。那么这一部分的 C 里面，我们还主要介绍我们的内容，也就是我们的网站。我们的网站每个月现在已经达到了3200多万以上的这个月活，同比增长大概3倍左右，并且我们会在今年之内，我们的目标啦是达到4500万。然后呢，从18年到19年有一个很高的这样的一个增长，那么一个是我们靠不同的发展到其他的地区，另外一个是靠我们自己增强我们内部的主要的这个人员配备啊，包括写手啊，包括 editor 这种。那么我们现在在东南亚，其实你如果是作为一个怀孕的妈妈来讲，或者说是有一个婴儿0到6岁的孩子的妈妈来讲，她去这个搜索任何的一个关于育儿啊，关于孕期啊、怀孕的一些知识的话，其实80%都是会找到我们的，因为我们的这个内容呢，首先它的时效性很强，基本上当天就是新闻类的是当天都出。那么第二呢，我们是这个本地语言和 SEO 不好意思，SEO 都做得非常的到位，所以80%的妈妈其实都是能找到我们。那么所以我们在这个已经看起来好像饱和的这个情况下，怎么再继续增长呢？那么一个是靠发展其他的市场，另外一个就是说包括我们延长我们我们的读者或者说我们的这种月活用户的他这个 时长和这个生命周期。那么我们在之前来讲的话，我们的妈妈的生命周期一般是从怀孕开始一直到孩子6岁左右。那么现在我们会把它增长到8岁到10岁。那么第二呢，就是说我们这些怀2胎和这个和一些其他的一些和包括我们的其他的家人爸爸呀，这个爷爷奶奶属于这种家人，我们也把他邀请过来，用我们的内容把他们吸引过来。我们是通过这几个方法来增长我们的月活人数。OK， 那其实这个就很好理解，而且我们去年也讲过，而且我相信这个观众可能也有一些了解我们的，所以就不讲太多的关于我们第一部分内容方面。那第二部分的社区，也就是我们的 App， 是这个我们现在比较着重培养，也是这个比较这次我可能着重讲一些的吧。那么我们是全世界分数最高的育儿 App，是长期保持 4.8 的这个分数啊，不管是在主要是在安卓上啦，包括 iOS 也是。那么我们的 App 呢，其实在这个越南，我们在4个市场是第1的位置。那么在越南现在还是第2，因为我们其实在1年半之前才刚刚进入越南市场，所以但是我们当然的目标，尤其是在今年之内也是会达到第1的这样的一个位置。那么我们在这个400多万的下载的这样的一个量级呢，还达到这样的一个rating， 这样的一个分数，其实是比较不容易的，因为很多的人每天都给我们写很多的这种评论，但是大家的使用体验都还是不错的。那么我们也当然是希望这个鼓励我们的对我们有感兴趣的投资人朋友也去下载啊，去使用一下。虽然说是这个英文的但是相信还是能够看到一些一些该有的一些信息都在里面。OK， 那我们的 App 实际上是一个我们自己认为它是一个 Super App 式的一个产品，也是满足了这些母亲们妈妈们的一些全面的需求。我们当然也是研究了一下全球各地的这个母婴市场的这个 App， 那么我们其实该有的这个功能我们都有的。然后呢，同时我们又做到了非常这个本地化的一些内容，包括我们自己也有一些创新，比如说OK， 所以我们这个妈妈她在这个怀宝宝的时候，其实她是非常希望能够在一个各方面的了解自己，就是在培育的这个新生命。那么我们在做 baby size， 也就是这个宝宝的尺寸的时候呢，我们其实会用一些当地的一些水果来这个描述一下它大概长到多大啦什么的。然后像这个瓜拉是东南亚当地的一种水果，我们其实有的时候还是也会用到，比如说 durian 就是榴莲这种一些对本地化的妈妈们非常非常有这个有同感的这种东西。OK， 那我再稍微快一点因为大概其实是说10分钟左右。那么我们这个还有一个feature 功能，就比如说叫 baby kick counter，就是说就是也是用来检测宝宝的这个健康程度。OK， 那我们的数据当然是非常的这个精准跟全面。那么我们在这个对于数据的货币化我们还没有开始，其实是我们大概准备今年中可能偏中下旬才开始，但是我们已经开始非常努力的或者说非常全面的在收集这些用户的数据包括我们的这个注册用户他需要填的一些信息包括他的孩子的出生日期包括他的这个通过他的问的问题平台上一些互动，我们可以看到的一些家庭的决策力对于服务和产品的需求。那么这些都是其实我们市场上很多品牌非常非常需要的一些信息。那么我们其实上周也刚出了一个 COVID report， 是我们的这个数据团队收集的一些东南亚的一些家庭包括妈妈们在这个 疫情的这个影响下，那么对于各种不同的商品类的需求和不同的它的这个工作上面的问题包括一些家庭的一些体验，其实我们这个 report 上面都有，然后我们也是免费发给了很多我们的一些partners， 然后那么投资人如果有兴趣，其实也可以过来跟我要这样的，那么对，所以就是民意投票、粉丝经济产品测试，这些都是我们在这个我们的社区平台上可以找到的一些数据。OK， 那么第3个方面，也就是最后一个 C， 也就是我们的 commerce， 我们是有一个自己的自营品牌，也是我们自创的这个消费品牌，叫做 Mama's Choice， 已经在印尼上线了。我们是从有这个主意，也就是去年的大概这个时候开始，到产品上线一切开始有收入，其实也就是9个月的时间。所以是非常快的。那么我们一些国际的一些母婴大品牌，他们如果出一个新的产品线，一般是12到18个月。所以我们就是我们自己来测试的话呢，我们自己launch 我们自己的品牌是9个月。那么我们这个品牌也是说，连名字从 Mama's Choice 这个名字开始，就是我们收集所有的用户信息，做一些所有的调查，是完全 D2C Direct to Consumer， 直接从消费者那边开始研究，包括了解他们的需求，我们才知道他们比如说在印尼可能需要一些这种stretch mark cream， 就是一些妊娠纹的这种油吧，然后包括一些妈妈们用的牙膏然后一些那个按摩油，这种就是说市场上一些有需求的品类，然后我们都已经开始做了，然后也是今年会有大概40到60个新的 SKU， 然后我们下一个市场会是泰国，那么我们现在上线短短的几个月之内呢，我们的这个 Stretch Mark Cream 已经是印尼的这个品类的第1名。OK， 所以是这3个 C， 那我今天就给大家简单的介绍一下。我们的投资人就是这个已经就是非常的群星闪耀的一个投资团队那么复兴、京东，那么我们去年又加入了新的这个 Naver 跟 Mirai， 就是韩国的这个投资人，当然是大家很了解的，就是说这个 Line 的母公司，然后我们的 A 轮投资人是这个新加坡的这个 Vertex， 也是在东南亚非常好的，而且对我们非常支持的这个投资人。我们的 CEO Roshni 是这个就是媒体出来，然后他自己写博客，然后开始做的这个公司，然后之前他也是在 Life Journal 是做的这个 APAC Head。我们的这个商品类的 commerce 类的 CEO 呢是 Duri， 他之前是这个印尼的 Lazada 的co-CEO， 然后他也是之前在这个咨询公司做过大概5到8年这样子。那么我们的 SVP 呢是这个负责我们这个 finance 方面的，他是也有过20多年的经验，然后之前也是在 Rocket Internet Asia 是做这个CFO。我们的 CPO 呢是这个会带领我们做产品的方面的更新等等，然后他也是有非常丰富的经验，并且之前在 Amazon 跟雅虎都做过这样子。OK， 那今天就先给大家介绍到这里，然后希望大家积极的跟我们联系，我们也很愿意跟各方面的投资人跟这个可能的合作伙伴来交流，好吗？谢谢。
Hello, this is Pratham Khandelwal, co-founder and CEO of Headphone. Headphone has grown 5 times in the last 6 months, with 30% compounded monthly growth rate. On the other side, our monthly active creators has grown 4 times to 6.8K creators. Our content repository is unique, huge, and diverse. 60% of our overall content repository was created using Headphone app, and 70% of our overall content repository is only available on Headphone app. Since ours is a UGC plus PGC content platform, we have put a lot of efforts in building up our proprietary machine learning algorithm, the result of which is our average time spent per user per day is 44 minutes. And the percentage of audios that were played on our platform that leads to total completion is 44%, as par with the YouTube. We have a strong and lean team of just 7 members, including founders. I'm Pratham Khandelwal, the CEO of Headphone. I have worked at Facebook headquarters, Menlo Park, California for 3 to 4 years, and I spend most of my time in personalizing billions of ads serving to billions of users while optimizing for click-through rate and conversion rate. In the last 1 year, I led a team of 4 engineers to build the dynamic product ads and grown the revenue from $0 to $350 million annual run rate. My co-founder Yogesh Sharma, who is the CTO of the company, he has also worked at Facebook with me in California for 3 years. He spent all his time scaling, making the system efficient and robust for Facebook. He has saved, in the last 1 year, he has saved 50% CPU cost for Facebook, and that is very huge. After coming back to India, we have created India's first original audio series, Shikar. We have a team of strong engineers that come from premier colleges like IIT, NIT, IIIT. They have worked at big companies like Amazon or led teams in small to medium-sized startups. Saurabh Shrigaonkar, our content and community manager, who was the production head at 91.9 Indigo radio station. He has a rare skill combination of a great voiceover artist and sound and a great skills around sound engineering. He has created several original audio shows while working at Indigo station, also while working with us at Headphone. On the market side, the video in the last 1 decade, the video has grown with 18% CAGR to 378 million in 2019, and it's projected to grow to 488 million by 2022. In the recent years, music industry has been growing with 35% CAGR to 200 million in 2019, and is projected to grow 400 million by 2022. The podcast and audio shows market has seen a recent jump with 40% compounded annual growth rate, and is projected to grow to 131 million monthly active users by 2022. And this is where we are tapping into. There are a lot of time slots during our day where audio and video can coexist together. Like in the morning, if you're exercising, audio is the only mode in which you can consume the content. While commuting to work, it's your preference whether you would consume video or audio. But if you're driving, definitely you would be consuming audio. In the night also, when you come back to home, you're relaxing or before sleep, you can consume video or audio. If I have to summarize this table, audio is primarily being consumed when eyes are busy or tired. India is a country where people speak, where we have multiple languages. As per projection, by 2021, we would have internet users that would speak in vernacular language, and the percentage of which would be 73%. But on the content creation side, only 4% of the content creator speak in Indian languages. And that's where Headphone is filling the gap between the supply and the demand for vernacular content. Headphone is India's #1 social audio platform where storytellers, UGC creators like storytellers, poets, PUGC like radio jockeys, podcaster, or PGC like media company and radio station, they come onto our platform to create or to distribute the content in 15 major content categories across multiple languages. The major ones are stories, comedy, and religion. Since the content comes in diverse category with a varied quality in multiple languages, we have built the algorithm, ML algorithm, so that anyone, either it's a young guy, homemaker, or a professional guy working in the company, they can consume the content in the personalized way. The headphone is leading in terms of democratized creation and personalized consumption. Democratized creation, that is the base for us to scale the content repository, is continuous supply of content with diverse genres, languages, and categories. The personalized consumption, headphone is the only platform where you can easily discover the archival content, the content which has been posted long back but is still relevant. And it's also very important for the content creator to find the ideal set of listeners. These are some of the screenshots. Like, you can create a studio quality content directly from the app. You can build your profile. You can get your followers, your brand. You can build your brand. You can subscribe top channels like stories, comedies that come from the professional creators. And as per your listening history, your demographic, you can consume the personalized consumption. You can consume personalized content in the form of the audio feed. Our users are millennials that come from tier 2 cities. We have 27% female, and we are spread all around in the northern India. Our users, as you can see, they are shopkeepers, they are government servants, they're student, homemakers. These are some of the few major personas that we have on our platform. We are the highest rated audio app in the world with 4.8 rating from 36,000 ratings. The most common word which appears in our review is sleep, relax, YouTube for audio, and the car journeys. We have seen strong growth in terms of monthly active users, daily active users, monthly audio listens, and organic installs through shares with 30% compounded monthly growth rate. Our current monthly active users is 600K. Our daily active users is 85,000. Every month we got 7 million audio pieces being consumed in just a month. We get 65,000 just due to shares in a month, and our total organic installs is 40% of our total installs. On the content creator side also, we have seen 31% month-over-month growth of active content creators. At present, we get 15,000 content pieces organically being created per month. And we have a total content creator base of 34,000 with total content pieces repository of 125,000. We have a diverse content repositories with multiple genres like stories, comedies, talks, music, poetry. Most of the consumption is happening around stories and comedy. That is the entertainment section. 81% consumption happening in these categories. As you can see, there's a very interesting point. As you can see that we have a content in English and Hindi, but most of the consumption is only happening in Hindi, with 96% consumption is only in Hindi. So I can say that users prefer to listen to stories and comedy in vernacular language on our platform. And that is the growth which we are seeing on the vernacular side. On the monetization side, we have created few original audio shows to scale up, to experiment around the monetization. And we have seen that though the short format content, sticky content, people prefer to listen daily, but that is not monetizable. But the long format content that are episodic in nature, that are series in nature around the genres of dark thriller, adventurer, erotica, we have done a survey and people are willing to pay for this kind of content to for us to create more. I'll talk a little bit about two of our famous original audio series, Shikar and Stranger. They have around 5 to 6 episodes with total duration of content of 2.5 or 3 hours. We have seen that 60% of the listeners completed the whole audio series, that is all 6 episodes, and 90% of them did it on the first day. So that we can say that people love to listen this kind of content. There's a very high completion rate with binge listening, and that's where we see the strong monetization opportunity for the audio series. As per our model, financial business model, we take assumption that our paid users would be 0.5% of monthly active users with subscription price of $1.5, that is equivalent to 99 INR per month. And we project that in the 2021 we would be able to make around $1 million, that is $962,000 just with the subscription. And we can also experiment with the advertising model in addition to this. We are actively raising the fund. We are looking to raise $4 million, and our projection is to grow from 80,000 daily active users to 1.2 million daily active users in the next coming 12 months. The major fund utilization would be around infrastructure and the content, and we would, by the end of the 1 year, we would be able to start the monetization. Our current investors are Fosun RC Capital and Axel from the India. That's all from.
Hello， 大家好，我是 Man Games 公司的丁健，很荣幸这次能代表公司来。一直是一个专注于印尼游戏市场，是面向游戏玩家、发行商、运营商。现在一起来看一组2019年的全球收入增长表现。这里可以看到，印度尼西亚作为一个年龄层较低的新兴市场国家，排名在全球的第8位，亚洲地区呢仅次于越南和高于泰国1位。其中目前市场上的6款游戏就占据了印度尼西亚市场总收入的 25.5%， 而头部呢是2款吃鸡类和1款猫霸类，都是属于对抗较为激烈、观赏性较强，就比较适合互动和直播表现较好的产品。从旁边可以看到 Facebook Gaming 作为游戏的直播平台，在印度尼西亚过去1年中浏览量增加了22倍，市场份额呢在2019年底已经达到了 80% 以上。我们作为印度尼西亚最大的主播服务提供商，也是 Facebook Gaming 印度尼西亚唯一的独家合作伙伴，帮助 Facebook Gaming 在过去的1年中完成了整个市场增长。目前我们有2块主流业务，一个就是之前刚刚提到的游戏主播服务提供商，另外一块呢是游戏科技媒体网站。游戏主播这块我们主要是从主播的挖掘和管理、活动组织举办、品牌合作以及一个 AI 自动生成视频制作为核心。游戏科技媒体网站主要依托于我们的加达兰 Tikus 网站和 YouTube 视频频道，其中创作者也就主播价值赋能这块，我们有着一个专业的主播管理团队，可以帮助提高绩效，并且协助主播打造个人 IP 和举办活动。同时有一个基于云端的 AI 视频工具，可以在主播直播的过程中间生成和抓取主播的一些高能时刻，制作精彩视频，并且可以直接一键分发到各个平台，来帮助主播进行各个平台的一个引流。我们也开发了相关的数据分析管理工具，可以帮助主播基于数据上的一些反馈和表现来优化直播的内容。同样我们有着一个专业的一个销售团队，来创造更多的品牌合作机会，可以帮助主播来获得更多的收入。下面是我们旗下主播的一组用户画像，用户主要年龄层呢集中在18到24岁， 75% 为男性， 25% 为女性，主要集中在具有消费能力的大城市，也是在线娱乐消费的一个主要媒体群体。好，接下来我们可以通过一段视频来了解一下我们主播业务。
Facebook
Gaming adalah salah satu platform game live stream terbesar di dunia. Dengan 1,4 miliar pengguna di dunia dan 63 juta pengguna Facebook yang tersebar di Indonesia, Facebook Gaming menjadi pilihan terbesar bagi para kreator.
Dan juga menjadi pilihan yang tepat bagi brand untuk berkolaborasi.
Main Games Indonesia sebagai kreator service provider di Indonesia memiliki lebih dari 260 kreator terbaik yang mampu menghasilkan 700 juta view setiap bulannya. Main Games juga berhasil menyempurnakan komunitas Facebook Gaming di Indonesia untuk bertumbuh sangat pesat pada tahun 2019.
Dan menjadikan Indonesia sebagai negara paling berpotensi di Asia Tenggara untuk terus bergerak di bidang konten game.
Kami para kreator Facebook Gaming Indonesia juga memiliki audiens kaula muda yang sangat interaktif dan menjadi pendukung terbaik.
Dengan fanbase yang sudah terbangun di seluruh Indonesia,
mereka juga dapat membantu kami berkampanye dalam #NotToxicInGaming agar menciptakan lingkungan yang sehat bagi generasi mendatang. Jadi, kami menunggu kamu untuk menjadi bagian dari kami dalam meningkatkan potensi Indonesia
sebagai kontributor bisnis terbesar dalam industri.
这是一组来自2020年1月我们主播在 Facebook Gaming 的一个数据表现。这里可以看到直播时长超过了8000小时，覆盖人群超过了1.5亿，总观看人数呢超过了6000万。这是我们关于管理和了解主播数据表现的一个自主开发的平台。目前呢，除了可以查看旗下主播的表现之外呢，还可以查看全球多平台的市场份额、语种分布，以及各类型主播的一个数据表现，然后可以通过简单的一个页面进行了解一下。OK， 接下来是我们的加兰 Tikus 的相关业务。加兰 Tikus 是印度尼西亚的最大的游戏媒体网站，同时呢，也是印度尼西亚最大的 YouTube 频道。主要内容呢是为玩家提供游戏评测、攻略、新游推荐、下载、设备导购、科技新闻以及玩家论坛的，相当于是游戏的全产业的一个相关的一个一站式服务的网站。关于内容呢，目前我们所有的内容视频均由我们专业的创作者原创产出，也就是内容源头。除了自由写手以外呢，我们有着完善的一个商业化激励来鼓励原创作者来进行投稿。同时呢，我们有一个活跃的社区，是通过创作者和用户之间的一个互动来形成粘性。目前每个月有超过2000万的一个独立用户和超过400万的视频订阅。广告商呢可以轻松的通过加兰 Tikus 来寻找到喜欢游戏和数码的精准用户。目前这一页右边是加兰 Tikus 网站的数据表现，可以看到超过2500万的月独立用户和1亿的一个浏览数。还有一个是 YouTube 的一个视频频道，超过了2000个视频，1亿的分钟的观看时长，以及500万的频道观看数，还有400万的订阅。以上呢就是我们路演的全部内容，再次感谢大家的时间和感谢主办方给予的机会。任何对我们公司有兴趣的朋友呢，之后可以联系我。好，谢谢。
Hello everyone, this is Shalaz Nag. By way of introduction, I'm an ex-founder of PayU, which is the largest B2B payments company in the country. It is valued at $3 billion. Before that, I was a founding member of GoIbivo, which was sold to MakeMyTrip. So last 12 years has been in a startup journey with one founding member and another is one which I founded on PayU. Before we start off, let me tell you what DOT is. DOT provides a digital offline commerce ecosystem to merchants to sell directly, to sell anywhere. That what does it mean? It means that the merchant can sell 24/7 without waiting for his timing of 8 to 8. Second, he has no location boundaries now. He can sell directly to anywhere in the country, anywhere in the city. Third, he can collect payments that the merchants the marketplaces started charging higher commissions to these merchants. And what entails happens? They're losing their profitability. They're losing their revenues. Right? But there are enough platforms which are available like WhatsApp, Google, etc., which has not been leveraged by these offline merchants in their favor. What we provide. Dot provides a fully open platform which directly connects customer with merchants. So what we do is we'll leverage Google Maps, WhatsApp, Facebook, Instagram, delivery channels, smartphones, and combine and build an integrated solution where merchant can use this integrated solution and give it to their customer to start using. We are not building any app for them, but we are leveraging present ecosystem which is available in this country to help them to grow. Let me just talk about what is this platform means. Look, in any space of the merchant life, whether it's a renowned merchant, whether it's a small merchant, everybody needs three things. They need new merchants, new customers, they need retention of the present customers, and they need operational efficiency. When I'm talking about operational efficiency, what does it mean? It means that they need operations processes to be much better, and second, they need lending to grow their businesses. Now, what we come with, we help them in getting new customers. How do we help them in new customers? Google My Business is a free platform which is available in the country. It's not been leveraged by people, not by leveraged by merchants in this country. We'll help their catalog to be loaded in Google, Facebooks, or Instagrams of the world. So Google My Business can be leveraged for discovery. This discovery can be also be built by getting their catalog on the payments app, on the banks app, where people can start discovering their product. Right? We can help after discovery, we can help them discovering of their product within a store by getting their catalog on the phone for them through using a QR. And then we can enhance the transactions on the top of this. So we help merchants to get product there discovered whether in store or through a remote using Google, Facebook, Instagram, or QR, or using a smartphone. Okay. What in turn happens? So we are helping them getting a new customers. Secondly, now we know their data. We help them in getting their customers getting a personalized stuff from us. So we help them in getting a personalized stuff. We help them engagement. Now engagement, we're not providing them any app. How do we help them in engagement? WhatsApp is an open channel which is available in the country. How can we help them in using WhatsApp to build an engagement with its customers? Payments. Payment is changing in this country through UPI, through a payments apps. How do we help them in using the payments apps? And in turn, we help them in providing analytics, which help them building and grow their business further. What we are trying to say, we are helping them with this present ecosystem of Google, Facebook, WhatsApp, Instagram, in-store QR, smartphones, to build their whole ecosystem in the country. And how does this validation comes into our mind? In India, there are WhatsApp user base of 400 million, smartphone penetration of 500 million, digital commerce users are 300 million, and mobile payments is growing at a rapid pace of 500 million. So there are enough tailwinds to build this product in this country and give it to these merchants to grow their business. How does the market looks like? What is the size of the market? This market entails, if you consider only grocery as a segment, or a food service as a segment, or a healthcare as a segment, or a pharmacy as a segment, this market potential of 400 billion GMV, which entails can lead to us a $5 billion of revenue. This is our solution, which we've gone live recently in Haldiram, which is the renowned restaurant, QSR restaurant in this country, which is McDonald's of India. Have a look at it. what we did, as soon as you reach Haldiram, you have QR lying across the Haldiram, your QR lying across the table, and you don't require any app. You can use your smartphone camera, and camera can scan the QR. There are two types of phone in the world. One is Android phone and another iOS phone. All iOS phones camera can scan it, and all recent Android phone has a camera which scans the QR. If there's an beyond old phone of 2 years, they have Google Lens in all the Android phones through which they can scan the QR. When they scan the QR, the catalogs opens it up. Product is selected by the customers, and after the selection of the product, here is the payment. We also change the payment. We are invoking the payments apps instead of asking people to type the credit card. So we are changing this into to a payments app, and once the payment app people makes the payment, it comes back. When it comes back, it receives the receipts from Haldiram's WhatsApp, which is a verified WhatsApp of Haldiram. Receives the receipts from a Haldiram WhatsApp, and he gets his food update from WhatsApp. He can give a feedback on a WhatsApp, and until from tomorrow onwards, now onwards, he can start ordering through the WhatsApp. Isn't it interesting? There's no app required, and he still can do the transactions. Until what we did, there used to be huge queue on Haldiram before to start ordering it off. We got that queue, got it on the table. People are using their smartphone now. There was a menu which was lying in front of the queue to order it. Now we got this menu onto the phone, and this is real-time sync of the menu. People used to pay by cash. Now we got them digital payments by using any payments app. People used to they take their order, go to their take the receipts and go to the order and say that please give me this order. Now they get everything on WhatsApp. The physical receipt has been transformed to become a digital receipt. There was no feedback mechanism. Now people can get the feedback on the WhatsApp. So we have changed this whole landscape of this merchants into become a complete digital platform. What really happened of this MB? We gone live with the 3 Haldiram store in the month of February end, and 30% of the consumers start using this product. And the most important is 15% of the people started repeating repeat usage of this technology. That sounds interesting. And this entails helped us in getting a lot of accolades, both from customers and merchant team. This has been presented here. Request you to have a look at this one of the video and this Twitter feedbacks from the.
Was simply exceptional and very good and very convenient actually. And now that first time I have come here with this, next time I come I don't have to bother about anything. I just have to place my order. It is served on my table. A very brilliant idea.
It was nice. I like the idea of giving order online. This is actually very, very, very convenient for customers.
It was fantastic. I absolutely loved it. I mean, it's so seamless, and you don't have to stand there in the queue.
What does it mean? Now today we are sitting on 1,500 outlets. Deal has been closed, which is expected to go live in the coming months, which includes McDonald's, KFCs of the world, and bigger merchants of India. And now it's COVID. We are expected that demand to further up from this onwards. So where do we stand today? We have raised seed funding round in the month of February. We got Food QR launch in the February end. We have a successful MVP of Food QR with 30% volume captured, and we have a strong pipeline of 1,500 deal outlets closed. We are moving extremely fast. Now, this was our enterprise product. Now we are entering into SMB space. We have started doing a beta testing in the last 5 days, where customer can start ordering using WhatsApp to a nearby small mom and pop store through a WhatsApp, and it can be delivered to his home. So we are connecting WhatsApp of the consumer to the merchant now, where people can start ordering using WhatsApp to a mom and pop shop. What's really happening? The mom and pop shop is become digitizing now fully within 2 minutes. More to it in the coming days. Now, what is creating? It's creating a lot of competitive advantages for us. We have a lot of competitive advantages here. The consumer and consumer data belongs to the merchant in this case. In a consumer side of the story, the merchants feel jittery that their data is going away to the consumer apps. In this, the consumer belongs to them. Second, this is making merchants' brand stronger. As we explained to you, the problem statement, the merchant losing his brand loyalty. This is building his own brand loyalty. Third, it's cost effective. He's paying 20 to 25% on the marketplace as a commission. This is a per transaction fixed fee model for them. So, and the payment charges. That makes it very cost effective. And they're using an ecosystem. They're not building their own app where they need to attract the consumer. Consumers are already there on this ecosystem apps, which is WhatsApp and Google. So they're building, using these ecosystems. Last but not least, we have a deep integration with the merchant systems, which is very important. So we have competitive advantages over consumer apps. We have competitive advantages with any other player in the market, and we are first to go. We are first to market it. How we are going to go and get distribution going on? So there are 18 to 20 ERP providers in the restaurant segment. There are 18 to 20 ERP providers in the grocery segment. There are 18 to 20 providers in pharmacy segment. There are 18 to 20 providers in retail segment. We are integrating with all ERP system providers, and these ERP system providers will help us in getting the merchant acquisition going on in a partnership form. Second, for a bigger enterprise merchant, we have a direct sales team. We are using this direct sales team to start building our merchant portfolio. And the third, which is very interesting, which people doesn't leverage, is in India, banks has a biggest distribution channel in the country. We are partnering with the banks from a payments perspective, and Intel they're distributing our technology to these merchants. Fourth, we are going to use digital marketing tools for acquiring these small merchants also. Why we are here? We are raising $20 million, and our aim is to reach 1 million dot kiranas and 50 big in next 12 months. That is the aim which we are going want to reach, and that's where we want to raise $20 million. In terms of milestones, let me just tell you milestone. In February, we raised $8 million from Naspers, and this is beauty. Naspers was my investor in PayU also, and Naspers is continue to give me seed round in this business also. And then we have Fosu, and then we have Infosys. So we raised $8 million seed round in February 20, March to April 20. We launched Fluid QR, and with a great pipeline, and Dot Kirana beta testing started. From April 20 and onwards, from May onwards, we're going to start accelerating this growth. And COVID-19 is inflating this growth completely for us. And that's the fundamental reason we want to raise Series A very fast now to grow much more faster as compared to what we were thinking before. Now this is the vision. This is the vision that first thing which we want to do is in first 2 years we want to create a great distribution network and create a real value for the merchants in the market. And in that terms, we'll build a more relevant data for us. And from that data and distribution, which is data and high engagement with the merchant, we'll build financial services on the top of it in the next 2 to 4 years. And after 4 years, our objective, after having a huge database and distribution and our financial services going, we want to transition into a full-fledged banking. That's our full-fledged plan. Folks, don't miss this opportunity. Invest in Dot. This is the largest and the growing opportunity in the world. This is the most innovative product you must have seen in the world. Deep engagement along with data is the core proposition here. And not to say much, proven and experienced team. Thank you very much. You can contact me at shalaz@dotpay.in.
Thanks a lot for the sharing of the DOT。如果大家对于今天晚上的项目感兴趣的话呢，也欢迎添加我的微信，然后我也会在第一时间和大家联系，然后和帮大家去对接这些项目的创始人。如果大家对于印度市场感兴趣的话，也欢迎加我的微信，然后和我一起聊天，比如说去对接我们今天白天或者昨天的我们的所有的演讲嘉宾，以及我们项目路演的这个所有的相关信息。谢谢大家。
Hi. My name is Dave, and I'm founder of Credily. At Credily, we are building Ding Talk of India, conferencing, chat and collaboration platform, HR and payroll, and financial access to the employee. Where we offer Credily say complementary to their customers, to our partners' customers, and we eventually get access to the partners' customers at free of cost at scale. Once we acquire the SMEs, then eventually their employees, then we offer financial products to the employees like loans, credit card, insurance, and that's how we make our money. We are backed by Fosun. Fosun funded in our seed round, and here is our story. We are a well-rounded team of VC, marketeer, HR business partner, and technologist. I personally was on the other side of the table. I was a part of VC fund where I invested about $70 million into fintech, insurtech, HR tech, and B2B SaaS companies. My marketing guy, head of marketing Avinash, he has background from Zivame, Health Card, technologist, Health, Athena, and logistics, and then HR business partner from Deloitte and Unilever. India SME, it's a $1 trillion opportunity. If you see, you currently have 60 million SMEs, of which 12 million are already digitally savvy. And this is the tech penetration is increasing rapidly. So together they have about 140 million salaried employees. And there's an opportunity for $1 trillion lending, $280 billion insurance, $100 billion investments, and $25 billion business services and software. So this is an opportunity to create a platform for 140 million salaried employees across this 60 million SMEs. Pain points. Let's understand the pain points of these SMEs. They have a problem of HR management, payroll management, which are completely manual and error prone. They are still using Excel sheets for managing all the processes, and they don't have a solution for communication and collaboration platform. Their employees, they lack financial access and awareness. They have poor data and eventually fall prey to the predatory pricing. The product pains. It's not as if they don't have product exist in the market. There are many products in the market, but they are very complex. Because of that, they have very long product implementation cycle, which leads to very low adoption. Their pricing is very expensive, and SMEs cannot pay for a software. Essentially, they don't want to pay for any software at all. They want it for free. At the same time, this distribution pains, right? The SMEs are spread across nationwide, and existing players actually following a feet on the street model to acquire these SMEs, which is not scalable. They have scalability issues. Now, this essentially leaves us a huge blue ocean opportunity for Credily. All the other HRMS companies and this digital workplace solutions are having very, very minuscule market share. The biggest one has less than 0.5% market share. Essentially, it's very, very fragmented industry. So this essentially gives us an opportunity to solve these multiple pain points for HR, payroll, salary payout, communication, collaboration, and eventually the financial access to the employees. These are the problem. And essentially this platform has to be DIY and it should be free. So essentially the monetization strategy has to be different, where SMEs don't have to pay. And also at the same time, the acquisition channel has to be low cost. Enter Credily. So the Ding Talk of India. So we are India's first and only digital work platform that solves the pain points of SMEs for HR and payroll, communication, collaboration, and we are free. We are DIY, so it's easy to adopt. We do video conferencing. We have chat and collaboration platform. We have HR, payroll, remote work, and fintech access. We are essentially a right product at the right time. Because of COVID-19 situation, the adoption is quite high, very similar to what Ding Talk is experiencing in China. product. Very simple and easy to use product. Very seamless and accessible. There's very simple and easy layout where companies can completely do it themselves. They don't need any kind of training, as well as for employees can also do it completely themselves. This is complete DIY setup, mobile app, very simple to use. The fintech app where we offer financial products as well on the Creditly platform to employees. In comparison, if you see, we have this chat and collaboration platform very similar to Slack and DingTalk. We also have video conferencing, but at the same time, we also have other functions like HR management, salary payout, payroll management, fintech marketplace, and expense management, which are not available with other players actually. So this is kind of like complete suite of products we are offered to our customers. We are essentially a painkiller for SMEs. Right now, the companies are really struggling in the lockdown. Their work is totally disrupted, but we come handy. So we offer remote work support to them because our chat and collaboration platform with support like video conferencing and file sharing. We also solve the salary payout and compliance pain points by making it completely seamless, where they don't have to go to their branches at all. Their attendance and time off management. See, now for a kind of employee working very remotely, it's very difficult to manage. But because of attendance, they can record the attendance when they start to work, so that their managers know whether they are working or not working. So it's very easy to manage that. Traction. We are growing very rapidly. We already have about 22,000 companies signed up for our free plan, of which about 3,500 companies have onboarded with our 150,000 employees. We have a very high quality data on PAN card. So this is the KYC, like social security number and the PAN card. So we have 40,000 of those. Very high user engagement on the platform, and also the salary payout. We have already done a $5 million USD salary payout on Creditly platform, very seamlessly done. We already 25% of the market's largest player. This is the traction. So we have done salary payout of about $1 million last month, and user sessions are increasing rapidly on the platform. We follow our customer acquisition model is very interesting. You would really love to understand more about that. It's zero cost customer acquisition model. How it is like this. So Creditly is a utility application. Creditly actually because of that actually Creditly easily becomes a door opener for any B2B businesses, be it banks or B2B companies. Your sales team needs some kind of freebies to offer to the customers to make the sales close faster. So Creditly comes handy. Creditly becomes a kind of it bundles very readily for any B2B businesses. Like if you are opening a bank's account, if your sales team are opening a bank account, we can offer Creditly as a complimentary. If you are a QuickBooks or customers, if you are a QuickBooks sales team, you can offer Creditly as a complementary to your accounting software. It becomes very seamless, very seamless integration for the customer. And then we get distribution at scale for free. So we get all the access to all the customers of our partners, and we get all the signups at free of cost. So, and that's why we have very strong customer acquisition channels. We have like big partners like this, some of the large banks of India, some of the large B2B companies, some of the large tax filing platform in India. So together they have about 4 million customer base. We expect to get about 10% conversion, getting about 400,000 companies with average employees 25. So we expect to get about 10 million SME employees on the platform. So the tech integration is very deep. Because of that, we also very seamlessly fit on all the partners. We do co-marketing and promotions, and that's why there's a very high value proposition for our partners to push our product. We have 3,500 happy customers, the likes of Puma, Intello Labs, Delhi Ninja, and good startup like Axis Zoom Cicado. USP. So model is highly scalable. We have 0 feet on the street. So we follow a partnership-led distribution strategies, DIY, and we have a high quality of payroll and data, KYC data. So that's why it's very easy to monetize. We can do much better credit underwriting, and the reduction of source actually reduces the risk of employees. For example, the salaries is paid through our platform. So the employees, the EMIs the employees supposed to get the EMIs to us, the repayment, it gets deducted from the seller directly from Creditly platform. So that's why it reduces the credit risk for the lender, and employees can get a lower interest rate loan. Commerce. So this is the typical user profile. So this lady needs the kind of different products, and we have all the products available like salary advance, retail insurance, credit card, investments. and we're going to get about 1,000 rupees per user on this platform. These are the partnerships already done. Everything is already done, tied up. And we already done a successful pilot actually. We have done 200 insurance, 51 salary advance, and this is the kind of NPA 0 project. So we are raising about $4 million rupee, 4 million USD to acquire 5 million users with to touch about USD 30 million. This is the 5-year footprint, 1.8 million SMEs to about 120 million revenue. Fosun is our current investors. Thank you. I would like to learn more about questions. Thank you.
Hello everyone, hope you're doing well. I'm Vikas Kothari, founder and CEO of P10, the mobile first, personalized and social. They value the Amazon, Uber and Swiggy experience businesses, except banking, which continues to lose the digital battle. Their archaic business models are about personal advisors to rich clients. This model will not work for the millennials who prefer small transactions and want everything digital. Banks lack innovation. A simple check of their mobile app feels like the entire branch is sitting in it. The same product for the 60-year-old millionaire as for the young professional. Who are these digital natives and how big is the market? Over 150 million young professionals in junior white-collar jobs do not have a strong relationship with a bank. They go to multiple platforms to access financial service. The banks are also not interested to serve them. But this is a huge opportunity. They take over 75 billion in loans. They invest more than 45 billion in different savings and investment products. And they deposit over 500 billion in salaries. This is a gold mine. What are we doing about this problem with banks? And that is a large opportunity. P10 brings you banking like it should be. Mobile first, friendly, transparent, and trustworthy. Banking that's built for the digital natives. Now you can invest, borrow, and insure all in one place. Set budgets, keep track of your expenses, and save smart. Get loans and advances in a matter of minutes, even if you're new to credit. Invest in mutual funds, gold, and fixed deposits. All this supported by personalized recommendations. Smart banking is now only a single login away. And this is only the beginning. At P10, we're building the pipes of distribution. Our customers trust us for being transparent and for providing great customer experience. We have a personal finance manager that nudges our customers to invest and to save for their goals. We offer higher interest rates for balance in our account as we can park the money in overnight debt fund. We provide a free salary advance so that our customers can tide over their middle of the month fund crisis. Our personal loans are designed for new to credit customers, and that's how most young professionals start. We offer micro insurance and other financial products in partnership with existing financial service providers so that we can bring all financial products into one single platform. We are matching the right product with the right customer. How do we acquire our first customers? We have 3 different customer acquisition strategies. First, we offer our account as a salary bank account for employees and acquire them at their employers. We offer a free salary advance at the end of the month, which the employer positions as a benefit. In fact, our first 10,000 customers are from our existing customer base from the lending business. Second, we work with existing channels like HR software and skill management companies to help them monetize their customer base. We're already partners with Paybooks that has over 100,000 employees and have started monetizing their existing customer base. Third, we have kiosks at office clusters and embassy business parks. Over 1 million employees work at Embassy Properties. Embassy is also our angel investors, and we have exclusive rights in their properties to market financial services products. We have a super track record. We raised a seed of 900K in October 2018 from Tier 1 investors, including Fosun and angels from the Valley, to build a lending company. We understand financial services. We have lent over 10,000 loans. We built a proprietary underwriting engine and have built complete technology in-house. Banking APIs, eKYC, loan management systems, all built in-house. Our growth DNA is B2B2C. We onboarded 70 companies with 500,000 employees who became members at Perk Finance. This is the same base that's going to give us the first 10,000 customers at P10 Bank. How does the competitive landscape look like? The winner to provide a single financial hub for the digital natives will have deep understanding of the customer needs and offer all financial products. While traditional banks have all financial products, they don't get their customers. They've not been able to profile and recommend the right products to their customers. Some smaller niche fintech companies provide one product solution like personal loans or EMI checkout financing. These are transactions, and you can never build a relationship with a customer. We want to be the trusted financial platform for our customers. We understand them better, like we profile them, give them Amazon-like recommendations and servicing, and provide a single hub to access all their financial needs. Our customers can return our loans in the first 24 hours without any charges. This is the kind of trust that we are building with our customers. Our B2B2C acquisition strategy and existing member base is unmatched by any new entrant in the neobanking space. We are clearly ahead when it comes to product experience and customer centricity. Globally, neobanks have challenged traditional players and have acquired 5 to 10% of market share in just 4 years. There are 5 new neobank unicorns in the last 2 years. Clearly, we at P10 are building on the edge and will define how neobanking will play out in India. We are a team that can build the future of banking in India. I was a consumer internet VC before starting up, and as an engineer, worked with multinational companies in the US, Germany, and India. I did my MBA at Oxford, where I met my other co-founder, Yogesh. He's from IIT Kanpur. He worked with Lemon, Nomura, and managed 25,000 ATMs in India. Vivek, our head of technology, has over 15 years of experience and built the e-commerce stack at Nike in the US. Chinmay, our head of design, is from NID, the best design school in Asia. She has designed consumer internet product and specializes in service design. We are advised by the head of KPMG, India and Middle East, Richard Reiki. He helps us connect to the banks, boards, and various customers. We also value our other advisor, Madhu, who has built and scaled the largest fintech in India, CrazyBee. We are raising our Series A. Most of it will be spent on product and marketing. We want to reach 500,000 accounts by 2021. This business has great benefits of scale, and it has been proven that each customer can provide an annual revenue of $100. Thank you. If you have any questions or you want to get in touch with us, here are our contacts. Thank you again. Stay safe. Hello, everyone.
Hi everyone, hope everyone is safe and healthy. This is Aditya and I work with Rupeek as an associate director. Rupeek is an asset-backed lending platform. We currently operate in the gold loans category. What this means is all the loans disbursed through our platform are backed by gold. I'm taking this opportunity to introduce the company to everyone. I will talk about 3 parts in this session. The first is the borrower pyramid in India and how gold is a very important asset in the country. Second, I will take you through the large market opportunity we have and our business model. And finally, I will talk a little bit about the rapid growth which we have been witnessing over the last 1.5 years. So India's borrower pyramid can be characterized by 3 to 4 segments. On the top of the pyramid, you have the elite and the affluent segment, along with the aspirers. This segment composes of about 60 million plus households. They are very well served by the leading financial institutions such as banks and NBFCs. At the bottom of the pyramid, you have strugglers who are very close to poverty. This comprises about 80 million households, and they need a very different sort of business model, and they are mainly served through microfinance institutions. In between, there is a huge segment which we like to call next billion. This is composed of almost 120 million households, and they are characterized by self-employed people, small business owner, and so on. The reason they are underserved is even though they have regular revenues, cash flows, they have problems such as very poor documentation, lack of credit history, and so on, which makes them unfit customers for the larger financial institutions. In terms of data richness and availability, the top of the pyramid, which is your elite and affluent segment, there is enough data and credit history, while the other two segments do not have. What this means is credit underwriting using data for unsecured lending is still few years away in India. There is a lack of quality and there is a predilection towards using cash transactions. In our modeling exercises, we have found that when we build credit underwriting using the kind of data we have available in India, the NPA percentage can move up to almost 40%. Hence, we believe asset-backed lending is the way forward for now. I'd like to talk a little bit about gold. Gold is extremely important in the Indian way of life. Every major life event is associated with purchase of gold. As we can see, Indians purchase gold throughout the calendar year, be it festival, harvest, marriages, childbirth, any other major event is accompanied with gold. Even economically, Indians believe that gold is a great hedge against inflation and instability. As you can see on the slide, India actually imports the most amount of jewelry per GDP. In fact, it's almost 3 times its next closest country, which is China. Indians also like to invest in gold. It is the third largest category for investment, even ahead of other categories such as stocks and property. What this means is because of India's infatuation with gold, there is a huge market in gold loans. India has about $1 trillion worth of gold holdings, of which 82% is with retail. What this means is if we exclude government holdings, religious institution gold holdings, and so on, and only look at the gold which is with individuals and households, it is 820 billion worth. This translates to about $150 billion worth of annualized gold loan book, of which only 27% is organized. Rest 73% is still unorganized and can be easily tapped. Also, since every household has gold assets, there are almost 100 million plus potential borrowers for this category. What this means is gold loans is a huge opportunity, and all these loans are backed by the most secured, easily valued, fungible asset, gold. Would quickly take you through the different types of borrowers we have. The major segment of a borrower is the self-employed businessman. They generally take gold loans to tide over working capital gaps. We also have white-collared employees, etc., taking gold loans for consumption smoothing. Many of these use cases are medical emergency or educational fees for children. All customers require two characteristics. The loan should be availed with quick turnaround time, and they should have low interest rate. Currently, there are 3 players in the gold loan market. We have the banks, then we have NBFCs, and then we have the unorganized pawnbrokers. Banks, by the virtue of having access to the lowest cost of capital, offer the lowest interest rate, while NBFCs and pawnbrokers charge anywhere between 25 to 50% annualized interest rate. However, banks suffer from very poor dispersal TAT. So borrowers do not have access to low interest rate with quick turnaround times. Banks, even though are able to offer low interest rates, they face multiple challenges in servicing the market. They have very small distribution. They have only about, let's say, 20 branches in a city which are gold loan enabled compared to the extensively distributed NBFCs and pawnbrokers. Gold loan also requires specialist gold appraisal skill set, which bank employees do not have. They also lack product focus. Most of the schemes are poorly designed since gold loan forms a very small percentage of the portfolio, and their products do not really meet the needs of the gold loan borrower. This is where Rupeek comes in. Rupeek connects and enables lenders to access gold loan borrowers at scale. The benefit for lenders is that they are able to build a gold loan book in almost like a plug and play setup, where they have to integrate with us only upfront technologically and operationally. While borrowers get the benefit of lower interest rate, they get 25 to 40% lower interest rate with quick turnaround time and doorstep convenience. Throughout this loan life cycle, Rupee controls everything from pricing to process to ensure that customer experience is the best. Our operating model is fairly asset light and branchless. The model is very simple. The customer can apply for a gold loan through app, call, or website. Our executive visits the doorstep and appraises the gold, and the customer gets the loan amount instantly deposited into his bank account, while the gold is then deposited into the bank vault. What this means is we are highly scalable. We just need 15 to 20 days of setup time for a city with just $15,000 worth of upfront investment. We have positive unit economics. We have 10 times more operational efficiency and enjoy an 8% NIM. We also have an excellent 12 ratio for lifetime value by CAC. As I said before, we tie up with lenders. We have a closed marketplace with 3 banks, which include ICICI, Federal, and Karur Vysya. ICICI is the largest private sector bank. We are also in talks with all the top 4 to 5 private sector banks in the country. These are in fairly advanced stage, and we should be piloting fairly soon. We are also in touch with alternate sources of capital such as Mizoho and Mirai Asset. I'll quickly talk about the very rapid growth we've been witnessing. In the previous quarter, Rupeek disbursed $60 million plus loans through its platform. We have been doubling every quarter since last 15 to 18 months. Even though we've been growing at an exponential pace, we have maintained high customer satisfaction. We have an NPS score of 70 and a Google Play Store rating of 4.7. We also enjoy very strong repeat rates. 156% of the loan book, a new loan book, gets regenerated again in the next 24 months in terms of repeat transactions. In summary, I would like to say that we operate in a large market. It's a $150 billion large market. We've been growing very rapidly, doubling every quarter, and have disbursed $60 million plus in the previous quarter. We offer 25 to 40% lower interest rate, and we have very strong repeat rates with our customers. I hope this session was useful. With this, I would like to say thank you and hope you have a nice day.
Hello, good evening and welcome to GMIC. I am thankful to you that watched this program and to this presentation. This slide depicts that there is a supply side of financial services, digital services led ably by National Payment Corporation of India. On one side, the banks alongside giving their APIs and open banking architectures, the insurance companies rendering their products digitally, the government disbursing direct benefit transfers to so many people, and the billing, telecom, utility, all of those services available along with digitally sold travel services. Then the platform is in itself a large architecture of payment API integrators with the switches built for deployment in various banks through ASP model or through API engagement model, the system of record where the whole transactions are maintained, managed, and our own risk security enablement engines which are deployed at the center of the heart. On the right side of the platform are the 17,000 PIN codes, 16,722 to be precise. These postal codes where about 800,000 retailers are registered on our platform, of which 293,000 retailers are monthly active. These retailers are mom and pop stores, they are hardware shops, paint shops, they are mobile recharge and repair shops, travel ticket selling shops, fertilizer shops, various type of these shopkeepers, which is where the last mile customer has access to. We have made these shops as our banking and financial services and digital service rendering touch points. So the supply side, the platform in between, the demand unmet, which goes into the 17,000 PIN codes through the 293,000 active retailers, touching about 80 million customers across India. Doing lending products on the basis of terabytes of data, helping millions of customers to invest small 100 rupee a month in itself can make $200 million of micro savings on the platform. Then selling prepaid card so that people can buy digitally, buy online, being able to then do payments through UPI QR or through SMS payment. Now, the technology has a very little barrier between the high and the low, or rich and the poor. If you see, the high-end technology has been brought to the bottom of the pyramid through our platform and our retail partners. The highest of the technology is now accessible in assisted mode through digital medium to millions and millions of citizens in the country. There are 22 lending companies, NBFCs, microfinance companies who send their customers to our retail touch point to deposit their monthly EMI in cash. So it becomes a win-win in a way that one hand we get cash, on other hand we do cash out. The next slide shows the evolution of the platform with deep insights. With these deep insights that we, with our research-oriented approach, bring to the platform and simplify, amplify the financial and digital services for our friends, our people, our citizens. You have seen the growth. So each service on the law of large averages number, you will see each of the services that we bring on the platform, there will be different type of retailers in different areas. For example, a pharmaceutical medical shop will find it more easy to sell insurance. Moving on to the next slide, this demonstrates the reach and the dominant scale and size that Pay Nearby has been able to accomplish and deliver in its 4 years of operation. We believe that we are complementing banking infrastructure, which is about 105,000 bank branches plus ATMs that are available all around. We complement and are at a position in a place where the bank branches are not there exactly in the vicinity. Hence, the 293,000 banking agent outlets that we have deployed work very closely in partnership with their local bank branches. So the customers of any bank can come to any of the retailers any time of the day and either withdraw or deposit money, which is what the large part of the banking service is. The next slide shows our distribution that we have been able to deliver across the country. Give or take, overlapping, there is 93% of the Aadhaar biometric banking, which happens in rural India. You will see on the slide right side. The most of the remittances which the urban migrant population, which is a workforce in urban centers, industrial centers, 100% almost of that money is remitted by people from the urban centers. This slide shows our report card and the potential to grow and serve. The 33% is just 1% of the entire India's banking on ATM. This slide specifically highlights our partnership approach with the government and the ecosystem players. We work very closely with the Skilling Council of Retailers and work to train and test, certify the retailers in the country. We were conferred by Ministry of Electronics an award for financial inclusion in rural India, and likewise award by Access Assist, which is a platform, a forum to identify good work in financial inclusion. So what we have built is a platform, supply side of banking services, and a reach catered through our 300,000 active retail banking agents, serving 8 million customers, 80 million customers. At this stage now, if we take stock of all the technology that we have built with a partner bank, we intend to scale the country into Rebank India through our neo-banking approach, taking help of the FMCG companies, pharma companies, manufacturing companies, and the new age technology companies like the Googles and the Facebooks. We will be able to utilize the high-end digital to reach and rebank the entire country very differently, very meaningfully, where in an open banking architecture, in a neo-banking architecture, people will be able to easily access banking services, financial services, investment services, insurance services, lending services, and of course the payments and billing that is available with so very ease on the platform. At this stage, I would want to bring in my team, my very dear friend Subhash, who is 17 years of payment experience professional. Rajesh, who is acclaimed international wealth management service program manager earlier and has been brought in to now serve millions of customers with a sachet of banking services. Yashwant Lodha, who is the hustler and does technology and operation management at the high level. From here, the journey of Pay Nearby broadly brings out services that has been already deployed, and we want to keep scaling both in number of services and in the number of localities, shops, pin codes, markets, not only in India, beyond India into the Southeast Asia, where over the years, quarter on quarter, we have been responsibly making profits. In this round, we intend to raise $25 million and essentially to be orchestrated in deploying for technology. The second is the team expansion and the marketing, which is where we want to deploy $10 million over the next 2 years, 1.5 years time. We believe that all this while in our 4 years, we have shied away from marketing and visibility. We have kept heads down and kept going, acquiring market share quietly by a meaningful, sincere work on robust technology, automated platform. Now is the time where we want to bring in the layer of marketing and visibility so that people know that, yes, this is Pay Nearby. This is where Pay Nearby services are available. These are the Pay Nearby services, and this is how I am benefited. So welcome to the neo banking age and help facilitate, rebank the country, rebank the region meaningfully. There are projections for your consumption. So we very easily will be able to multiply the services the way we have been growing. And with the funds coming in, we will soon further scale. Digital era, as you know, has its own levers. If we are able to press the right levers at the right time, this is the time when India has the most digitization and best capabilities on mobility, digital connectivity, the Jan Dhan Aadhaar and mobility trilogy or trinity. And we are at the forefront with the highest volume transacting, largest reach providing, maximum services provisioning platform, Pay Nearby. Thank you and welcome once again.
Hello everyone, we are LifePal. LifePal is insurance India or Assurance from the US, Indonesia. We are an international team made of early stage employees of Lazada and Indonesia tech entrepreneurs. I was one of the first employees of Lazada, and I was assigned to build the Malaysia office back in the early days. Benny's is a well-known Indonesia tech entrepreneur with 2 previous exits. Reza was the CTO of Orami, the largest kids and baby commerce here in Indonesia that has raised $40 million. He then built CoverWatch, a fraud detection system to detect insurance claim with the help of AI. And Nico was an early stage employee of Lazada as well. He then remained a few years with Alibaba, where he was VP of product. Today, in insurance in Indonesia, only 2% of the people are protected. And this is one of the lowest percentage globally, despite the hyper growth on the recent years. This is due to historically expensive prices, especially for the middle class, limited choice of policy, brands, and coverage, and insurance agents that have created a mistrust due to the lack of training and assistance post-sales. Our solution is therefore educational content and policy reviews to guide the customer in choosing the right policy with transparency, promotional prices, and the larger selection of policy and brands in the market, so customer can actually choose what is right for them and not what an insurance agent is trying to push them. And lastly is convenience to use the policy and also to claim after sales. To give you some background about our market, it has a rare combination of strong macro trends and the fastest growing internet market globally. At macro level, Indonesia is the 4th largest country by population with 273 million people. And another interesting data point is that its average GDP per capita is arriving at $4,000. That is the inflection point for insurance, as we noticed in China and in India. Jakarta and our top tier city are actually above that. Jakarta is actually quite high, is $18,000. So it's the right timing for insurance to grow. On the right side, you see that actually Indonesia is also the fastest growing internet economy. Last year, in the past years, was a 49% CAG, the growth of the industry. In terms of insurance, Indonesia has a 30 billion market in premium. There was data from 2018. And on the right side, you see that is actually one of the fastest growing. The second one globally by P&C and the first one by life insurance. So in conclusion, we are positioned in a market that has a strong macro trends, one of the fastest growing internet markets, and one of the fastest growing insurance market. It's a great place to be, similarly for some people to China of 15, 20 years ago. So how does it work? So in our model, we generate online leads and we assign them to offline agents. If we see the customer journey, customer reach our platform due to content and reviews of high quality. They then register on the marketplace and then they can check out by themselves or with the help of an agent. So there are 2 pillars in our model. The first one is the traffic that is growing quite well since our launch 12 months ago. And this is due to quality content and also a strong interest in topics of financial protection and financial planning from a young raising middle class. They use digital content as one of the main source of information. On the right side, you see the agent productivity or the conversion rate that has been growing quite steadily thanks to technology improvement on the application used by the agent. So we are constantly improving the product the agent use to assist customer and sell faster and better. Therefore, traffic for free thanks to content, and agent productivity are the two engines of our growth. To summarize, Indonesia is one of the fastest growing internet and insurance market globally. We are among the first mover with no real competitor in such a big market. With our model, we own the customer across the life cycle and not the agent. And lastly, the team has already built a unicorn in this market, and now we are ready to do it again. Happy to connect if you want to know more about our growth and the Indonesia insurance market. Thanks.
Yeah, so let me talk about Kisht today. Kisht is India's fastest growing fintech. Over the last 3 years, we've acquired close to 2 million odd customers on back of two products that we largely do. The first one called as purchase financing, and the second one is personal loans. So if we look at the segment that we're talking about, or the segment that Kisht operates in, we are talking about customers who earn anywhere between 1,000 yuan to around 10,000 yuan. And the large part of the segment, which is around 82% of the customers, are less than 32 years of age. And the ticket size that we're talking about is 1,000 yuan to around 10,000 yuan. And if we talk about the ticket size of 1,000 to 10,000 yuan, the total opportunity size in India, if I put together the cash loans and the purchase financing, the two products that we finance, is around 143 odd billion. This 143 billion market is the one that Kisht is targeting currently and plans to target over the next 3 to 5 years. So talking about the segment that we operate in and what the company is all about. So for us, it is largely a B2B2C play, wherein we partner with merchants to acquire customers for the purchase financing product, which we call as the hook product. Now, once we acquire the customers for purchase financing, we nurture these customers further to improve customer retention and extract or engage the customers to get a better lifetime value. Now, all of this is augmented by a very strong focus on technology and analytics and a robust credit assessment process, which is extremely algorithm driven. And the endeavor is to minimize the NPAs by implementing practices both on analytics and tech, which are one of the leading practices in the market. While doing that, we keep the customer acquisition cost the lowest. So when you compare us with players in the industry, our CAC is the lowest because we acquire customers generally on back of the merchants whom we partner with. So there is a wide variety of offline and online partnerships that we've struck over the last 3 years, which becomes a way for acquiring customers. From a product landscape standpoint, there are two products that we do: purchase financing and personal loans. The average ticket size for purchase financing is between 1,000 yuan to 10,000, between 1,000 yuan to 3,000 yuan. And the purchase financing product is driven largely through a partnership, through partnerships with around 3,000 offline merchants and 3 to 4 big online merchants that we have acquired. On the personal loan side, the ticket size is slightly higher, though we start at 1,000 yuan, but the personal loan ticket size generally is around 3 to 4x of the purchase financing ticket size. And personal loan acquisition generally happens through two channels. One, it is done as a cross-sell on the existing customer pool that we've acquired of around 2 million odd customers. And secondly, we've recently started using our mobile app as a way to acquire customers, both from open market as well as to acquire customers on or to cross-sell loans to our existing customers. From a customer segment standpoint, I think that's a very, very important thing. From a customer segment standpoint, we are talking about a customer who is less than 32 years of age. So around 82% of our customers are less than 32 years of age. They are new to credit, so which basically means that they do not have access to formalized sources of credit. They are young and aspirational, more from their need standpoint, and they are currently not served by the large banking institutions. The key differentiator for us in the journey so far has been twofold. One, we've been able to keep our NPAs under control, so our NPA is less than 2%. Second, we broke even in the month of November 19, and the entire business is supported by a very robust unit economics. So again, the snapshot talks more about the customer profile in itself. So again, to re-emphasize, given the ticket size that we are talking about and the kind of segment that we are catering to, large part of our customers are new to credit. They earn anywhere between 1,000 to 10,000 yuan a month. They are largely, so it's a fair mix of salaried and self-employed, but I would say that they are not the Cat A or the best category salary. They are kind of people working in the kirana stores, working in small driver shops, outlets, etc. And it's, from a geographic distribution standpoint, it's a fair mix of the tier 1 cities which are contributing to the business and tier 2, tier 3 cities in India contributing to the business. In the last 3 years of our journey, we've managed to raise 32.5 million, and from all marquee investors, including Fosun, Vertex, Systema, and some Indian investors as well. The key milestone for us has been November 2019, where we broke even from a cash profit standpoint, and the profitability for the company continues to be healthy on month-on-month basis post November 2019. So I would say over the last 3 years, what we're talking about is that we've achieved an AUM of around 72 odd million. And this AUM is backed by an NPA number, which is extremely healthy, which is less than 2%, 1.6% to be precise. And the debt equity in the company is around, so it's supported by a good leverage also. The leverage is around 2:1. Backed by a number which I spoke about previously also, that we managed to break even in the month of November. And the profits from a company growth standpoint look very healthy. Now, for us, it's been a partnership-driven model, which is a strategy that we follow at our end to keep CAC under control. Now, which basically means that we use purchase financing as a hook product. We have partnered with around 2,000 offline merchants who are active currently for us, and there are additional 3 or 4 big marquee online partners that we have who currently help us generate business. So the offline distribution, which is the partner-led distribution, is contributing around 45 to 50% of the business. The remaining 50% is a top-up that is done on the customers who are acquired for purchase financing. From a customer acquisition cost standpoint, if you compare us vis-a-vis any of our peers, we've kept the customer acquisition cost the lowest. Our average customer acquisition cost has been around $2 to $3. And this customer acquisition cost has been lower because there are 2 big business drivers there are 2 big business drivers that help us drive a lower customer acquisition cost. One being that it's a partner-led model of acquiring customers. Second, the starting product, the 1,000 to 3,000 rupee loan, yuan loan, is used as a hook offering, basis which then we nurture those customers to drive larger cross-sell value. Talking about the credit algorithm, I think that is where the real verdict lies, because we've managed to keep the NPAs lower than 2%. It's a combination of 3-4 things that we've tried doing on the analytics side. The core analytical algorithm has a lot of machine learning and AI tools, which use combination of different data coming from 6 big sources primarily. The first one being the bureau. So we don't consume the bureau score directly, but we use some 1,000 odd variables coming from the credit bureaus, which are custom made to our population. Second, we've extracted a lot of value using natural language processing on the digital data that we get from the customer. So digital data is a combination of the data that is read using the customer SMSs, using the customer's call logs, contact list, etc. Just to give you an example, that the network of the customer, which basically means that how many customers is the customer linked to, which is established using call logs and contact list, is a very powerful variable in determining whether the customer is a good customer or a bad customer. The third variable, which we've done a lot of research, the third category of variables on which the model is based, cut across the geographical set of variables, which is both a combination of geographical and demographic variables, which is around the customer's age, income, the segment that he belongs to, etc. The fourth one is that we've tried a lot of social media variables also, though not so relevant from an underwriting standpoint. They are extremely helpful from a skip tracing standpoint when the customer hits the collections bucket. The next important thing which holds the entire credit algo are the variables which are more fraud-led. So there is a separate engine which is created for fraud monitoring in itself, which cuts across some 200 odd variables. And these fraud variables are a combination of location, the kind of merchant clusters that from where the business origination is happening. It's a combination of the time that the customer is applying. And there are some variables that are linked to what kind of Aadhaar card or the KYC document the customer is giving, what is the time of application that the customer has, how many times a particular device is being used for the application that the customer is making. So which is nothing but what we internally call as the device score. So we look at the device from which the application is happening very closely, and which also becomes like a fraud proxy. So a combination of these variables are the ones that lie at the heart of the credit algorithm, basis which we've managed to deliver the risk levels that we're talking about. And the algorithm is continuously going through monitoring and assessment from a backtesting and validation standpoint, which the team keeps working on. I think one more thing to mention about that, as a company, there are a lot of unconventional things that we've done, wherein tech and analytics becomes the core. There is a large pool which goes through straight through processing, and there is a very small pool which goes through manual underwriting, etc. But there is one thing that we've not compromised on. We have built a very strong collections infrastructure, which is very, very conventional, which follows all the things that are conventional in nature. Having said that, it is backed by a very robust technology and an analytics platform. So what I mean by that is that when you look at our collections cost, right, the collections cost would slightly be on the higher side, because that is one area that we don't want to compromise on, both across the telecalling and the field-led collections. But when you look at the intervention schedule, right from what message will be sent to the customer when the customer first time becomes delinquent, to when should the case be allocated to telecalling, when should the case be given to the agency, when should the legal action start on the customer, everything is governed through a robust analytical model, and it is completely tech defined. So it's no human that is defining that, oh, on this particular case, X needs to be done or Y needs to be done. It is completely automated and tech defined in terms of what the intervention schedule needs to be. And from a focus standpoint, the large part of our focus from a collections purview is getting the bucket X, or what we call as the bucket 0 resolutions, at the highest. So if there are like 100 customers who do not pay on the day of EMI, the endeavor is to get that number to 98, 99 by the end of the month, so that the maximum juice that one can extract from a field and a calling standpoint, we try to extract that maximum value at bucket zero stage itself. From a tech standpoint, the entire tech stack is a completely modular stack that cuts across acquisition, underwriting, and final decisioning. And the entire process for around 65% of the customers takes less than 60 seconds and does not have any manual intervention. So for 65% of the customers, there is zero manual intervention. For the remaining 45%, there is manual intervention, but that is also augmented through technology so that we are able to manage the load at manual underwriting. From a team standpoint, it's a team that comprises of both practitioners as well as people who come with a lot of industry experience, and that gets reflected in the profiles of both Ranveer and Krishnan, and the larger team that has been built, which cuts across the person who heads collections for us, the person who heads business for us, the person who heads risk, technology, and so on. Now, from an AUM standpoint, as we speak, the current AUM is we ended March at an AUM of around 60 million. The target is that we will take it to an AUM of 780 million by FY23. And from a PAT standpoint, like I was saying, that we broke even in the month of November 2019. And the PAT projection over the next 3 years is around 33 million by FY23. Thank you.
Hi everyone, thanks for taking the time to listen to the story about my co-founder team. My name is Pei Fu. I'm the CEO in India. Together with my co-founder Amit, we were at Zero VC and we were incubating fintech companies in India. And Amit is right now in charge of everything related to business development. Sunil, he's a veteran in fintech space in India with over 10 years experience, and he's our COO. He's in charge of underwriting, issuing, and collection. Bo, he used to work at Tencent and Amazon, and he's our CPO. Jack is our CTO and has built a few fintech companies in the past. So for those of you who are either startups in India or have invested in startups in India, you understand how difficult it is for the startups to apply for a corporate credit card from banks. Because banks, they require personal guarantee from the founders, and they ask for 110% fixed deposit as a login. And they require all kinds of documentations like board resolutions, shareholder structures, so on and so forth, and make the process of applying for a corporate credit card quite painful and very, very lengthy. We are very different from that. That's why we introduced corporate credit card, carbon corporate credit card. We don't ask for any security deposits. We don't ask for any personal guarantees from the founders. We have very flexible credit limits. And once you apply for the card, you'll be issued to you within 24 hours. So we don't charge the customers any kinds of interest fees or processing fees. We make money from the interchange. So whenever that card is swiped, the merchant pays about 2% of interchange, and we take a cut from there. So that's how we make money. Therefore, to our customers, it is entirely free and comes with no burdens whatsoever. We are already trusted by many well-known names in India, such as Cred, MyGate, Jumbotail, Jupiter, More Engage. So other than the card, we also provide very essential startup rewards, such as AWS credits. We get discounts from Make My Trip, discounts for different SaaS products like Freshworks, Zoom, Segment, and HubSpot, and many others. And we do this because we know these startups need these credits and want these discounts. But for them to talk to these merchants individually, it's very, very difficult. So we go and talk to the merchants on their behalf and say, we'll introduce these startups to you, but you have to provide them with a decent enough of a incentive to try out your product. And the merchants are more than happy to do that because they want access to these startups. So this is a great value add for the startups from our corporate credit card. So Carbon is more than just a card. The card naturally provides you with the credit to spend, but along with the card, we provide very many other value adds, such as the rewards, such as the travel desk, and the expense management solution. For example, once the company starts paying for expenses through our Carbon card, our expense management solution is able to track, organize, analyze, and put these expenses in different categories for the startups to know what they've spent money on. For instance, we can tell them how much they spent on SaaS last month versus this month. Or we can tell them of the employees that are using the Carbon card, who spent how much last month versus this month. So after viewing the ups and downs of the spending of the company, the founders and the management can have better visibility over how money is being spent in their company. And this is all entirely free because we're not charging anything from the customers. All of these value adds are things that we want to help the customers to be able to achieve more through our Carbon card. Next, let me explain to you the journey so far for Carbon. So we started building the company, building the product around June in 2019. And within just 4 months of time, we're able to launch a beta version in October. And pretty much every month after that, we've had some major breakthroughs in terms of product and also business development. So in December, we already were serving about 100 startups. And around the end of Jan or beginning of Feb, we were serving about 200 startups. Then in February this year, we launched the physical card, we launched the multi-card. Multi-card means that in one company, more than one person can use a card. So let's say you can have one card for your EA, you can have one card for your sales director, one card for a finance manager. That's a multi-card feature. And then in March, we launched the expense management solution. And that is that basically you are able to upload your various receipts to be attached to expenses, and will help you manage these expenses by telling you how much you're spending in various categories or various how much you spend on the various merchants. And very recently in this month, in April, we launched a smart finance dashboard. And basically that is a dashboard that will help the finance managers to see where the money's going and who's spending what. So currently for Series A, we're raising about $3 to $5 million, and it's mainly to keep on growing the team and build a world-class product. So coming to the elephant in the room, right? We are the product at the right place at the right time. COVID-19 has actually accelerated the adoption of Carbon corporate credit card in India. Why is that? Number one, because there's literally no competition right now in the market. The banks are unable to operate and issue cards during lockdown because of all the processes that they require. Number two, companies want longer runways and they need more credit to improve their cash flow. And that is exactly what we do. We give them credit to extend their runway. Number three, COVID-19 is driving rapid online adoption. What that means is that more and more people, more and more companies will be spending money and spending time online, which also means that there will be more online transactions. For instance, as people realize the importance of going online, people will spend more money on Facebook, on Google. And for all these transactions, they will need a corporate credit card to pay for. Number four, working from home has made paperless reimbursements and operation mandatory. So our solution is able to provide that paperless reimbursement solution, and also provide that visibility of expenses for the whole company. And right now, people are much more cost conscious, which also means that they will want to use our rewards as much as possible. So I started the presentation with an introduction to the co-founding team, and I'm ending it with the emphasis on our entire team. So after almost 20 years in the investment and startup world, I have not personally worked with any team stronger than the Carbon team. So I'm very proud of the Carbon team that we've built together, and we all believe in the vision of the company, which is to make life easier and allow startups to achieve more with the Carbon card. So the top priorities for any company, I believe, is always the people, who will build amazing products, and naturally profit will come. So the order of importance is people, then product, then profit. And that is how we've built our Carbon so far, is that we focus on building a strong team, which will then build a world-class product, and eventually the profit will come. So thank you very much for your time and attention. If you have any more questions or would like to learn more about Carbon, please feel free to reach out.